Yes. Hi guys, hope you all are doing well. And yes, now we are starting with the marathon of the costing straight away. We are not wasting any time. Assuming that your paper number 3 went well, also your whole group went well. Yes, now we'll start with the marathon. Sir, let keep some ground rules now. Sir, I haven't studied costing at all. I am just giving a attempt. Can I go through it? Yes, of course you can go through it. It will help you in your next attempt. Yes, sir. But I have studied, sir. I want to revise. Can I go through it? Yes. You can go through it. Okay. If at all you already studied, you want to revise it quickly, then this particular marathon for you. Whoever watching the costing for the first time, not for you guys. I recommend not to watch. But still, no, sir. I want to give a try. Then yes, you can give a try. Yes, good evening all. Good evening. Yes, if you get any doubt and all, please feel free to put it in the chat. However, I might not answer it immediately. Reason being, we will be doing some concepts in between. I can't stop. Correct? So just don't spam it, putting the same doubt again and again. I will solve it, but when I take that break, that time I will solve it. Hope all other things are good. Your preparation is great. So now we are straight away starting with the marathon, right? Last minute, last run. Hope this is going to help you guys in your examination. So for this marathon, not only this marathon, for your preparation, I have selected few questions from your ICI material and RTP. Okay, so that list is over here. Material costing, you got around 9 questions. In the employee cost and direct expense, you got around 12. Overhead absorption, you got around 9. ABC 5. Cost sheet around 4. Cost accounting system around 6. Unit and batch costing around 5. Job costing around 4. Process 7. Joint product and byproduct 5. Service costing 11. Standard costing 13 and marginal costing 20, budget 10. Overall, it is around 119 question. Sir, are you discussing only these question in the marathon? The answer is no. I have selected this for your preparation. You guys have to go through all these questions. Sir, you are not going through this. I am going to explain all the concepts. In between, I might be solving. I won't solve the question that I am clearing now itself. Already solved portion will be there. I will take you through that question. What are the special adjustment in that? That way, we are not sitting and solving it now because we are in the edge of the examination. Correct? Yes. So, sir, this marathon will be, how can, yes, sir, I'm giving May attempt. Will it be helpful for you? Yes, of course, it's going to help, be helpful. Right? Something is better than nothing. So instead of wasting your time, you can watch this. No worries. It will help you in your May examination. Good evening. Yes, Satyajit. How can I get this PDF? It will be added in the description. Link will be added in the description in the later part. So you can get it from there. Yes. Or you can, if at all I assume you guys have uninstalled your Instagram. Still, if at all you are using your Instagram, you can check it in the ArivuPro story. Okay. ArivuPro Instagram profile is there. No, in that story you can find the post. Yes. How long it will be? To be frank, I don't have idea. Of course, it won't go till tomorrow morning also. Don't worry. Also, it won't be getting ended by 10 or so. That also don't expect, because we are trying to cover as much as possible. So this will be like helpful for your last minute revision. What I am trying to do here is you don't have to revise it again. Tomorrow, once you get up, you just have to solve few questions. That's it. So I am planning to give the content that way. So I am, to be frank, I don't know how long it will go. Okay. If your all doubts are cleared, we can straight away jump. Sir, what are the chapters you are going to cover? Majority of the chapter, how the flow will be. First we are going to cover cost sheet, material cost, labor cost, overhead, ABC straight away, and cost accounting system. Later we'll jump into marginal cost, standard cost, then we'll come back to job batch. Okay, job batch, JP and BP. Then if time permits, we are going for the budgets. Okay, nothing is there in the budget. Budget is nothing but whatever they have given in the question that you have to apply. That's it. No. Okay, fine. So, and yes, this is clearly my analysis. Okay, my analysis. If at all this is risky also, I assume you guys have studied already. So just to revise these questions, we will go through compulsorily. Must do list, you can tell. Last minute revision, must do list. Yes, if at all majorly things, I mean, sometimes things will come out of the like out of expectation, outside the expectation. That time, please don't remember my mom, dad, sisters and all. Okay, because they have nothing to do with this. So great. So we can straight away start with our revision, right? First, few introduction concept. Let's see. Yes, sir, what do you mean by cost, sir? Cost is nothing but amount of expenditure incurred on a specific product or a activity. So while producing any product or while doing any activity or whatever cost you incur, whatever expenditure you incur, that thing we call it as cost. Okay, sir. Done. What do you mean by costing, sir? Costing is nothing but a process. Ing is there, no? Verb. Verb means process. So costing is a process, or it could be a technique also of what, sir? Of determining the cost. How much cost we have incurred. Determining that cost. That we call it as costing. What is cost accounting, sir? Accounting, keeping a records of cost. That we call it as cost accounting. Cost accountancy, applying the cost accounting principles, methods and techniques is known as cost accountancy. Okay, what are the objectives, sir? Why the cost accounting is required? Cost accounting is required to ascertain the cost of the product, right? Determine the selling price and profitability, because generally what we will do, traditional method, cost plus we will add profit to it to arrive at a selling price. Cost plus profit will arrive at a selling price. Sometimes, or in the modern way, we are not applying this traditional method. In modern way, it is called as target costing. In modern way, it is called as target costing. What is target costing, sir? Nothing, guys. First, we will ascertain how much will be our selling price. Sir, we don't ascertain cost. No. We will ascertain based on the competition, based on the competitor's price, based on the market, with lot of other research, we will ascertain how much my product selling price should be. Based on that, we will produce a product and we'll try to keep our cost well within this selling price. So that is your target cost. Okay, that is modern approach. But traditional approach was pretty simple. You will ascertain how much cost you have incurred, sir. Okay. After incurring a cost, then what you used to ascertain, sir? How much profit I want, add that profit to cost, you will arrive at a selling price. So costing will help in ascertaining the selling price as well as profitability. It helps in cost control and cost reduction. Sir, both are same, no, sir? The answer is of course no. It could be a MCQ question. Please concentrate. Cost control means, guys, you will keep one target. And you try to achieve that target. My cost should be within 100 rupees, sir. My cost could be within 100 rupees. Okay, sir. Great. It is within 100. If at all the cost is within 100, great. We are not going to do anything. That is your cost control. Try to keep cost within your standard cost, within the predetermined cost. Whereas cost reduction is, guys, first you will keep one target 100. Okay, your cost is well within 100. Next, straight away you will try to reduce it further without affecting the quality of the product. Let's say next target is 90, next target is 80. Like this, you will keep on reducing it. You will keep on reducing it. That is, you keep on once you achieve your target, you reschedule your target, or you change your target, right? You revise your target. So to achieve the maximum benefit. So that is your cost reduction. Whereas cost control has a end, but cost reduction don't have end. Basically, cost reduction will be applied by these Japanese companies, and that method is known as popularly Kaizen costing. Where Japanese companies, they are like, okay boss, if we reduce the cost very least amount, let's say only 1% is cost reduction, okay for us, but each and every year cost reduction should be there. Each and every period cost reduction should be there. It's not something like this time I achieved, okay, peace boss, go and sleep. No, not like that. Okay. And also it will assist the management in making decision. Lot of decision, how much profit, how much selling price, how much cost, like that. To take a lot of calls, cost accounting is going to help. Sir, what do you mean by cost object, sir? Cost object is nothing but, guys, anything for which separate measurement of cost is required. Any item, anything for which separate measurement of cost is required, we call it as cost object. Whereas cost unit means unit of product or service to which cost may be ascertained or expressed. For example, yours is a juice company. Yours is a juice production company. Now your cost unit will be liters. Yours is, let's say, rice selling company. Now yours will be kg will be the cost unit. That is unit of product or service for which cost may be ascertained. That is known as cost unit. If at all it is service, let's say you are a chartered accountant firm, then how much per audit, how much per income tax return. So that income tax return or per audit, number of audits, that will be your cost unit. What do you mean by cost driver, sir? Cost driver means, guys, activity which is responsible for cost incurrence. Any activity which is responsible for cost incurrence, we call it as what, sir? Cost driver. For example, electricity charges. The consumption of electricity, the consumption of power is a cost driver, because the more and more you consume, more and more the cost, the less and less you consume, less and less the cost. So I can tell in that scenario, units, power consumption is your cost driver. That is activity which is responsible for cost incurrence, that we call it as cost drivers. And sir, what are the different responsibility centers, sir? Responsibility centers are cost center, revenue center, profit center, investment center. See, what we will do is, whole organization, we will divide it into different centers, different responsibility center. Okay, each and every department will assign them different centers. So what do you mean by cost center, sir? Cost center is nothing but department or a center which is responsible for incurrence of cost. They are responsible for only one thing. What is that, sir? We would have given them target. Boss, our cost should be well within this. Our cost should be well within this. Okay, great. So you should keep your cost well within that. That is your cost center. They are responsible for just incurrence of cost. If at all they are making sure that, cost is well within the target, then they are in the safer side. No punishment, nothing. If at all they are making sure they are achieving the target of reduction in cost, then they might get certain incentives also, certain benefits also. Sir, what do you mean by revenue center, sir? Revenue center is nothing but, guys, department or a center which is responsible for a generation of revenue. They are least bothered about cost. Their work is pretty simple. Boss, get me a sales as much as possible. Get me a revenue as much as possible. That is your revenue center. Sir, profit center, sir. These kind of things are responsible for both cost center as well as revenue center. For example, if you take Reliance Industries Limited, if you take Jio as a part of it, now Jio is responsible for incurrence of cost also, generation of revenue also. Jio is responsible for incurrence of cost also, generation of revenue also. That we call it as profit center. Sir, what do you mean by investment center, sir? This is nothing but a department or a part of organization which is responsible for investment, and they should make sure we achieve that required return on investment. We'll be having the target. No, let's say on our investment we should get 15%. Now it is the duty of the investment center to invest that amount what we give in such a situation that, or such a place that we are going to achieve that 15%. Sir, I am not sure about standard costing, moderately prepared for ABC and cost accounting system. Other topics I am good. Can I score above 50? Yeah. Provided you write in your examination properly whatever you learned, you can. Because around already for almost 80 marks you have prepared, right? So if you write properly whatever you have learned, then you can score. Yes. Guys, how to classify the cost, sir, or what are the different classification of the cost? Cost could be classified on different basis. What are those, sir? On the basis of nature or element. On the basis of nature or element, cost could be classified as material cost, employee cost, other expense. Material cost, employee cost, other expense. What do you mean by material cost, sir? Material cost means cost incurred on the materials, basically physical object which you use in the organization, either for the production or production other than production. Whatever you use, physical object, everything we call it as a material, and cost incurred on such material we call it as a material cost. Employee cost or labor cost means whatever expenditure or whatever expenses you have incurred on employees to give them a benefit, whatever benefits you have given to them, cost of that will be called as employee cost or labor cost. Whereas other expenses are nothing but other than your material cost and employee cost. Other expenses are nothing but your other than your material cost and employee cost. All other expenses will be treated as other expenses. And guys, material cost could be divided into direct material, indirect material. Labor cost or employee cost could be divided into direct labor, indirect labor. Expenses, other expenses could be divided into direct expense, indirect expense. Sir, what do you mean by direct material, sir? Material cost which can be directly attributable to the final unit, final product, or directly identified in the final product, directly traced in the final product, that we call it as material cost. For example, if you take this mobile phone, camera, back panel, screen, all these things are there, no? Which cost of this can be directly ascertained. Those things we call it as direct material. Indirect material means cost of material which you cannot trace in the final product. Cost of material you cannot trace it in the final product. For example, while preparing this mobile phone, what is going to happen, sir? While preparing this mobile phone, you might have incurred some power expense like fuel, oil, lubricant, all these things. Now, can you trace how much is the power, how much is the fuel involved in it? Not power. How much is the fuel involved in it? Of course, no, sir. You cannot trace at all. Now, that thing we call it as a indirect material. Sir, labor could be divided as direct labor, indirect labor. Sir, what do you mean by direct labor, sir? Direct labor means cost of employee which can be traced in the final product. For example, to assemble this mobile phone, all this mobile phone to assemble one mobile, I am paying them 100 rupees. Now, in this mobile, how much is the labor for assembling? 100 rupees. Now, you can trace that cost in this. It is a direct labor. It is a direct labor, and indirect labor means employee cost which cannot be traced in the final product. For example, now this is the Google mobile. Now, how much is the salary of the Sundar Pichai involved in it? Sir, our Chennai guy, sir, huh? How much is the salary of Sundar Pichai involved in this? Can you trace it? Of course, no, we can't trace it because that is directly not attributable. So that thing we call it as indirect labor. Direct expense means other than direct material and direct labor, what and all you can trace in the final product, we call it as direct labor, which you cannot trace, that we call it as, direct expense. What you cannot trace, that we call it as a indirect expense. Try to understand, guys. For example, now this camera design is there, no? Given by me. What are you talking, sir? Yes, it's given by me. Now, oh my God, you are doing good for the country, sir. Yes, I am doing good for the country. So you are giving it for free, sir? Of course, no. I am not idiot to give it for free. No, I am not idiot to give it for free. Then, sir, Google people are paying me 1,000 rupees per mobile phone for using that design. Sir, what we call it as royalty. Can you trace the royalty in the mobile? The answer is yes. Then that will be direct expense. So these are the classification. And guys, remember one thing: direct material plus direct labor plus direct expense. Come on. Direct material plus direct labor plus direct expense. What we call it as, sir? We call it as a prime cost. Whereas indirect material, indirect labor, indirect expense. Indirect material, indirect labor, indirect expense, we call it as a overheads. Yes, sir. Done. Overheads again could be divided into many functions. Basically three. That is production overhead, we call it as, whatever happens inside the factory, all the indirect expenses, all the overheads, right? All the overheads inside the factory, we call it as production overhead. Also, we call it as manufacturing overhead. With love, we also call it as factory overhead also. Whereas whatever the indirect expenses you are incurring for the sake of administering the organization, that we call it as administration overhead. And whatever you incur for distribution and sales of the product, indirect expenses, indirect labor, indirect material, indirect expenses together, that we call it as selling and distribution overhead. Sir, by functions you can classify into 5. Production or manufacturing cost, that is whatever incurred for the production, administration, whatever incurred for the administration, selling and distribution, and research and development. Variability you can divide into fixed, variable, semi-variable. Fixed cost, variable cost, semi-variable cost. Sir, what do you mean by this, sir? Fixed cost means, guys, cost which won't vary with the output. You produce 100, you produce 1,000, it won't vary. Sir, if you produce lakh, try to understand, guys, fixed cost will be fixed only to some extent. Okay, there will be level, no? There will be level. Can you produce a product like your capacity of factory is 1,000? Can you produce 1 lakh in there? No. So of course you have to move to new factory. When you move to new factory, there you have to pay the rent, which means new additional rent, which means although rent won't vary along with the output, but still your rent got increased, no? So always remember, guys, fixed cost means not that, sir, if my dad do also fixed cost will be same, my grandfather when he was doing that time also fixed cost would be same. The answer is no, guys. Fixed cost also will vary provided it will be limited, like to some extent it will be fixed. Okay, that is your fixed cost. And always remember per unit fixed cost will vary. Total fixed cost won't vary, but per unit fixed cost will vary. Total fixed cost won't vary. Per unit fixed cost will vary. Whereas, guys, variable cost, variable cost is nothing but a cost which varies along with the output. The more and more you produce, the more and more the cost, the less and less you produce, the less and less the cost. So total variable cost will vary, but variable cost per unit won't vary. Remember these points. Total variable cost will vary along with the change in the output, but variable cost per unit won't vary. Also, sir, what do you mean by semi-variable, sir? Semi-variable means semi-fixed. Sir, what do you mean by semi-fixed, sir? Semi-fixed means semi-variable. Sir, we got hardly 1.5 days in that. Don't do this nonsense. Okay. So, semi-variable cost means, guys, semi-variable cost means cost which is not even fixed cost, at the same time it is not even variable cost, which means which has both the feature of fixed cost as well as variable cost. Semi-variable cost is something like which has feature of both fixed cost as well as variable cost, which means to some extent it is fixed. After that it varies. For example, you might have gone in auto, yes, metered auto, sir, to the extent of, let's say, 2 kilometers, to the extent of 2 kilometers, they will charge you, let's say, 40 rupees. Over and above 2 kilometers, for 100 meters, they will charge 2 rupees. Now, this is semi-variable because to some extent it was fixed, but it keeps on changing along with the output. Also, it has both the feature of fixed as well as variable. Sir, will there be any situations where we have to divide this? Yes. In the marginal costing and budgetary costing, we have to divide this. Sir, what do you mean by marginal? What do you mean by budgetary? If at all you are getting doubt like this, boss, difficult, right? I assume you know what is marginal costing, what is, you might have skipped that chapter. At least you should be knowing what that chapter is, or that chapter is there in your syllabus, because you are not listening costing for the first time, isn't it? Now, let's say how it is, sir. 1000 unit is there, 2000 unit is there. When you produce 1000 unit, cost is 1 lakh. When you produce 2000 unit, cost has become 150,000. Sir, it is fixed. The answer is no. Why? Fixed means for 1000 also it will be same, 2000 also it will be same. So it is not fixed because it is varying. Okay. Sir, is it variable? Check, no. What did I tell? Total variable cost will vary. Sir, it is varying, sir. Great. Variable cost per unit won't change. Let's see. In the first scenario, how much is variable cost per unit? 100. In the second scenario, it is 75. In the second scenario, it is 75. Now, so it is not variable. It is not fixed. Then what, sir? Mixture of both. So here what you can do, sir? You know one thing. Here 50,000 increase is happening. 50,000 increase is happening only and only because of your variable cost, because fixed cost will remain same. Sir, that 50,000 change is happening because 1000 units changes. So can I tell 50,000 is a variable cost for producing 1000 units? For producing 1 unit, question mark. So that is rupees 50. So variable cost per unit is rupees 50. Sir, what you did, sir? What you did just now, sir? 50,000 divided by 1000. What was 50,000? Change in cost. What was 1000? Change in output. Sir, change in cost divided by change in output gives us what? Variable cost per unit. So variable cost per unit I got as 50. Now I can apply that 50 over here or here. Can I apply it for that 1000 also? I can apply it for 2000 also. I will get an answer. How, sir? If I apply for 1000 1000 units to produce that. Variable cost is there, also fixed cost is there in this. Together it is how much, sir? 1 lakh. Variable cost we already know, 50 rupees per unit. For 1000 it is 50,000. So fixed cost will be how much, sir? Fixed cost also will be 50,000. Now fixed cost is sorted out. Fixed cost is sorted out. You got to know how much is fixed cost, how much is variable cost per unit. Then solve no. Semi-variable cost we divided into fixed and variable. This is how we can divide a semi-variable. Sir, least square method, graphical method, some nonsense things and all are there, sir. Skip. What are you talking, sir? Yes. Skip it. Yes. Okay. Now, sir, today is Sankranti wishes. Makara Sankranti, have fun. And yes, prepare for exams. Eat ellu bella and sit to study. Okay. So, controllability. On the basis of controllability, controllable cost is there, uncontrollable cost is there, which means the cost which you can control, that we call it as controllable cost. Cost which you cannot control, that we call it as uncontrollable cost. For example, variable cost you can control. If you produce, you will incur. If you don't produce, you won't. But when it comes to, let's say, some government license fees, you can't avoid. Government charges, you can't avoid. You have to pay for it. Those are uncontrollable. Normality basis, we call it as normal cost, abnormal cost. So treatment of normal cost, abnormal cost, please, that we are going to see in the later part. In the material costing only, I will explain you the treatment of normal, abnormal. Sir, but it should be explained in the process costing, no, sir. Ma life, maru. Yes. So I'm going to explain it in the material costing itself. With that, we have completed the first chapter. Of course, there are certain other costs as per the management. For the management purpose, discretion cost, all those things, go through it once. Okay, when time permits, go through it once. Now straight away we'll start with the cost sheet. I'm giving you guys 30 seconds. Process whatever happened just now. Come back. Yes, guys, we'll start now. We'll start. Sir, what do you mean by cost sheet, sir? Cost sheet is nothing but, guys, it's a statement. It's a statement, which means, try to understand. In costing, this is what the problem is, correct? Because there won't be any particular statement. Any fixed statement won't be there. What you have to do is you should know. See, very simple way of ascertaining or very simple way of deciding what format you want. First, what you should decide is what answer you want. Next, what you should ascertain is what data you want for that answer. So automatically you will get to know what format I want. You should know what answer you want. Then of course you should know how to arrive at that answer. Based on that, you should know what are the data's requirement, in what form it is required. Accordingly, you make a statement. In costing, everywhere, this is how it's going to be applicable, because in costing, there is no fixed format as such. In costing, there is no fixed format as such. Sir, my tax paper went bad, sir. My first group went bad, sir. Can I score a very good marks in second group? Try to understand, guys. You can. Whatever happened in the first group, just forget it. If at all went bad. If at all it went really good, I'm going to clear my group 1, sir. Group 2, my preparations are okay. I give a try now. What you have to lose? You have nothing to lose. Give a try. Come on. You can. Sir, me not clearing is pakka, sir. Second group. Give a try, no? Again, give a try. You never know. You never know how the paper will come. Later you should not regret telling that if at all I have studied that 1.5 days, I would have got an exemption. I got 55, 56. One more hour if I had sat and studied that extra one chapter, I would have got that 4 marks. Please don't regret. If at all you put your efforts, then things won't go in your side. That's fine, you have given your efforts. But trust me, without giving effort, if at all certain things comes where you would have tried or where you would have easily done that sum, then you will regret. That is going to be a worst thing. Trust me, personal experience. Yes. So please give your 100%. See, few students have this. Few students have this problem. Right? What problem, sir? We'll see. After cost sheet, we'll see. Okay. First, we'll complete the cost sheet and we'll proceed. So, cost sheet, it is a statement in which costs are recorded in a systematic manner which will help in ascertainment of cost for a period. Cost sheet is what, sir? It is a statement in which we are going to record our costs. We are going to record our costs in a systematic manner. And cost sheet could be, guys, cost sheet we are going to divide on this basis. What basis, sir? Cost sheet majorly divided into prime cost, gross works cost, factory cost, or also known as works cost, cost of production, cost of goods available for sale, cost of goods sold, cost of sales. Cost of sales. Sir, prime cost means what, sir? Prime cost we already learnt, that is direct material consumed. Guys, direct material consumed, not direct material purchased. Direct material consumed plus direct labors incurred, not paid, not accrual, come on. It is incurred, not paid. So direct material consumed, direct labor incurred, direct employee cost incurred, and direct expenses. Also your gross works cost is nothing but prime cost plus factory overhead. Guys, spoiler alert. What sir? Please go through January 25 RTP question for the special adjustment in the factory cost. What is it, sir? They have given a higher charges of machine and they have given in brackets indirect. So what, sir? We will treat it as factory overhead. What is there in that? Also guys, they in brackets they have given factory cost is, let's say, around 30-40% of prime cost. So factory overhead they have given it as 40% of prime cost. Additional to that they have given this, which means while arriving at a factory cost, you should consider this 40% as well as this higher charges. Okay. And guys, this is how you will get a gross works cost or a gross factory cost. Then sir, for this gross factory cost, when you adjust the opening WIP, closing WIP, we'll get a factory cost or a works cost. Sir, WIP means work in process. Work in process means it is not even a raw material, it is not even a fixed cost, somewhere in between. Sir, 50%? No. It could be in the 1% of process or 99% of process. 1% to 99 we call it as WIP, whereas 0% will be raw material, 100% will be finished goods. Keep that thing in mind. Few will be having this thing in your head. Work in process or work in progress means 50% completed. No. Anything in the process which is not even finished, which is not even raw material, everything will be called as work in process. Okay. Sir, that is getting completed this year. Yes. Which means we are incurring some cost this year. Yes. So you add that. Also closing work in process, that is not going to get completed this year, yes, next year, yes, so that add it to the next period's cost, not this cost. So add the opening WIP to the cost, reduce the closing WIP from the cost. Okay, for that when you add the admin overhead related to production, when you add the admin overhead related to production, also research and development, quality control, you will get a cost of production. Guys, try to understand, there will be scrap recovery. Okay, scrap recovery, realization from the scrap. It could be relating to two things, raw material as well as finished goods, defective, like that. Now whatever relating to raw material, whatever you recover, reduce it from the cost of raw material consumed, that is reduce it from the direct material cost. Whereas while production, if you incur any scrap and you realize any amount from that scrap, that you reduce it from the cost of production. That is, while arriving at the cost of production, please reduce it. Okay, now this is the cost incurred for units produced during the year, units completed during the period. Instead of year, I can tell it as period. Okay, it could be week, it could be month, it could be year, half year also, quarterly also. Yes, so that is your cost of production, and guys, to this cost of production, that is what we produce during the year. Also we would have produced something last period, yes sir, we would have produced that, we would have sold during the year, yes. So don't you think that opening stock of finished goods is also available for sale? So we treat it as cost of goods available for sale. So how to arrive at cost of goods available for sale, sir? Cost of goods available for sale is nothing but your cost of production plus opening stock of finished goods. Now, sir, everything is sold. No, certain closing stock of finished goods could be there. So out of the cost of goods available for sale, if you reduce your closing stock of finished goods, cost of closing stock of finished goods, you will arrive at cost of goods sold. For that, if you add general expenses, that is administration overhead relating to general expense, or selling and distribution overhead relating to selling and overhead will be general only. So this thing will be forming part of your cost of sales. Few adjustment will be there, and this time keep one thing in mind, guys. I will tell you one secret. Sir, secret? What secret? Remember this point. Quality control is not equal to pollution control. Quality control is not equal to pollution control. What do you mean by that, sir? Quality control, where it will come, sir? Cost of production. In question, if at all they tell pollution control, guys, please consider it as a factory overhead. Whereas your quality control will be treated as your cost of production. Yes, sir. Done. Also this research and development. In question, if they give just research and development or research and development related to production, then only it will be forming part of your cost of production. If they tell research and development relating to sales, then that will come under cost of sales, not under cost of production. Sir, what do you mean by direct material consumed, sir? Cost of direct material consumed during the period, that is opening stock of raw material plus cost of purchase minus closing stock of raw material. Opening stock of raw material plus other purchase cost minus closing stock of raw material. Now the question comes, sir, what do you mean by cost of purchase? Guys, try to understand, whatever the cost you incur to bring to bring inventory, whatever the cost you incur to bring inventory from the supplier's location, from the supplier's location till the organization, that is from the supplier point till go down, whatever cost you incurred, everything will be direct material cost. Everything will be direct material cost. I mean purchase cost, you can tell. Purchase cost will be like this, sir. What and all, sir? Price of material purchased. Price of material purchased. If any tax is there, add it. If it is not included, provided credit is not available. Sir, what do you mean by credit available? What do you mean by credit not available? Basically, whatever you paid, you can take it back. That is credit available. Whatever you paid, you can't take it back. That is credit not available. For more details, tax. I assume you have studied tax. So tax, wherever credit was available, sir, but it is already included in the price, then exclude it, because that is not your cost. I paid rupees 100 to Nirmala aunty. Tomorrow I will take it back as a credit. How it will, this 100 will become my cost? This is not Nirmala auntie's income also. This is not my cost also. This is not my cost also. So try to understand, whenever the credit is available, that can't be your cost. That can't be your cost. So if at all you treated it as cost, please reduce it from the cost. No, sir, I didn't treat it as a cost. Ignore. Just like how the Indian government ignores the middle class. Ignore. Yes. Also. No, sir, it is included. Exclude. Not included, sir. Ignore. Sir, credit is not available. Included. Let it be. Sir, credit is not available. Not included. Add it because it's your cost. Minus trade discount. Sir, not cash discount. No. Why? Because cash discount is not related to purchase. Cash discount is related to payment. Then what is related to purchase, sir? Only trade discount or a quantity discount is related to purchase. So consider that. And transportation, insurance and freight, etc. Transportation, insurance, freight, coolie, loading, unloading, whatever it is, from the supplier place till your go down, not over, after go down. After go down, if you take the stock insurance, treat it as factory overhead. If you take the stock insurance in go down, treat it as factory overhead. If at all you take the stock insurance for transit, treat it as a cost of purchase. Okay. Cost of container net. Sometimes what happens is, let's say we are getting something from Russia. We paid cost of container 1000 rupees per container. 1000 rupees per container. Now we can return it. When we return, the Russian supplier gives us 800 rupees back. Russian supplier gives us 800 rupees back. Now this 200 is there, no, 200. This will be the cost of container, because try to understand, how much I gave to Russian supplier? 1000. How much he gave back? 800. Or she gave back 800. Feminist. Sir, only he, always business example. So how much? 800. So 200 is what, sir? 200 is your actual cost. And if any scrap value realized from your raw material, we treat it as a reduction in the cost. Guys, admin overhead, special treatment, special items are there, concentrate. Few special items are there, concentrate. What are those special items, sir? Related to production. Consider it under cost of production. Whereas if it is general in nature, consider under cost of sales. Sir, how to ascertain whether it is related to production or no? They will give a hint. What hint, sir? Direct hint will be like this. Like which, sir? In brackets they will give related to production. Direct hint. Otherwise, sir, they will give so much percentage of factory cost, so much percentage of direct wages, like that. Then it is directly related to production. If they give so much percentage of sales, so much percentage of cost of sales, then it is treated as not related to production. Treat it as general. Okay. See, if any hint is given in the question, it is related to production, then only consider it as related to production. If the question is silent about it, then treat it as general in nature. Sir, scrap could be relating to raw material or a finished goods. Scrap means your spoilage, which you cannot correct at all. That is a difference between spoilage and defective. Defective means while producing you would have made some defectives, defective product could be there, but it can be corrected. It can be rectified by incurring certain additional cost, right? So that is your what to tell? That is your defective, where you can't rectify at all. That we call it as a scrap. So scrap of raw material, that amount whatever recovered shall be reduced from the cost of material consumed or cost of material purchased, and scrap of finished goods will be reduced while arriving at a cost of production. I already told about it. Packing cost, sir. Packing cost will be relating to primary or secondary. Primary or secondary. Let's say your shampoo bottle. Sir, this bottle is there. No, this is primary package. This is primary package. Why, sir? Because if at all this bottle is not there, how can you sell the shampoo? No, don't tell sachets. Then sachet will be primary package. Okay. Bottle example, bottle is primary. But, sir, costly bottle, sir. So, outside one more box we have given. Advertisement. In store, it should look bigger, no? So, we have gave one more outside box. Is it by any chance relevant for keeping the product? No, sir. Then treat it as secondary package. Your marketing cost means selling and distribution. So try to understand, if at all it is a primary package, treat it under a cost of production. If it is a secondary package, please consider it as cost of sales. Please consider it under cost of sales. And many students doubt, that is, sir, whether interest should be considered under cost sheet or no. Very simple. Whether interest is non-equity based or equity based. Just check in the question whether they have given based anything relating to that. They would have given interest is equity based, then not considered in cost sheet. If the question tells, sir, non-equity based, then treat it as a cost and show it under cost of sales. Show it under cost of sales. Sir, question is silent. Do your own assumption. Question is silent. Do your own assumption. There are two illustrations in the study material. Anyhow, I have marked it over here. I have marked those separate, special illustration in this thing. Please go through this while studying. These questions, so you have to do and go. These questions you have to do and go. You don't have option. Please don't go to exam without doing this. Please. Request to. Now, equity based, non-equity based, right? If it's a equity based, don't consider it in your cost sheet. If at all it is non-equity based, consider it under a cost sheet, under a cost of sales. Sir, this costing notes one Coimbatore something you have written, no sir. Do we get this notes? The answer is no. The answer is no. You won't get it. Okay. I hope you understand. It takes a lot of effort. Yes. And you know that whenever anything is given for free, that effort will be of waste, because you also don't use it, thinking that it's for free, no. Sir, but why, sir? Costing notes one Coimbatore, sir. Coimbatore. What is Coimbatore, sir? By the way, recently we opened a branch in Coimbatore. Okay. The notes prepared in Coimbatore is costing notes one Coimbatore. Sir, marketing, sir. Selling and distribution overhead. Selling and distribution overhead. Okay. Yes. There will be few pure financial items that you can ignore. That won't come under a cost sheet. Pure financial items won't come under a cost sheet. Bad debt. Sir, bad debt is pure financial item. Try to understand. For the chapter number 7, it is pure financial item. Chapter number 6, no. Chapter number 7, yes. Chapter number 6, no. What do you mean by that, sir? See, dividend and all is pure financial item. That has nothing to do with the cost. That has nothing to do with the cost. But bad debt is there, no. Bad debt. Guys, whenever they give a bad debt, treat it as selling and distribution overhead. treat it as selling and distribution overhead. Sir, why sir? Why sir? Can't we ignore it? You can ignore by giving a note, but always it is prioritized to give it as a selling and distribution. Why sir? How the bad debt and selling and distribution is related, sir? When the bad debt happens? Bad debt happens when you do the credit sale. When you do the credit sale, when you want more sale. When you want more sale, you will give it on credit, which means you are nothing but doing a marketing activity. So that is your selling and distribution overhead. Yes, sir. See the format, guys. See the format like this. It will be there. Go through this format and few illustrations, whatever I have marked. Please go through that. Sir, in the illustrations, what you marked? Sir, one more doubt is there. Sir. One more doubt is there. What is it? Sir, we always face difficulty in determining what is direct expense, what are factory overhead. We get confused. Sir, what are the things you should consider as a factory overhead? What are the things you should consider it as a direct expense? We get doubt in this, sir. What to do, sir? Don't worry, I got a code word for this. What is it, sir? Guys, there will be one nibba. I assume you know the meaning of nibbi. Yes, and I hope it's not you. Yes, sir, nibba is there, nibbi is there. So what, sir? Let them be there. They're happy, no? They're happy. But small fight happened. What, sir? Nibba didn't ask Nibbi whether she had food or no in the afternoon. So Nibba Nibbi started fighting. So they fought. After fighting, what Nibba Nibbi and all will do, sir? They will take out their DP. They will take out that DP. They will thrash their DP. And put the status, correct? So they will thrash their DP. That is direct expense. See, T, that is your technical assistance and know-how cost. H, higher charges of specific equipment, plant, machinery, etc. That is higher charges of specific equipment. Sir, higher charges of plant they have given. Treat it as direct expense. But if you see the January attempt RTP, they have given higher charges of machinery. Brackets they have given it as indirect. That way, there you treat it as factory overhead. Okay. R is what, sir? R is your royalty payment. A is what, sir? A is your amortization of molds pattern patents. S is what, sir? S is your specific software. Yes. D is what, sir? D is your design and drawings. D is your design or drawings. P is what, sir? P is power, fuel and steam. So we got how much? 8, sir. We got how much? 8. Actually, trash spelling is wrong, no? Yes, trash, TRASH DP and other related that I am excluding. Okay, so trash DP. T is what, sir? Technical and know-how. R is what, sir? Royalty. A is what, sir? Amortization of molds pattern patent to molds pattern patent, not tools. Why, sir? Tools amortization or depreciation will come under factory overhead. S is what, sir? Specific software. H is what, sir? Higher charges of specific equipment. D is what, sir? Your design and drawings. Not design drawing department salary, no. Designs or drawings. P is what, sir? P is your power and fuel. Okay. Sir, factory overhead. Factory overhead. Any keyword is there, sir? Yes. Whenever you were studying last month in December, you guys were preparing for your exam. 5 minutes once you used to check your Instagram. Do you remember? Yes. You used to scroll. Yes. And you used to get one reels in your Insta telling that what is the guy's name? What is the guy's name? Who is right? Who is what to tell? Who is friendly or something like that? Something it used to come. You remember? Two names used to come. Two names used to come. What are those, sir? One is Karthik. Oh, very popular name, sir. One is Adi. Aditya. Adi, correct? Ah, yes. Karthik. After your costing exam, Karthik sir is going to help. Okay. But Adi is what, sir? Adi is the keyword what we need now. That is, Adi is popular because Adi is having what, sir? DSLR. Adi is having what, sir? Adi is having DSLR. Adi DSLR. Okay. Adi is DSLR, where A stands for amortization of jigs, fixtures, tooling, etc. D stands for drawing and designing department cost, not drawing and designing cost. Drawing and designing department cost. I transfer insurance of plant and machinery, factory, stock, etc. Not stock in transit, stock. One more I stands for indirect employee cost, right? S stands for your stores and spares. One more D stands for your depreciation of the anything inside the factory, and S stands for your service department cost, what we reapportion, that one. L stands for lease rent of production asset, and R stands for repairs and maintenance of machinery, factory building, etc. This is how you are going to differentiate. What are the code words, sir? Trash DP, what Nibba Nibbi will do, and the most popular guy in the group, Adi, because he got a DSLR, so Adi is DSLR. And this question is very important, guys. Question number 3, illustration number 3. This is very important. And here one more cost you remember. Here one more cost you remember, that is higher charges, machinery, indirect in nature. Okay. Higher charges, machinery, indirect in nature. Also one more thing you remember. Pollution control cost. Pollution control cost. This thing will come in the factory overhead. Okay. Yeah. These questions and all, you can go through it on your own. Yes, go through these things. Very important, guys. Please don't ignore it. Don't ignore it. Okay. So this is your cost sheet, and this question is very important. Practice question number 3. Practice question number 3. That sales benefit what they are going to give. Okay. And there also point number B. That is every month giving a first prize of 50,000, second prize of 25,000, third prize of 10,000, and 3 consolation prize of 5,000. Here what we will do in urgency? What we do is, sir, 50,000 plus 25,000 plus 10,000 plus 5,000 will do. The answer is wrong. Why, sir? We are giving 3 consolation prize. That is 5,000 into 3. 15,000 you should consider. 15,000 you should consider. Okay. This is the thing. This is already tested in examination recently, but still better to go through it once again. And in LMR, I have given 4 questions. Illustration 3 is that Udyog Limited. Like complete question it is. And illustration 5 of RTP, that is nothing but your whatever the question we discussed now, that percentage based, that question. One more 2024 question. 2025 Jan question is that adjustment what I told now. That is they have given factory overhead as, let's say 40%. I don't know percentage, I forgot. Let's say 40% of your prime cost. Along with that, they gave one more question. That is one more point. that is higher charges of machinery in brackets indirect. So while arriving at factory cost, you should not consider only this 40%, you should also consider this also. Together form part of your this thing. May 24 what special adjustment we got, sir? Let's see. RTP, this is additional question bank. This is nothing but an additional question bank what I am using now. That page number 214 is 128 is this thing. This I have selected because this has this point, expense paid for pollution control and engineering maintenance. Okay, this is the reason why I selected this question, because this is new item in this. Whereas quality control check activity expense will go to cost of production, this will form part of your factory overhead. Packaging also they have given two: primary packaging, secondary packaging. Please go through this. Please go through these questions. Yes, with that we have completed revision of cost sheet. Hope you guys understood that. So I'm giving you guys 3 minutes. So after 3 minutes we are straight away starting with the next chapter, that is material cost. Next chapter, that is material cost. Sir, why should we reduce or add a interest or finance charges non-equity based? Try to understand. If at all it is a non-equity based, you have to add it as a cost, not reduce. Point number 1. Point number 2, because it's a loan, usually we take a loan relating to production. Non-equity based means it will be like capital and all, that is general in nature. Okay, that's the thing. Okay, now we are take a 3 minutes break. Straight away we will start with our material cost. Is it okay to leave budgeting chapter, sir? Better not to skip, no? Better not to skip. Johnson, I can't hear you. Yes, boss, I turned off the mic. I gave break. Will you cover all chapters, sir? The answer is might be, might not be, I'm not sure. But yeah, all chapter not possible. That I can tell. All chapter not possible, that I can tell. 3 minutes break. Yes, over, sir. 3 minutes break got over. We'll start with class now. We'll continue now. That is material cost. That is material cost. See, in material cost, I have identified 9 questions where I am feeling this time it will be question of EOQ decision making. Okay, I am feeling. Later, if it don't come, please don't remember my mom, dad, sisters and all. Okay, me, myself, feeling. Okay. Sir, what is the chapter which I can leave if shortage of time occurs? Madam, plan it accordingly. Plan it accordingly. Usually shortage of time won't happen. If at all that is the case, cost sheet, if at all you are already prepared, you watch this revision, I think that would be more than sufficient. And overheads you can skip, because that takes time, but nothing is there in that, to be frank. And ABC you can. These are the three things which you can ignore for the last minute revision, assuming you have revised it already once. No sir, I haven't revised anything. Then I don't know. No comments. Okay. Yes. Now we'll start with material cost. Now we'll start with material cost. Sir, what do you mean by material cost, sir? By the way, I was telling that what I'm expecting. I'm expecting question to be the EOQ based question, decision making question, where that percentage of discount, that point will come. Where the percentage of discount, what supplier should offer to counter offer, that question might come. That I have marked it already. That's already there in LMR. Majority of the RTP question I selected on that basis. One is that, and one more thing what I am expecting is calculation of the EOQ, where there will be this spoilage of the material. Shelf life of the material will be 10 days. That question is there, no? That might come. That also I have considered under this one. Considered under this one. Sir, what do you mean by material cost, sir? Any physical object which is used in the production is known as material. Sir, directly, sir, need not be direct. It could be indirect also. Okay, sir. Okay. So it could be direct or it could be indirect also. So any physical object what we use in the production is known as what, sir? Is known as material. Whatever cost you pay for getting that material, that we call it as a material cost. Material cost could be direct material cost as well as indirect material cost. Direct material cost as well as indirect material cost. Direct material cost means, sir, cost which can be traced in final product. Indirect material means cost which you cannot trace it in the final product. And what is material control, sir? What is material control? That is controlling the usage of material. That is how much to use, which to use, issue to production, procurement, that is from where to get, how much to get. All these are known as material control. Sir, why you want material control, sir? Because if you don't have the control over your production, if you don't have the control over your usage, there might be a shortage and all. Which will interrupt the production process. To make sure there will be no interruption in the production process, better to go for material control, and we can optimize the material cost, because very simple, if you know that someone is controlling you, then only you will be keeping you will take care of that, no? So better to avoid a material cost, you can keep control over it, and on time completion of order, so that order has come. There should not be something like this product is not there, so I have to place an order, then I have to get, then I have to satisfy the order. That should not happen, no? That's why we are going to keep it as it is. Better to keep a control. Reduction in wastage as well as adequate information will be there for the management to take a call. Elements, sir, what are the elements in material control, or what are the aspects will be there in the material control, sir? Purchasing of material, receiving of material, inspection of material, storage of material, issuing of material, maintaining inventory record, stock audit. All these things are the elements of your material control. That is what are the activities will be there in material control. That is your purchasing activity, your receiving activity, inspection of that, shortage if it's there any, addressing that, issuing of material to the production, maintaining the inventory records, and stock audit. Sir, how to treat the special items? This discount I already told you. Discount I already told you. Trade discount and quantity discount and cash discount. It could be three. Trade discount and quantity discount is given for purchasing in bulk. For purchasing in bulk. Just make sure you reduce it from your cost of material. Whereas cash discount is relating to payment, ignore it. Relating to payment, ignore it. Sir, subsidy, if the subsidy is relating to that purchase of that material, then reduce it. Reduce it. Sir, but somewhere we have learnt subsidy from government, reduce it. If it's subsidiary from the other way, don't reduce it. Alright, you learnt it in GST. Sir, yeah, correct. So here, sir, here that government, non-government and all is not there. Please don't mix up. Don't do the overthinking. The chapter done. So that GST it is. Here any subsidy it is. If at all relating to purchase, reduce it from the cost of purchase. Sir, taxes. Whether it is refund or credit available, the answer is yes. Then ignore. Don't consider it as cost. Sir, refund or credit is not available, then add it to the cost of purchase. Add it to the cost of purchase. Sir, penalty, demurrage, fine or detention. Penalty means what, sir? Any fine you have paid. Demurrage, sir. Let's say you bought goods through ship. Ship is there where, sir? Ship will be there in the sea, of course. Will it come till your shore? The answer is of course no. Ship won't come till your shore. It will be big. So you should take your boat and you should go near ship. Collect the goods and come back. Now, if at all you do delay in this, then they will charge you something called as demurrage charges. Okay, ignore it. Sir, other expenses like insurance, commission, brokerage, freight added to the cost of purchase. Sir, cost of container, if it's returnable, difference amount should be classified as a cost. Non-returnable, cost of container should be added to the cost. I told you already while doing a cost sheet. See, very simple. Once you load, from the place you load to your truck, from your supplier place, till it reaches your godown, whatever the normal expenses you incur, whatever the normal cost which is non-returnable in nature, everything you will consider it as a cost of material. After go down till it reaches factory, ignore, don't consider it as cost of material. That is a factory overhead. Okay. Now comes the king of adjustment. That is normal loss adjustment and abnormal loss adjustment. That is normal loss adjustment, abnormal loss adjustment. What do you mean by normal loss, sir? What do you mean by abnormal loss? What do you mean by normal loss? What do you mean by abnormal loss? Guys, loss incurred due to inherent nature of the product and which cannot be avoided. Loss which incurred due to inherent nature of the product and which you cannot avoid it at all. That thing we call it as a normal loss. Loss which you incurred, which you would have avoided. That is other than normal loss, we call it as abnormal loss. That is loss which is due to inherent nature which you cannot avoid, that we call it as a normal loss. Loss which you can avoid, that we call it as a abnormal loss. Sir, how to treat it, sir? Normal loss you cannot avoid, so you can add it to the cost of good units. You can add it to the cost of good units, whereas if at all it is abnormal, transfer it to the costing P&L. I mean debit your costing P&L. Debit it to your costing P&L. So sir, example, listen here. Purchase 10,000 liters of petrol at the cost of rupees 30 liters. Okay. Whereas 10% is considered as a normal loss. 10% we considered as what, sir? Normal loss. Whereas actual petrol received is just 8,600. Guys, if at all your mistake wasn't there, only the evaporation was the reason, that is 10%, then you must have got 9,000 liters. You must have got 9,000 liters. But actually you are getting just 8,600 liters. Moral of the story, 400 liters is abnormal. 400 liters is abnormal. So what would be the cost of petrol? Try to understand. Anyhow, let's say you are bringing it from Russia. In Russia, you already paid 10,000 into 30. In Russia, you already paid 10,000 into 30. That is 3 lakh rupees. Whereas your normal unit you should have received was 9,000. You should have received was 9,000. So abnormal, please try to understand here. Try to understand here. Don't consider the abnormal over here while ascertaining the cost. Take rupees 3 lakh divided by 9,000 because 9,000 is the good units. Per liter cost is rupees 33.33. Per liter cost is rupees 33.33. Now this 3 lakh how you are going to divide, sir? 3 lakh how you are going to divide? Actual units is how much? 8,600. So to the cost of material you will add 8,600 into 33.33, which will be 2,86,667. Whereas abnormal loss you will exclude from this. You will exclude from this. That is 400 units at 33.33, which is 13,333. You are going to charge it to costing P&L. You are going to charge it to costing P&L. Sir, what if the scrap recovery is there, sir? Scrap recovery is there. Try to understand. Goods purchased 1000 units at rupees 5,000. Sorry, glass. Okay, it's a glass. And we received 800 units of glass. 800 units of glass. Done, sir. Normal loss is 15%. That is, if at all you load 1000 units, you assume you will receive 850 units. You will assume 850 units, but actually you received only 800 units, which means 150 is normal loss, 50 is abnormal loss, which means cost should be apportioned to this 850, then it should be divided among 850. Then it would be divided among 850. However, from each and every glass, you are recovering 1,000 rupees for as a scrap. In that scenario, sir, in that scenario, try to understand. Total cost is 50 lakh. 850 units is good unit. Abnormal loss is 50. I explained already. Scrap recovery from the normal loss. Scrap recovery is 1,50,000. From the abnormal loss, 50,000. Correct? Sir, cost per unit, you will consider how much is your total cost, sir. 50 lakh was your total cost. Are you sure? Are you sure? No, sir. Why? 50 lakh is there, but from sale of scrap, we received 2 lakh rupees. We received 2 lakh rupees back, which means reduction from the cost. So, sir, should we reduce 2 lakh? The answer is no. Why? Whenever cost incurred, you have put the abnormal loss out of your house. Now the abnormal loss has become richer. So you are bringing it back to house. Is it possible? You should not do that. Correct? So please consider only and only normal loss recovery from the scrap. Normal loss recovery from the scrap for reduction in the cost. Sir, what is the reason, sir? Regular class I would have told. Now I don't have time to explain everything again. So please try to remember this. Okay. Cost per unit. Cost per unit is nothing but how to ascertain that total cost minus scrap recovery from the normal loss divided by good units. Divided by good units. That is total units minus normal loss. Done. Then sir, abnormal loss of 50 is 285 300, sir. This will be taken to costing P&L debit side because it's a loss, and credit side we will take recovery from the abnormal loss. So any scrap realization from the abnormal loss, sir, what you should do, sir, you should reduce it from the cost. You should not reduce it from the cost. Recovery from the abnormal loss, credit it to costing P&L. Recovery from the normal loss, reduce it from the total cost. Reduce it from the total cost. These are we are going to treat. So you can remember this formula. Cost per unit is equal to total cost minus normal loss scrap recovery divided by total units minus normal loss. Total units minus normal loss. Sir, how to treat the abnormal gain, sir? That I am going to explain in the process costing chapter. Sir, scrap realization, sir, I already explained you. If it's relating to normal loss unit, reduce it from the total cost. If it is relating to abnormal losses, credit it to costing P&L. Credit it to costing P&L. Guys, this illustration one, it feels like nothing is there in this, but still, I have added it as your last minute revision. I have added it as your last minute revision. Last minute revision. Why, sir? Why, sir? Because it might come in the examination. Important. It might come in the examination. Important. Okay. So here you should provision for deterioration is there. No, this point you should consider. Okay. That is what you will do, sir. Purchase you will do, from that normal breakage you will do. You will get how many units it is, and from that you reduce a provision for deterioration. Further provision for deterioration. Okay. Sir, here basic custom duty credit is not available. If the credit was available, then you wouldn't have reduced it from the, you wouldn't have added it as a cost. Okay. Railway freight, divide it in the physical unit ratio. See here, packaging charges, 5 non-returnable boxes added to the cost. GST 12%. They have given that ITC is available, so don't consider it as cost. Cash discount is there. Please don't consider it as a cost. Sir, who is storekeeper? Sir, storekeeper is the person who keeps the record of the stores. How many materials issued, where it is issued, how many material received, from where it is received. All these records who will keep? No, that person will be known as storekeeper. Storekeeper. What will be the work of storekeeper, sir? General control over stores, safe custody of material, maintaining the records, stock audits and reconciliation, issue of material, initiate purchase requisition, maintenance of adequate level of stock. All this will be the work of your storekeeper. Sir, how we can maintain the store record, sir? We can maintain it in 3 ways: bin cards, store control cards, stores ledger. Bin cards, store control cards, stores ledger. Bin card means what, sir? In front of each and every bin, that is storage, the place where it is stored. There we will keep how many materials of what is there inside. How many materials of what is there inside. That is bin card. Store control card means what, sir? Here just like bin only, but here it will be mentioned how much added to that stores, how much issued during the stores, how much is remaining in the stores, how much is added in that store, how much is added in the stores, how much is reduced from the stores, and how much is remaining. Please send this note, sir. It will be easier to track alongside you. Just take 1 second to upload the link of it, please. If you know, you know. That's what your name. Yeah, I know your name. So if you know, you know. Exactly. If you know, you know. I already told. I'm not going to share this notes. Extremely sorry. Okay. For certain reasons, I can't share these notes. I'm extremely sorry. If you want, wherever the theory portion is there, you can take a screenshot. Okay. And one more reason of not giving this is last moment. You should never change your revision material. Trust me, in finals I have done this mistake and I wasn't able to clear that particular attempt. So please try to understand. I'm not going to share this. Okay. It's my humble request, guys. Please don't ask for these notes. Whatever material you have used so far, please use that only. Don't change your material in the last moment. Yes. Sir, how to control inventory? Sir, inventory could be controlled in 4 ways. Inventory could be controlled in 4 ways. That is, 1, setting a quantitative levels. That is minimum stock level, reorder level, maximum level, all those things, EOQ, etc. On the basis of relative classification, that is your ABC, vital, essential, desirable, like that, and your ratio analysis, that is stock turnover ratio and all, and physical control. Just go down, check what and all is there. That way you can control. Okay. Sir, setting a standards or setting a quantity levels. There are few levels. I'm not going to explain now that how the formula is arrived. Try to understand the reorder stock level. Sir, what do you mean by reorder stock level? Sir, reorder stock level is the reorder stock level is the level, reorder stock level is the level at which we are going to place the order. That is, once my stock reaches that level, once my stock reaches that point, I have to place the order. I have to place the order. That level we call it as reorder level. That level we call it as reorder level. And what is the formula, sir? Maximum consumption into maximum reorder period. What do you mean by reorder period, sir? How many days it will take? How many days it will take from placing the order till getting the order? From placing the order till getting the order, how many days it will take? That we call it as reorder period, or that we call it as lead time. That we call it as reorder period, or that we call it as lead time. Okay. Now, or one more formula is there. Or one more formula is there. Sir, what is it, sir? Or one more formula is there. Sir, what is that, sir? Average consumption into average lead time or reorder period plus minimum stock level. So keep this thing in mind. Your reorder level and minimum stock level are related. So using reorder level, you can find out minimum stock level. Using minimum stock level, you can find out reorder level. In question, if they give like this, please keep this thing point in mind. So maximum consumption into maximum reorder period, or average consumption into average lead time plus minimum stock level will give you reorder stock level. Sir, what do you mean by minimum stock level, sir? At any point of time, minimum how much stock should be there with you always? Minimum how much stock should be there with you always? That is your minimum stock level. That is your minimum stock level. That is minimum quantity to be maintained all the time. Minimum quantity that to be maintained all the time. That is minimum stock level. We already wrote a formula here. If you remember, minimum stock level, I can tell it as reorder stock level minus this will give you minimum stock level. That is reorder level minus average consumption into average reorder period. Average consumption into average reorder period will give you minimum stock level. Will give you minimum stock level. Okay. Maximum stock level, that is how much maximum you can keep. How much maximum you can keep stock. Sir, what if I keep more than that? Then you might have to go for a new go down, which is bigger in size. Bigger in size means bigger in rent. Bigger in rent means bigger in insurance. Bigger in insurance means bigger in storage cost, which means your cost will increase. Your holding cost will increase. So to avoid that, maximum how much you can keep, that is your maximum stock level. That is your reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Average stock level is what, sir? Maximum stock level plus minimum stock level divided by 2. Maximum stock level plus minimum stock level divided by 2. Minimum stock level is nothing but, average stock level is one more formula is minimum stock level plus half of reorder quantity. Minimum stock level plus half of reorder quantity. That is your average stock level. That is your average stock level. Come on, come again. Which are the important formulas, sir? Which are the important formula? Reorder level. That is at what quantity you should place the order. Not how much, at what point of your go down stock you should place the order. Reorder level. That is maximum consumption into maximum reorder period, or average consumption into average reorder period plus minimum stock level. Now minimum stock level means what, sir? Minimum how much you should maintain. That is reorder level minus average consumption into average lead time. Sir, what do you mean by maximum consumption, sir? Maximum how much you can keep. That is reorder level plus reorder quantity minus minimum consumption into minimum lead time. And average stock level, you got two formulas. What are those two formulas, sir? Formula number 1, that is maximum stock level plus minimum stock level divided by 2. And one more formula is minimum stock level plus half of reorder quantity. Half of reorder quantity. Guys, Examination point, I will tell you one more thing. Examination point, I will tell one more thing. That is, minimum stock level sometimes whenever they give a question like this, always remember, safety stock level if they give, that itself will be the minimum stock level. Point number one to remember. If at all they give safety stock level, then that itself will be the minimum stock level. One more, very important point. Sometimes in question they will tell how much is minimum consumption, or they will tell how much is average consumption. I mean, on an average, how much is consumed. Sometimes they will tell how much is maximum consumption. All other two information will be absent and no other data will be available to calculate this. In that scenario, try to understand, guys, whatever the consumption they have given, that only we are going to treat it as minimum consumption, that only we are going to treat it as average consumption, that only we are going to treat it as maximum consumption. So try to understand this. In question, if they just give average consumption and nothing else is there relating to maximum consumption, minimum consumption, treat that only as minimum consumption, that only as maximum consumption. These 2 points you have to remember, examination point of view. Sir, danger level means what, sir? Below the minimum stock level, where if the stock level reaches that level, what we will do? Normal issue we will stop, only emergency issue we will make. Normal issue we will stop and only emergency issue we will make. That level we call it as a danger level. And what is the formula, sir? Formula will be average consumption into emergency reorder period. Average consumption into emergency reorder period, or sometimes we will classify it as minimum consumption into emergency reorder period. Minimum consumption into emergency reorder period. That we call it as danger level. What is the formula, sir? Average consumption into emergency reorder period or minimum consumption into emergency reorder period. Sir, what do you mean by reorder quantity, sir? Reorder quantity means, guys, quantity or size of an order at reorder level. When we reorder, how much to reorder? That itself will be your reorder quantity. How much to reorder? So that my cost will be minimal. That itself will be the reorder quantity. If the question they don't give how much is reorder quantity, then treat EOQ as a ROQ. Economic order quantity as reorder quantity. Sir, what do you mean by EOQ, sir? That I will explain now. That is, guys, try to understand. 2 costs you have to remember. One is ordering cost, that is cost associated with placing an order. Like you might be having some ordering cost. No, you might hire some person to place the orders, etc. You might incur some ordering cost. That will be treated as ordering cost. Carrying cost is once you buy, you have to hold it. No, you might incur an insurance, you might have bought a loan, which means you have to repay the interest, that money. If at all you didn't hold it, then you wouldn't have bought a loan and only, or you would have blocked your money, you would have invested it somewhere, like that. Certain cost will be there. No, insurance, all those cost, storage cost, all those cost will be treated as your holding cost. All those costs will be known as your holding cost. Always remember, holding cost will be calculated on the purchase price. Holding cost will be calculated on the purchase price after discount. Basically, net purchase price will be there. No, and that holding cost will be calculated if they give it as percentage. For example, they might tell it is 12% per annum, per unit. And unit cost is 100. Now the carrying cost will be rupees 12. Per unit per annum. To carry 1 unit for 1 year, it will be rupees 12. Okay, sir. Sir, what if the discount is there, sir? How many percent? 4%. Then it will be 96 into 12%. Try to understand. Here is where majority of the people will do the mistake in the EOQ decision making questions. When taking a carrying cost, for both the columns we take the same carrying cost. For both the columns we take same carrying cost, then the answer will go wrong. Try to remember always and always, when the supplier is giving you a discount, you should always and always calculate carrying cost per unit per annum on the discounted price, not on the EOQ price. Okay, sir. Now, sir, from that time you are telling EOQ, 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 EOQ. What the hell is EOQ, EOQ? EOQ means, guys, size of an order where ordering cost and carrying cost is minimum together. Together it's minimum, huh? Together it is minimum. Guys, try to understand. Together it is minimum. Not that both will be minimum. The answer is no. Both cannot be minimum. Together total cost will be minimum. That size of that order will be known as EOQ. Size of that order will be EOQ. And one more best feature of EOQ is, at EOQ your ordering cost and carrying cost will be same. Total ordering cost and carrying cost will be same. So the formula derivation is there here. Okay, formula derivation is there. At the end we will arrive at a formula, that is economic order quantity, that is the order size at which your ordering cost and carrying cost together will be minimum, is nothing but square root of 2AC divided by C. A means what, sir? Annual requirement. O means what, sir? Ordering cost per order. C means what, sir? Carrying cost per unit per annum. Carrying cost per unit per annum. So here is the thing. Sir, one doubt. See here guys, ordering cost they have given here, okay? Also here three things they have given. Together you should take 20% per annum. 20% per annum. Sometimes they will give per month. Then you should take the requirement also per month. Instead of annual requirement, you should take monthly requirement, or convert it into per annum. Okay. Sir, on doubt, sir. Yes. Sir. What and all will be the total cost, sir? Three things basically. Which is it? Purchase cost. That is how much you paid for the product. Ordering cost. How much you incur to place the order. Carrying cost. How much you will incur to carry the product. Ordering cost will be, purchase cost will be very simple. In annual, per annum, if at all you are taking 5,000 units, per unit if you pay 20 rupees, around 1 lakh will be the purchase cost. Ordering cost will be, boss, 5,000 orders you need per annum. Per order, how many units you are placing? 200. Which means, how many orders you should place? 5,000 divided by 200. That is 25 orders. 25 orders. Now, per order, how much, sir? Per order cost is 16 rupees. So, 25 into rupees 16. 25 into rupees 16, which will come to 400. Okay. Sir, carrying cost, sir. Many will do this. Half of 5,000 into carrying cost per unit per annum will be how much, sir? 20% of rupees 20. 20% of unit price rupees 20, which will come to rupees 4. We'll take rupees 4. The answer is wrong. No sir, we don't do like that. We do one more thing, sir. Yes, throughout the year you have to carry 5,000 units. So I'm carrying 5,000 units for 4 rupees, sir. Try to understand, guys. This 4 rupees is not per unit per annum. Sorry, this is not per unit. Rupees 4 is not per unit. It is per unit per annum, which means throughout the years it is. Throughout the year. Okay, sir. 5,000 I will take, sir. That though I don't check. Because I am carrying 5,000 units. Try to understand. You are not carrying 5,000 units throughout the year. Sir, which nashe, sir? What are you talking? 5,000 units I want. I'm carrying 5,000 units. Hey, try to understand. out of 5,000 units, out of 5,000 units, in a single order, you are placing order for only 200 units. You are placing order for only 200 units, which means any point of time, you never had 5,000 units. Max to max, you would have had 200 units. Max to max, you would have had 200 units, which means throughout the year, you are carrying max to max 200 units. Not 5,000 units. Okay, sir. Okay, then we'll take it as 200 into 4, sir. The answer is again wrong. Why? Today I bought, sir. Today I purchased 200 units. So I took 200. But tomorrow will that be 200? No, because I issued for the production. Day after tomorrow, again I issued something for production. Day after tomorrow, again I issued something for production. So beginning it will be 200. At last it will be 10, 9, 8 and all. So what I am going to do, I am going to take the average among or average between this. I am going to take the average of this. So what I will do, I will take half of 200 into rupees 4. So carrying cost per total carrying cost computation per year. How to calculate it, sir? Half of order size, not annual requirement, order size into carrying cost per unit per annum. Okay, go through all these questions, guys. Very important questions. Nothing much special things are there over here. And I know majority of the people would have skipped this question. Tire question. Would have skipped this question. Tire question. Yes, thinking that, sir, something mistake and all they have done, sir. What to do? What to do? Some nonsense mistakes and all they have done. So we have skipped. Guys, it is a special question. And I am expecting this question also might come in the examination tomorrow. So I am going to discuss this question. Yay, sir, much needed one. Yes, we are going to discuss this question. Okay, take a deep breath in, breathe out. We are going to discuss this question now. 30 seconds I am giving you. Take a deep breath in, deep breathe out. Yes, sir. What is it? Concentrate, everyone. Please don't skip this question. You have to practice once again after I explain this. Okay. Measure tyro tubes traits in 4-wheeler tires and tubes. Great. It stocks sufficient quantity of tires almost of every vehicle. Awesome. In a year 22-23, the reports of the sales manager revealed that measured tire tubes experienced a stock out of tires. What do you mean by stock out of tires, sir? Customer is asking for a tires. You guys don't have tires to give to customers. You guys don't have tires to give to customers. What is it, sir? 100 tires stock out. It happened 2 times. It happened 2 times. 80 tires stock out. It happened 5 times. 50 tires stock out. It happened 10 times. 20 tires stock out. It happened 20 times. 10 tires stock out. It happened 30 times. 0 tire stock out, which means how much ever you kept, that much was sufficient. That happened 33 times. That happened 33 times. So data is for with how many observations, sir? Data is with 2 plus 5, 7, 7 plus 10, 17, 17 plus 20, 37, 37 plus 30, 67, 67 plus 33, 100. So the observation given is of 100. Observation is given of 100 days. Okay. Mr. Tyro Tube's losses rupees 150 per unit due to stock out and spent rupees 50 to carry the inventory. Sir, so what? But how they will lose, sir, if the stock out happens? Guys, your customer will come and ask, yes. You will tell no, yeah. Do you think they will wait? Few will wait. But what few others will do? They will go to next one. They will go to next shop. They will buy it from the next shop. Now, what is there, sir? Once we lost, know what is there in that? Guys, for example, if I am the person who shops in Flipkart, I goes and buys something in Amazon. Next time automatically I am going to check it in the Amazon because thinking in Flipkart there is not there. Which means if at all your customer goes to other one, then the first priority of the customer will be the other vendor, not you. If at all you want to keep the stock, then 50 rupees you have to maintain at the inventory. So, sir, 100 stock out happened. No, sir, I will keep 100 stock also. 100 stock also. Then you have to pay 50 rupees per unit. Of course, stock out cost won't be there. I agree. Stock out cost won't be there. I agree. But 100 stock, if you maintain 50 rupees, you have to pay for each and every unit on an average. Yes, sir. So what, sir? Determine the optimum stock level. Sir, here one thing we didn't understand. I know what you didn't understand. Safety stock. Correct? Huh? Sir, here safety stock should we consider as only so much stock? See, assume this way. To solve this question, assume this way. You are usually keeping sufficient stock. Let's say 1000 units. You are usually keeping sufficient stock of how much, sir? 1000 units. 1000 units. Now, this safety stock is what you can keep over and above 1000, which means that 1000 won't get affected. 1000 won't get affected. If at all, for example, if you keep 100 units as a safety stock over and above 1000, if you keep 100 unit as a safety stock over and above 1000, if at all the order comes for 1000 only, order is satisfied. If at all order come for 10, order is satisfied. I mean 1010. If the order comes for 1020, satisfied. Order come for 1050, satisfied. Order come for 1080, satisfied. Order comes for 1100, satisfied. Which means there is no way that you are going to experience a stock out. If at all you keep 1100 as a stock. Sir, 1000 how you got? Assumed. So listen here. If at all you keep a safety stock as 100, stock out will be 0, and probability of that is also 0. No need. Probability itself is not required. So, but you are carrying 100 units extra. For how much, sir? 50 rupees per unit you are paying. Per unit on an average you are paying 50 rupees. So your total cost, carrying cost will be 5000. Total carrying cost will be 5000. Next, sir, what if, try to understand. 1000 units is already there. This is not even a question. 1000 units not even in the question. 1000 units is already there. Sir, what if I keep my safety stock as 80 units? What if I keep my safety stock as 80 units? Which means I'm going to keep the stock of 1080. I'm going to keep the stock of 1080. Okay, let's see. If at all you get 1000 orders as a stock requirement, it can be satisfied. If you get 1010, satisfied. 1020, satisfied. 1050, satisfied. 1080, satisfied. If at all you get a order for 1100, you can't satisfy. How many units you can't satisfy? 20 units you can't satisfy. 20 units you can't satisfy. What is the probability of stock out of 20 units? What is the probability of stock out of 20 units? See here. That stock out of 20 units happens when you kept 80 units as a stock level, and 1080 you kept as a stock, 1100 is what you received order for. Then what is the probability of 1100 coming, sir? It has happened only twice. 100 stock out happened only twice. That is 1100 orders we got only twice. So how much it is, sir? 0.02. So whenever there is a might happen thing, probability should be considered. So stock out 20 might happen. Probability of that is just 0.02. So what would be the cost, sir? What would be the cost, sir? How many units? 20 units. Per unit how much? 150. So 20 into rupees 150 into 0.02, which will come to rupees 60. Also, you are keeping 80 units as a stock. So 80 into rupees 50, which will come to 4000. Together, your total cost will be 4060 for keeping the safety stock of just 80, not 100. Okay. Next, sir. So probability, what you should consider, sir? Probability of 100 units you getting as an order you should consider, because up to 80 units if you get an order, stock out won't happen. Stock out happens when you keep 80 only and only when you receive 100 units. When you receive 100 units as a of order. Now 1000 units, sir. Okay, 1000 units you have kept. Now safety stock you kept 50. Safety stock you kept 50. So it has become 1050. Sir, if at all you get an order for 1000, can you satisfy? Yes. If at all you get an order for 1010, can you satisfy? Yes. If at all you get an order for 1020, can you satisfy? Yes. If at all you get an order for 1050, yes. If at all you get an order for 1080, can you? No. How many units you can't? 30 units. What is the probability of you getting order for 1080? What is the probability of you getting order for 1080? Sir, if at all you get an order for 1100, can you satisfy? The answer is no. How many units you can't satisfy, sir? 50 units you can't satisfy. What is the probability of you getting an order for 1000 units, sir? That is 2 times. So you should take probability as 0.05 and 0.02 for this. See here. 30 units you can't satisfy, 50 units you can't satisfy. What is the probability of that? Here is there. And what will be the cost, etc. Okay, together you can expected stock out cost is 375, but if you keep 50 extra, you will incur 2500 extra. Total cost will be 2875. The same way, sir, instead of 1000, can I keep, sorry, you have kept 1000, sir, instead of 50, can I keep 20 units, sir? Keep. Who is stopping you? Okay, sir. When I keep 20, sir, I got a 1000 order. Can I satisfy? Yes. I got a 1010 order. Can I satisfy? Yes. I got a 1020. Can I satisfy? Of course, yes. I got a order for 1050, sir. Can I satisfy? The answer is no. How many units you can't satisfy? 30 units you can't satisfy. And what is the probability of 1050 coming? 10%. 0.1. Sir, if I get a 1080, can I satisfy, sir? The answer is no. How many units you can't satisfy? 60 units you can't satisfy. What is the probability of you getting a 1080 orders? 0.05. And sir, if I get 1100, of course you can't satisfy 80 orders. And what is the probability of you getting a order for 1100? Probability is 0.02. Like this. For 10 also you should take like this. For 0 also you should take like this. Then you will get the cost. Whichever gives you minimal cost, that is at 20, then please consider it as a safety stock which you can maintain to make sure the cost is minimal. You don't even lose the safety stock. At the same time, I mean, you don't even lose the extra sales. At the same time, you don't even incur extra cost also. Sir, how many more questions in this question? I mean, this chapter, nothing much. Done. Other 2 more is there. That is EOQ related, that I will discuss in the RTP. That EOQ related, I will discuss in the RTP. What EOQ related, sir? That question, guys. Where discount counter offer? How much will be the counter offer from your supplier? Most expected question of the attempt. Okay. Sir, on the relative classification, how you can classify your assets, sir? ABC, that is, here the value and quantity will be considered. That is, we are going to divide the units or divide the product into inventory into three: A category, B category, C category. A category, B category, C category. What A category will talk, sir? A category will talk about was highest in value, lowest in quantity. Highest in value, lowest in quantity. That is, value wise it will be having 80% almost, sorry 70% almost, but quantity wise it will be around 10%. Sir, is it compulsory that 70 and 10 only? The answer is no. Somewhere there, some random numbers it is. If it comes as 12 and 78 is also fine. 12 and 75 also fine. 15 and 65 also fine. But generally speaking, ABC, A category is value wise 70, quantity wise 10. B category 20-20. Value wise also 20, quantity wise also 20. C category value wise 10%, but quantity wise hefty 70%. Sir, where you should keep more control in A category because they are less in numbers but more in value. Fast moving, slow moving, non moving, that is based on the inventory turnover. If anything is moving more quickly, more and more turnover is there, that we call it as fast moving. Slow moving and non moving. Non moving though it is not moving only. Slow moving is slowly it is moving, which should be controlled more, sir. Fast moving, because that's what the customers are asking for, or that's what the production team is asking for. Vital, essential and desirable, that is on the basis of importance of inventory. Vital means without this you can't produce at all, produce it at all. Essential means you can produce, but it is better to have that inventory with you. Desirable is if you have, use it. If you don't have, ignore it. If you have, use it. Don't have, ignore it. For example, if at all you are preparing a lemon rice, vital, that is lemon. Without lemon you can't prepare lemon rice. Essential, groundnuts. If you have groundnuts it will be great. If you don't have groundnut, that's fine. The quality won't come, but it's fine. What is desirable, sir? Your mustard seeds. Whether it's there or not there, no difference it makes. Right? No difference it makes. That is your desirable. High, medium and low. That is on the basis of price. High price inventory, low price inventory, medium price inventory. The control should be more on high price inventory. And inventory control using ratio analysis. That is inventory turnover ratio we will consider. That is nothing but how to arrive at inventory turnover ratio, sir. Cost of material consumed divided by average stock. Cost of material consumed divided by average stock. Average stock will be nothing but half of opening stock plus closing stock. If at all the information is not available for average, then consider opening or closing whatever they have given as a average stock. Whatever they have given it as a average stock. Sir, what you will get, sir? For example, see here in this we got to know 2.5 times is a inventory turnover. 2.5 times is a inventory turnover. What do you mean by that, sir? In that particular period, that is period of 365 days, you turned inventory, that is from fresh inventory to selling that completely. You done that twice, 2.5 times, which means the inventory coming into godown and going out of the godown, on an average, how many days it is taking? That is on an average inventory held for how many days? 365 divided by inventory turnover ratio. If at all they give, consider 360, then consider 360. Consider 360. Okay. Sir, physical control, what is there, sir? 2-bin system is there. What is 2-bin system, sir? Inventory will be maintained in 2 different bins. Inventory will be maintained in 2 different bins. Here what happens, sir? When you maintain it in 2 different bins, one bin, sir, we will be issuing always. So now this bin got empty. Now we will start issuing from this bin. But once we start issuing from this bin, here we will keep that reorder level. Once we get to know that we are issuing from the second bin, then we will place the order. So by the time the second bin will get over, first bin will get completed back. So this is two bin system. System of budgets will keep. That is, see boss, to produce this much of raw material you can use. To produce this much of raw material you can use. Why you are using more or why you are using less, like that. We'll prepare one budget and we'll give them standards. And inventory records and continuous stock verification. That is perpetual, where we will record a inventory telling that this is my input, this is my output. Now in books I have recorded how much is my input, how much is output. But actually it's there or no. For that we should keep on checking. So that is your continuous stock verification. That is, once in a while you go, you check your physical inventory whether your book is matching with that. Shortage is there, then you should adjust accordingly. Abnormal loss, it is abnormal loss. Don't add it to the cost of goods units. Take it out from the inventory cost, charge it to costing P&L. Okay. So valuation of inventory. Inventory could be divided into two: ordinarily interchangeable, ordinarily not interchangeable. If the ordinarily not interchangeable, for example, this watch is there, this mobile is there, this remote is there, this mouse is there. Now if I mix it, can't I find out what is mouse? You can, sir. What is remote? You can, sir. What is watch? You can, sir. Now this is ordinarily not interchangeable. You can't change it in the ordinary course of business. Then that is ordinarily not interchangeable. In that scenario, you can go for a specific identification method. In that scenario, you can go for specific price method. That is, when I issue watch as an inventory, how much I paid to watch, I will be having record. I am going to use that. If it is ordinarily interchangeable, which means, for example, let's say you got 10 identical things, chocolates, 10 chocolates you got. If I do like this, 10 chocolates you got at different prices. If I do like this, then which chocolate I got at what price? How do I know? I can't. Those are ordinarily interchangeable. In that scenario, how to identify the price of that, sir? We have four methods: FIFO, LIFO, weighted average, simple average. FIFO, LIFO, weighted average, simple average. These are the assumptions. These are not on actual basis. Try to understand. These are the assumptions. What assumptions are as per FIFO? What came first, went first. What came first, went first. Which means the issue will be done at the price at which we bought the inventory, which is there from the beginning. LIFO, sir, last in, first out. That is, what came recently went first. Simple average, sir, will take the average of prices and will apply. Weighted average will consider quantity as well as price. Together will take the average and that we will apply. Sir, which is ideal, sir? Ideal method is weighted average. Sir, which is better in the inflationary situation, sir? At the inflationary situation, your LIFO method is better. Sir, why, sir? Why LIFO is better, sir? LIFO is better, guys, because your closing stock will be valued at the price at which you bought first, where the price was less. So conservatism done. At the same time, issue is done at the recent prices. Which means recent price, the price is high, which means your cost consumed is more, which means profit is less. So it matches with the market. So in the inflationary situation, LIFO is better. Generally speaking, overall weighted average is better. Sir, if there is a shortage and all, what you should do, sir? Shortage is there, guys. You should check whether it's a normal shortage, abnormal shortage. In question, there is one question called rusting. Rusting they treat it as a normal shortage. So in examination, if the rusting comes, please treat it as a normal shortage. I told it's an exam oriented revision. Again, I am not going to explain why rusting and all you should treat as normal and all. Exam oriented means exam oriented. 2 days you have to remember that. So rusting is there, then treat it as normal. Normal means what, sir? Guys, just quantity should get reduced. Correct? Cost should remain same. Quantity should get reduced. So in the issue column, please take out. In the issue column, please take out only and only units. Please take out only and only units in the issue column. Don't take out cost also. Don't take out cost also because it is normal only. Issue should be, units should be taken out. Sir, abnormal means take out the cost as well as unit from there. That is, in issue column, take both cost as well as relevant price. Take it out and charge it to costing P&L. Charge it to costing P&L. That one thing. And one more thing. Majority of the students will get confused here. What is it, sir? Sir, return of material from department to stores. What price you should consider, sir? What price you should consider and how to treat it? Let's say known price you know, at what price you sent it to that particular department, then bring it back at that price and add it to that particular inventory. Option number 2, price is known, bring it at that price but treat it as a fresh recent purchase. Treat it as a recent receipt. So this will be the last line. Otherwise, it will be added to that particular respective line of that particular price. 2 option. Sir, prices are unknown. In that scenario, bring it at a recent issue price. Not rest in peace, recent issue price. Bring it back at a recent issue price. Okay, sir, we'll bring it at recent issue price, but where to add, sir? In the balance column. Add it to the respective price or treat it as a latest stock. Sir, in examination, what to do, sir? Better to add it to the respective price. Okay, you can treat this way. This is how you can treat. The material relating to this. That is written from the department. If at all we return to our vendor, then the particular price, because vendor is not going to ask which method you are followed and all. Vendor will tell, boss, I sold at 100 rupees. Now if you are telling that issue is at 110 rupees, what nonsense it is, right? So whatever is sold, you will take at that price only. So in case of return by the vendor, then take the amount column as whatever the price at which you bought. But if at all issued from the department, you got two options. One, price is known. Then you got 2 options. What is it, sir? Price will be that price only. Where to add in the balancer? To that respective line or to the latest stock, last line? No, sir. Price is also unknown. Then take the recent issue price. To any department it's so concerned. Recent issue price. Then add it to that particular recent issue price level or recent stock. Okay. This is all about adjustment over here. Nothing extra is there other than that discount things. And here this thing, sir, one question is there, no sir? Here different levels they have given which to consider. In that one we consider 500. Later we consider 250 and all, 750, 1000 and all. Sir, why, sir? How, sir? Try to understand, guys. You take any numbers here. It's not going to make any difference. You can take 250, 750, 1500, 2500, 3000, 5000. Do whatever you want. But don't take more than 5000. Why, sir? Because in this 3000 and above, you can take more than 5. If you take more than 5000, what you will do with that? Your annual requirement is just 5000. Max to max, take it as 5000. This one where the students will be confused. I I think that's it. Now we are going to see that RTP question relating to that adjustment. Okay, the discount things as well as loss of material, perishable goods. That thing, how to account for it. I'm vouching for those two questions as well as stock out question. Tomorrow in examination it might come. If it comes, I mean day after tomorrow. If it comes, I think or I wish along with that question coming in your examination, smile also comes on your face because you would have discussed that. Yes. Srajan Kumar, I am presently a CA final student, but I can vouch if you watch this revision, you will surely score an exemption. Let's go. Thank you, boss. Thank you so much. It means a lot. Sir, why are CA final students watching the marathon? Hey guys, CA course is like that. CA course is like that. Even if it's not our result, trust me, we have already cleared our exams, but still someone's result it is. We will get scared as same as that person. Right? So CA course is like that. Whole it is a community. It's a community. All students are same. Foundation, inter, finals. So here certain things. A practical problem that is done, that level question that is done. Treatment of return of material from the department to stores, this I have explained. Different documentation used for material procurement. Guys, bill of material, material requisition notes, goods receipt notes, all those are there. No theory, please go through it once, compulsory. It might be come in theory or it could come in the MCQ, but minimum 2 marks though, from that it is going to come, that's for sure. We have 3 RTPs to discuss quickly. Padapat we'll discuss. Okay, one is page number 33 of my additional question bank. Guys, listen here. Listen here. Measure Tanishka Private Limited, Materials Private Limited produces a product which name is ESS. Yes. The consumption of raw material for the production yes is 210 kgs to 350 kgs per week, which means this is minimum consumption. This is maximum consumption. Okay, sir. Procurement time 5 to 9 days. 5 to 9 days. 5 is minimum stock level. Minimum lead time or minimum reorder period. 9 is maximum reorder period. Okay. 1000 is the purchase price. Ordering cost is 200. Storage cost 1% per month. Guys, try to understand. 12% per annum. ₹2 per annum. See. So what you should do here, 12%, whatever you compute on the price, purchase price, that is ₹100 into 12%, which will come to ₹12 plus 2. 14 rupees is carrying cost per unit per annum. ₹14 is carrying cost per unit per annum. Consider 365 days as a year. So they are asking you to compute EOQ, ROL, minimum stock level, maximum stock level, average stock level, number of orders to be placed per year, total inventory cost, that is your purchase price plus ordering cost per annum, carrying cost per annum. If the supplier is willing to, listen, this is the point. If the supplier is willing to offer 1% discount on purchase price of total annual quantity in 2 orders, if at all you order in 2 orders, then supplier is giving you 1% discount, which means he's telling price won't be 100, sir, price will be 99. Now the carrying cost will change, guys. Keep that point in mind. Please keep this point in mind. Don't forget this. Carrying cost will change. How much will be the carrying cost, sir? 99 into 12%. 99 into 12% plus 2 rupees. Whether you are going to accept the offer or no, and if the answer is no, then minimum how much you expect? Very simple. If the answer is no, that means my EOQ cost will be minimum. My EOQ cost will be minimum. Let's say as per EOQ 5 lakh is a cost. As per offer by the supplier, cost is becoming 520,000. Now I will accept the offer of the supplier only and only my cost is less than or equal to 5 lakh. My cost is less than or equal to 5 lakh. If the cost is going even a rupee over and above 5 lakh, then why will I accept a supplier's offer? I will go for EOQ because my cost will be 5 lakh only. So in that scenario, what you will do, sir? Offer you don't know, so the discount you will take it as X. The discount you will take it as X, and you are going to calculate the total cost. Total cost you take it as 5 lakh. I mean telling here, I don't know the exact amounts. Total you take it as 5 lakh. So then you will find out X. That X will be the price. Then you find out how much discount it should be. Not less than that. Give me a second. I will show the answers. This is page number 33. So it should be somewhere I will just show it here. See here guys, annual consumption. How did you arrive at annual consumption, sir? Annual consumption we are going to arrive on the basis of average consumption. How much is average consumption, sir? On an average, try to understand. Minimum you are consuming 210 kgs per week, maximum 350 per week. So total how much you are consuming, sir? On an average, 140 is the difference. So 210 plus 350 divided by 2. Around 560 divided by 2 is 280. Correct? 280 you are consuming per week, 7 days. So per day you are consuming 40 kgs on an average. So for 365 your annual consumption will become 14,600. So whenever question is like this for UOQ, please consider average consumption. Okay. Storage cost is what, sir? I told you 14 rupees. Ordering cost is 200 per order. So UOQ will become so much, 646 kgs. So per order you are going to place 646 kgs. ROL will be how much, sir? Maximum consumption. Maximum consumption is around for quick revision these sums are enough. I have already finalized these sums. Kindly go through the questions. All those questions please go through it, because almost all the concepts get covered over there. So maximum consumption, if you take it on the day basis, because your lead time is in day basis, so either lead time you have to convert it into weeks, or consumption you can convert it into day. So consumption we converted into day. Maximum consumption is 50. Accordingly we got ROL. Minimum stock level we got like this. Okay, these and all I am not going to discuss here. Listen here. Number of orders to be placed is you will get 22.6. So it is 23 orders. Sir, what if I get 22.4? Still it will be 23 only. Why sir? You should round it off to previous number. No sir. The answer is no. Why sir? If at all you round it off to previous number, then you won't get how much is required for your annual consumption. So always remember, in the EOQ scenarios, although it is 22.1, kindly round it off to next order, 23. Don't round it off to 22.1. Okay. So total inventory cost is under EOQ is around 14,69,122. If the supplier is offering you 1% discount, then offer price is 99. Revised carrying cost will be 99 into 1%, 99 into 12% plus 2 rupees, 13.88. And order size will be 2 orders in a year, which means per order 7,300. So accordingly we'll calculate. Now you see, if at all it is EOQ, then your ordering, total cost will be 1469. If at all it is supplier, 1496. Of course you are not going to accept supplier's offer. Then what you will do, sir? You will counter. How much, sir? How much? See boss, pretty simple. I am going to pay you X amount. Because X into my annual requirement See, I'm telling him only one simple thing. What you are telling, sir? See, boss, my annual requirement is 14,600. Correct. So for that 14,600, I'm going to pay the X amount. This will be my purchase price. And ordering cost. Ordering cost, you are telling 2 orders to be placed. I agree. And per order, how much it is? 200 rupees, which will come to 400. This also I agree. Carrying cost, boss. Carrying cost. Listen, I am going to pay half of your order size. Order size, you are telling us to do it under 7,300, but I am going to pay 0.12x plus 2. This will be my carrying cost because price is considered as X. So now I will tell him, see boss, at this cost should match my EOQ. That is your 14 lakh 69,122. 14 lakh 69,122. If at all my cost matches this, then only I am going to take it at this price. If at all you are going to give me more than what you get X at this price, then I am not going to take. If it is less than this, of course I am going to take because my cost will be less. This is how you should solve this. Not to take not to get confused. This is how you should solve it. This discount question. Hope you guys understood. Okay. Now X you will get. Correct. Now don't write X as an amount. Try to understand. X you got as a price. Let's say X you got as rupees 98. So now right now 100 is there. X is 98 means he should give us 2% discount. He should give us 2% discount. So counter offer will be 2%. This is how you should solve. That is one question. And we have RTP May 23, page number 69. Always remember one thing, guys. For MCQ it will be useful. Always remember one thing. Unless and until our supplier gives a discount. Unless and until our supplier gives a discount, your EOQ will be the best option, because the change happens only and only, or the decision making thing comes only and only when purchase price is different. Otherwise we always know whatever might be the level, carrying cost and ordering cost will be lower together in EOQ only. None other option will give that. If your purchase price same in both, ordering cost, carrying cost is lower in EOQ, then of course EOQ will win all the situation, unless and until our supplier gives us a discount. See here, same question here, but right now there is no discount offered. So they are asking how much discount to be offered. No discount offered at all. So in that scenario, we'll take price as X. We will take X into annual requirement. Ordering cost we will take accordingly, because they are placing order quarterly. That's what they are trying to tell. Quarterly basis, which means 4 orders you will take. Ordering cost you will take, and carrying cost you will take based on X. And total cost you should take how much is equal to your EOQ total cost. Here one more thing you have to remember, cost right now is 190, handling cost is 1470, and freight is 770. Together this will form part of your ordering cost. Carrying cost they are telling 20 rupees per annum. So carrying cost directly they have given. Okay. AR boys, whoever it is, boss, please stop doing this nonsense. Okay. Yes. Page number 121. of your RTP. Crazy question it is. Crazy question. You should go through this once before going to exam once again. What are you talking, sir? That important? Yes, that important. See here, guys. Technical team, guys, if at all you are listening, can you please remove that AR voice from the video? Can you block it? Thank you. Yes, the purchase committee of A Limited has been entrusted to review the material procurement policy of the company. The chief marketing manager has apprised the committee that the company at present produces a single product X using raw material A and B in the ratio of 3:2. So there are two raw materials. Yes, sorry. So 3:2 is the ratio of raw material. 3:2 is the ratio of raw material. Material A is perishable in nature. Material A is what, sir? Material A is perishable in nature, which means that has a shelf life. It has to be used within 10 days from the goods receipt notes. That is, once you receive in your inventory, then it has to be used within 10 days. Otherwise, material will become obsolete. Material B is durable and can be used for any number of years or after 1 year also. Fine. Material A is purchased from the local market within 1 and 2 days lead time, which means lead time it is. B is taken from the neighbor state, which takes 2 to 4 days. The purchase price per A is 30 rupees, B is 44 rupees. To place an order, the company has to incur administration cost of 1200. To place an order, administrative cost is 1200, which means that is ordering cost. Carrying cost is 15% and 5% respectively. For material A, it is 15%. Material B, it is 5%. At present, material A is purchased in a lot of 15,000 kgs. Try to understand. You are taking it in the 15,000 kgs. But guys, try to understand. Max to max, you can use 10,000 kgs out of it. Max to max, you can use 10,000 kgs out of it, because in order only, sorry, not 10,000 kgs, 10 days they have told. No, sorry. With this we don't know. How much we don't know. How much we can use, that we will check. They are giving us a 10% discount. GST is applicable where the input tax credit is availed, so ignore it. Ignore it. The sale department has provided an estimated cost as to sell 30,000 is what they are expecting in January, which means throughout the year it will be around 3,60,000 kgs. 3,60,000 kgs input, sir? No, it is output. It is output. Ratio of output is 5:3. That is, if at all you put 5 kg of raw material, you will get 3 kg of output. You will get 3 kg of output. So it is around 480 or something you will get. Correct? Or not 480. Some amount you will get. Leave. Company works 25 days a month. Great. Following queries they have asked. Quickly I will show here how the thing changes here. See here. Monthly production of unit is 30,000. So you need 50,000 raw material because 5:3 ratio. The ratio among A and B is 3:2. So basically 30,000 of A is required and 20,000 of B is required. EOQ accordingly we calculated. Next, maximum stock level. Sir, how much you are going to keep maximum? Try to understand now, guys. Try to understand. Although you have capacity, you are not going to keep something more than of 10 days. Although you have capacity, you are not going to keep something more than of 10 days. Why, sir? Why, sir? Guys, if you keep it, it will become waste, no? If you keep it, it will become waste. Yes, sir. So either it could be stock equal to 10 days consumption. Either it could be stock equal to 10 days consumption. Stock equal to 10 days consumption or normal, whichever is lower we will take. See here. If you take stock equal to 10 days, 30,000 you are consuming for 25 days. So in 10 days, how much you will consume? 12,000. Normal formula, if you apply ROQ plus ROL minus minimum into minimum, then you will get it as around 16,200. So you are going to keep max to max 12,000. You are going to keep max to max 12,000. Okay. Now under EOQ what you should do? Under EOQ what you should do? Try to understand annual consumption. On an average, net you are consuming 30,000 net. Wastage and all you leave without wastage. 30,000 of A you are consuming. So 360,000. Number of orders to be placed is 30 orders. Ordering cost you will get, carrying cost you will get, purchase you will get. Sir, what is there special in this? Nothing special, no. Special is there. What is it? Guys, EOQ. How many orders you are placing? 13,800 and 13,856. However, out of this max to max, how much you can use? Max to max you can use 12,000, which means your 1,856 is extra last, which means you can't order just 360 kgs. You have to order more than 360 kgs because in each and every order around 1,856 is lost. So listen here. Lost due to obsolescence. In case of EOQ 1,856. In case of normal order now 15,000, 3,000. So this is what you are losing. So this thing you have to get in. The picture. Remember this point. Sir, number of orders, we did mistake, sir. No, we didn't do mistake. That's the reason. 36,000 net I want. Sorry, 3,60,000 net I want. For that, how much orders required? In an order, max to max, I can consume only 12,000. So I will consume exactly that. No, I will consider only 12,000. I am not going to consider everything. I will consider only 12,000. Although I order 15,000 something, although I order 13,000 something, for calculating number of orders, I am not considering that number. because out of that order only and only 12,000 should be considered, or 12,000 could be used. So I will consider that number. I will consider that number. This is how you should solve this. With this different kind of questions and all we have seen in the material costing, and your LMR questions are these many from the material. Now we'll do one thing, guys. Now it is 8:40. We are going to take a break till 8:48. 8:48 and sharp 8:48 we are starting with the labor cost or employee cost and direct expense. That won't take much time. Here onwards chapters won't take much time. We'll try to revise as many as possible. Chalo, take a break of 8 minutes. Yes. Shall we? Shall we start? Yes, now we are starting with chapter number 3. That is employee cost and direct expenses. Sir, what do you mean by employee cost? Sir, whatever you pay to your employees, whatever benefit you provide to your employees, whatever the cost of that, that thing we call it as what, sir? Employee cost. That thing we call it as what, sir? Employee cost. Employee cost could be direct employee cost, indirect employee cost. Sir, what do you mean by direct employee cost, sir? Employee cost which can be traced in the final product, we call it as direct employee cost. Employee cost which we cannot trace in the final product, which that we call it as a indirect employee cost. Yes, sir. Done. Next. What are the departments involved in the employee cost control, sir? Personnel department, basically your HR department, Rangoli department, huh? Yes, engineering and work study department. That is, you have to decide now how many hours of labor is required for this, for that and all. Motion time study should be done. So that will be done by whom, sir? Engineering and work department. Timekeeping department. That is, they are going to keep time. That is, at what time they came, at what time they went. See, timekeeping only work is very simple. At what time employee came in, at what time employee went out. Payroll department is all about ascertaining how much salary we should pay to this particular employee, how much we should pay that department. And cost accounting department, making the payment and recording the transaction. Making the payment and recording the transaction. So recording the transaction means what item or what entry they will pass, sir? That we will see in the chapter number 7. Importance of employee cost control. That is, what are the different importance are there, sir? Employees productivity, control of idle time. It will increases employees productivity because you are keeping the eye on them. When you keep an eye on your employees, then only your productivity will increase, no? So it increases the employees productivity. It controls the idle time. Sir, what do you mean by idle time, sir? You paid for it, but they are not working for at that time. You paid, they are not working. You paid, they are not working. That is idle time. Sir, you didn't pay, they are not working. Is it idle time? Of course, no. If that's the case, you don't pay for they staying in home. So you can't tell they staying in home is idle time. No. You paid for it and then they are not working. That is idle time. And assessment of manpower of requirement, that will also be done by your employee cost control to keep control over the timekeeping and time booking. Sir, what do you mean by time booking, sir? Timekeeping you understood. At what time employee comes, that record will be there. At what time employee goes, that record will be there. What is time booking, sir? That is from the time of coming in till the time of going out. From the time of coming in till the time of going out, what employee has done, for which job, how many hours he has spent or she has spent. Feminists, which job employee has spent or she has spent, that thing we call it as time booking. That is, for which job, how many hours spent, that keeping time for job basis, no, that we call it as time booking. And time and motion study is how much time is required for that particular work. That standard are we fixed, no, that one. And control of overtime and control over employee turnover. Employee turnover means employees changing in an organization. Employees changing in an organization. Sir, why to control, sir? Let them change. No, training, etc. We basically remember one thing, whoever employees you have, that would be great. If you have the same number of employees, then your productivity will be more. Instead of you getting some new employee and making them work. And what do you mean by time keeping, sir? Record of total time spent by an employee in a factory, whereas time booking is breakup of time to various jobs. Okay. What are the methods of time keeping, sir? That is, manual method is there, automated method is there. Manual method, you have attendance register method. That is, they coming and signing. Metal disk method is there. That is what, sir? Employees will come, they will be given with a disk. They will be given with a disk or a card. They will come, when they come, they will put it in the box. So now Now we get to know that okay, employees has come. Later, while going out, they will take and go. So if anyone comes late, then they can't put their disk. They have to go and talk to HR team. So they will get to know at what time that person has come. If anyone want to leave early, then then what they should do? They should go to HR and take out the disk and go. Otherwise, tomorrow they can't come in and keep the disk. So this is how they can keep a control. Sir, what controls are your head? My friends, my both disk I will come and put it. While going, I will take and go. What control you have? That's why. That's the demerit. Proxy is possible. That's the demerit of manual method. That's why we came up with automated method. That is punch card attendance. That is either a ID card or anything could be given where they will punch it, then the time will be considered. When they're going back, they will punch it, time will be considered. Biometric is any physical behavior based on that, right? Eyes it could be, or hand, fingerprint it could be, something like that. How the payroll works, sir? Timekeeping department will send a record to the payroll department telling that boss, this employee had worked for so many hours, so many days. HR or personnel department also will send a detail of that employees to payroll department. Then what a payroll department will do? Payroll department will pay the salary to employee, and if at all any amount of the employee should be given to statutory department, statutory body like PF, PSI and all, they will deduct and they will give it there. So what are the deductions will be there in the employee cost, sir, or employee salary, sir? Provident fund will be there, ESI will be there, employee state insurance, tax deducted at source, professional tax, voluntary contribution to provident fund. That is, some amount of provident fund employee should deposit it to government. However, if employee is interested in putting something more, absolutely allowed. That is known as voluntary contribution and contribution to any benevolent fund and advances. These are the things. What do you mean by idle time, sir? Time when no production is carried out but paid. When the no production is carried out but paid, that will be called as idle time. That is, you paid to your employee for 8 hours. In that they worked only for 6 hours. Try to understand. You paid your employee for 8 hours, but they are working for how many hours, sir? 6 hours. Then 2 hours is what, sir? Idle time. 2 hours is what, sir? Idle time. One more thing, guys. What is it, sir? Guys, this could be normal, abnormal. Sir, what normal, sir? Idle time. Try to understand. 8 hours you are paying. 8 hours they are not working. Are they machines? They are human beings, no? Then don't you think they should have some food? Don't you think they should have some drinks? Don't you think they should take a break? They should rest? Yes, sir. 8 hours they can't continuously work. Of course. That's the reason. All those things we call it as normal idle time, which means idle time you cannot avoid. Out of 8 hours, 1 hour will go for a food, etc. Then that 1 hour is normal idle time. Because you can't ask them, no, boss, 8 hours I am paying you, you are working for only 7 hours. Next day, labor union will come in front of your office, throwing stones. So try to understand, this normal idle time is allowed. Whereas abnormal idle time is, out of 8 hours, 1 hour went for this, other 1 hour where it went, you would have avoided it, but it happened. So that is abnormal idle time. Sir, normal idle time, treat it as cost of production. Don't exclude from the cost. But if it's abnormal idle time, it could be avoided. It's abnormal. So take it out from the cost, transfer it to costing P&L. I mean, debit it to costing P&L. Charge it to costing P&L. Guys, in this, see here, employee cost, one thing you have to remember, that is calculation of earnings and cost. Sir, what do you mean by this, sir? Guys, earnings means from the employee point of view. from the employee point of view. That is how much employee will receive. That is how much employee will receive. Cost means employer point of view. Cost means employer point of view. That is how much employer had paid. How much employer had paid. So earnings means employee point of view. How much employee had received. Cost means employer point of view. That is how much employer had paid. Sir, what do you mean by this, sir? Try to understand. I employed you guys. I employed you guys by telling that I will pay you 90,000. Your salary is 90,000. But there Nirmala auntie told, wait boss, you can't give 90,000. Give my cut. What is your cut? TDS 15,000. EPF, employees contribution 10,000. So now try to understand. Out of 90,000, 25,000 is employees contribution towards TDS and PF. So around 65,000 will be the earnings. 65,000 will be the earnings. That is how we arrived at this, sir. How much employee will pay? How much we should pay to employee minus their share. That we will reduce. That will be your earnings. So employee's point of view. Cost means, sir, try to understand. 65,000 I paid to employee. No doubt in that. But this 15,000 and 10,000, 15,000 and 10,000, which will come to 25,000. Guys, I paid to Nirmala auntie, no? Nirmala auntie. Or am I holding it for myself? Of course I am paying to Nirmala auntie. Which means 65 I paid to employee. 25 I paid to Nirmala auntie. Net as an employer boss I am paying 90,000. Net as an employer I am paying 90,000. So for me cost is 90,000. Sir, just 90,000 or no? Then government is putting a straw to the head of employer and sucking a blood. What do you mean by that, sir? Government is asking, sir, 10,000 PF you deducted from the employee's salary and gave. You do one thing. 10,000 you give from your hand to the welfare of your employee. So I should give 10,000 extra to government again. That is now my total cost. Now my total cost would be rupees 1 lakh. Now my total cost would be rupees 1 lakh. So employer point of view, what you paid, sir? Salary plus employer contribution. From the employee's point of view, earnings, how you arrived, sir? Salary minus employee contribution. Salary minus employee contribution. Okay. Sir. Effective hours how to compute, sir? Effective hours how to compute? Pretty simple. Hours paid minus normal idle time. Hours paid minus normal idle time. Normal idle time. That will give you effective hours. Done. Sir, what do you mean by overtime, sir? What do you mean by overtime, sir? Guys, my employee should work for 8 hours. Okay. My employee should work for 8 hours. But if at all he or she working for 10 hours. Now this 2 hours is what, sir? Overtime, OT. Overtime. The 2 hours is overtime. So now whatever you pay for 8 hours is your normal wages. Whatever you pay for this 2 hours will be your overtime payment. Not one-time password, overtime payment. Whatever you pay for this 2 hours is overtime payment. Sir, if they work for 8 hours also you are going to pay same amount. For additional 2 hours also you are going to pay same amount. The answer is no. Of course for this 2 hours I might pay extra. For example, for first 8 hours, I might be paying 100 rupees per hour. For the next 2 hours, I might be paying 150 per hour. For the next 2 hours, I'm paying 150 per hour. Now try to understand. 100 is your normal wages, no doubt in that. But extra 50 what you paid, this we call it as overtime premium. This we call it as overtime premium. So, sir, overtime payment is equal to what, sir? Overtime payment is nothing but wages paid for overtime at normal rate. Wages paid for overtime at normal rate plus overtime premium. Will give you what, sir? Will give you overtime payment. Okay, sir, how to treat the overtime premium, sir? Guys, I'm expecting this question from the examination. I'm expecting this question in the examination. So please concentrate on this question very carefully. I'm expecting this particular question in the examination. Again the disclaimer. If at all this won't come in the examination, don't remember my momu, dadu, sisteru. It is a disclaimer, your choice. Okay, I think this question might come. That is, how you are going to treat the overtime premium. Normal rate, you are going to treat normally, because whether you do the overtime work or you don't do the, for example, one job requires 10 hours. Whether you do overtime, whether you don't do overtime, this need 10 hours, no. So when it's a overtime, what you pay for that hours, normal rate, that won't matter. That will be added to the particular job. No doubt in that. But in that 10 hours, let's say 4 hours, you overworked or overtime. 4 hours included in this overtime, this thing. Which means for that 4 hours, you would have paid 50 rupees extra. For that 4 hours, you would have paid 50 rupees extra. Now, sir, how to treat this? 50 rupees per hour, that is 200 rupees in the cost. 200 rupees in the cost. That is treatment of the overtime. First one. Our person, our customer, he himself or she herself coming and telling us, boss, please complete my work. What I will tell, madam or sir, it will take some time. Please come tomorrow. That customer is telling, Arey, you can't tell like that. I want it now itself. I want it today itself. Please do something. What we will do? Okay. But to our employees, no, they have to work night, which means bit of, yes, also bit of extra money. Extra money we should give. So what we'll do? That customer will be like, boss, I'm ready to pay. For that. Extra I'm ready to pay. Which means if at all overtime is worked because of the customer, urgency of the work, then add it to particular job. Because from that revenue you are generating, so you can add it to that particular job. Sir, overtime you are doing because of shortfall in production. You are not able to utilize your organization capacity full, or let's say our product is an umbrella business. We have a capacity of, let's say, 1 lakh umbrellas every month. In the month of April and May, we have to produce 120,000 umbrellas. Which means 20,000 extra umbrellas we have to produce. Is it our mistake? No, sir. It's a benefit. No, boss, you are able to sell 1 lakh units. Now we were able to sell 120. We will be happy to give the overtime and get the work done. We'll be happy to give the overtime and get the work done. Sir, why to get the work like overtime, sir? Bring the new employees. Then after 2 months again, what they will do them? Like what you will do? You have to pay them salary for nothing, no? Because again production will fall for 1 lakh. Or our space in the factory is just for 1 lakh. Then what you will do? Extra hours only you should work. So that is the reason. So it is just to make sure that some unexpected development will happen, because of that production should be increased, which is for our benefit. In that scenario, guys, overtime premium, see, not full overtime payment, try to understand only premium, because normal rate in it will be added to that particular job. Normal rate in it will be added to that particular job, but premium portion, what you should do, sir, treat it as a overhead. Treat it as a production overhead. Don't add it as a direct labor cost. Treat it as a production overhead. Hello Zishan. Yes. Next. Sir, your management and workers, some conflict is going, because of which your workers are not working, or some other department's mistake it is. In that scenario, to make sure whatever shortfall happened because of that, to make sure that is produced, you are paying overtime extra. Now, when you pay that extra overtime, you are going to charge it to that particular department. 4. Sir, abnormal things, earthquake, all those things, strike, etc. In that scenario, charge it to costing P&L. As it's abnormal. Last. Sir, you have a demand. Okay. You have a capacity. Yes. You have an employees vacancy. Yes. You are searching for employees also. Yes. But sir, you are unable to find the employees. You are unable to find that quality employees. You are searching for that employee. As an employer, I am telling that I am searching for that employee. I am not telling that I am not searching for that employee. Of course, I am searching for that employee. But I am unable to find the employee. I am doing my part of work. So due to the expansion, due to the rise in the market, where we actively searching for the employees, but we are not finding the employees, in that scenarios, please make the overtime premium as a part of normal wages only, which means you will be having normal wages, for that add the overtime premium. Now we will get inflated wage rate. You are going to charge inflated wage rate to all the jobs. This is how you should treat it. This question, guys, illustration number 5. Please go through it. Illustration number 5, very important. It should be there in LMR. It is there in LMR. 1, 3, 4, 5, everything is there. In this question, in this chapter, 12 questions are there. Now, sir, what are the wage payment incentive or schemes, sir? You can give it on a time basis, that is per hour how much. You can give it on an output basis, that is per unit how much. You can make it combination of time and output together. Great. Premium bonus method, group bonus scheme, incentive for direct workers, like that is there. Premium bonus method, we have 2 bonus method, Halsey and Rowan. What does Halsey method tell, sir? Boss. You should give a premium bonus for the hours saved at 50% of how much money is saved. That is, if you see the example, if at all standard hours allowed to complete that job is 8 hours. Hourly rate is 100 rupees. Time taken is 5 hours. In that scenario, time saved is 3 hours. So normally for 5 hours we'll pay 100 rupees. No doubt in that. Because he completed in 5 hours, we are paying it in 100 rupees, which will come to 500. Okay. Other 3 hours is there no? Saved. Because of that, how much money is saved to the organization? Money saved to the organization is 300. In this half, we will give it to employee. That is 150. To the employee, we will give 650. To the employee, we will give 650. Now, one question comes to everyone's mind. Sir, if at all employee wouldn't have worked efficiently, if at all he had taken 8 hours what is allowed, he would be paid 800 rupees. He would have paid how much? 800. Just because he completed early, you are paying him just 650. So as an employee, where is motivation to complete early? Where is motivation for the efficiency? Try to understand. Guys. I told this employee completed in 5 hours. Did I tell other 3 hours he don't have work? Of course, he will be doing a new product, which means for that normally 100 rupees into 3 will be paid, because he will be working on something else. There he will be getting paid, which will come to 300. So total he will not earn 650 boss, he will earn 950. Got it? So try to understand. Here is where majority of the people will do mistake. Sir, always 50%. If the question tells some other percentage, let's say 40%. In that scenario, you should take 40%. One more method is there, row 1 incentive. Sir? Why one more method? Sir, this was enough, no sir? Try to understand, no? Now, as an employee, what I will do, if I complete it within, let's say, in 2 hours, if I complete, 6 hours I saved. 6 into 100, 600, half of that, 300. I will get 300 rupees as a bonus, extra, premium. So as an employee, what I will do? I will try to complete in 2 hours. 2 hours completion will happen that easily? The answer is no. What, sir? What are you talking? Why no? Because the quality of the product will be moe. Then, for that reason, you should not consider only hours saved. You should also consider hours worked also, or time allowed also. For that, we got with the new system, that is row 1 incentive scheme. That is, guys, premium will be anyhow hours worked into hourly rate we give, no doubt in that. But premium what we pay is how much time they are saving, also how much time we allowed, not directly 50%. How much time they saved and how much they allowed into hourly rate into time taken. We are going to consider time taken also into consideration. That's the row 1 scheme. One thing you have to remember here, guys. Up to 50% efficiency, row 1 scheme will give you highest premium. After 50%, after 200% efficiency, or let's say up to half of the time allowed if you save, row 1 will give you highest benefit. After that, row 1 in the sense, row 1 system will give you highest benefit. After that, if you save more than half of that, then Halsey will give more, because row 1s automatically, what is the assumption? Boss, if you try to save more and more, automatically quality falls to demotivate. To demotivate that, if your efficiency like is more than 200, that is, if at all your efficiency is like in half of the time, more than half of the time, if you're not taking more than half of the time or half of the time, then automatically the premium will keep on falling. You can see here. If at all time saved is 2 hours, then under Halsey it is 100, under row 1 150. 3 hours 150, 187.5. 4 hours, which means out of 8 hours allowed, 4 hours saved. Under Halsey also same, row 1 also same. Keep this point in mind. At a 50% time saved, when you save half of the time allowed, then Halsey and row 1 both will be same. Halsey and Rowan both will be same. If at all more than half, Halsey keep on increasing, but Rowan it will start decreasing. Rowan it will start decreasing. You can see there, right? This is one. And guys, this question is there. Illustration number 8. Please go through this once. Yes. Illustration 10 also very important. Go through that. Guys, effective hourly rate, what you should take, sir? Cost, employee cost, what we are paying together for employee as well as to government, divided by effective hourly rate. How to arrive at effective hourly rate, sir? Hours paid minus normal idle time. Hours paid minus normal idle time. Okay. There is one that question. I say material question. Important. I think it's illustration number 3. Let me check. Illustration number 4. Illustration number 4. One more important question. It is seen from the job card for repair of customers' equipment that a total of 154 hours have been put in detail as follows. So there is one job. That job is taking 154 hours of labor. 154 hours of labor. Worker A, who is getting paid 200 per day, which means for 8 hours. B is getting paid 100. C is getting paid 300 per day. Monday, A is working 10.5, which means he is working 2.5 hours extra. Tuesday 8 hours, nothing extra. Wednesday 2.5 hours extra. Thursday 1.5 hours extra. Friday 2.5 hours extra. Saturday nothing extra. Going to B, nothing extra. Going to C, 2.5, nothing, 2.5, 1.5, 2.5, but Saturday 8 hours. Saturday's condition is what we'll see. In terms of an award in employee conciliation, the workers are to be paid DA on the basis of cost of living relating to each month, which works out to be 968 for the relevant month. So for a normal month, DA is how much, sir? 968. For a normal month, DA is how much, sir? 968. The DA is payable to all workers irrespective of wage rate. Now you can't tell, sir, A earns 200 rupees, more DA, B earns 100 rupees, less DA, C earns 300, much more DA. No, you can't tell. Whoever it is, how much ever they are earning, but when it comes to DA, everyone is getting paid 968 per month on an average. On an average. Of course, if at all you work more, your DA will be more. If at all you work more, your DA will be more. Each worker has to work for 8 hours a day on weekdays. Saturday and Sunday will be weekly holiday. Great. Saturday and Sunday will be considered weekly holiday. However, workers may work on Saturdays due to exigency of work for 4 hours, though full payment of 8 hours will be made. So if at all Saturday, if they work for 4 hours also, payment will be made for 8 hours. So this will be considered as 8 hour only. If at all they have given 5 hours also, consider it as 8. 10 hours also 8. 4 hours also 8. Overtime is paid twice of the ordinary wage rate if the workers work for more than 9 hours in a day. So if the workers work for more than 9 hours in a day, that will be paid extra. In this scenario, 1.5, 1.5, 0.5, 1.5. That is 1.5, 1.5, 0.5, 1.5. Okay. Excluding holiday, it has worked out to be 176 hours. In a month, we thought it will be 176 hours. Why they have given, sir? To calculate DA per hour. Per hour. Per hour DA is how much, sir? 968 divided by 176. Some 5.5 or something you will get. The company's contribution to PF and ESI are absorbed into overhead. So that won't be treated as direct expense. So that can be ignored. Calculate the wage rate. Try to understand. Try to understand here. So this extra hours of 1 hour will be there, no, up to 9 hours. that will be paid at a normal wage rate, but this extra hours will be paid at double. Okay, see here for ABC, we'll find out the total cost like this. Basic wage for everyone will be so much. DA 5.5, 5.5, 5.5, hourly rate 30.5, 18, 43. Okay, now hourly rate is how much, sir? 30.5. Now A will be paid how, sir? A will be paid 44 hours with 30.5, and for the additional 5 hours with 61. Additional 5 hours with 61. B for 48 hours. For 48 hours, B will be paid at 18 rupees. That's it, because there is no OT. There is no OT. C, per hour it is 43. So C will be paid around 52 hours at 43, and for the remaining 5 hours at rupees 86. For remaining 5 hours at rupees 86. This is how we will calculate the total wages. Okay, kindly do it this way. They have taken it as equivalent units. You can ignore it. You can ignore it the way I have done now. That way also you can do it. Okay, here this question is important. This question might come tomorrow. Where overtime is worked regularly throughout the year as a policy due to worker shortage, then find out the inflated wage rate, right? Where the overtime is worked irregularly to meet the requirement of the production, add it as a overhead. Where the overtime is worked as a request of the customer, add it to the cost of customer. Due to the fault of any department, add it to cost of that particular department. If it's a what to tell, earthquake, etc., then charge it to costing P&L. Then charge it to costing P&L. Okay, this is how you are going to do certain things. Sir, employee turnover means what, sir? Employee leaving and going the organization, right? So it could be found out in 3 different methods. That is replacement method. Replacement method is means what, sir? Here we are going to consider number of employees replaced during the period divided by average number of employees during the period into 100. Okay, what do you mean by this, sir? What do you mean by this, sir? Replacement means what, sir? How many, for example, 100 employees left. 100 employees left during the year and 90 employees came back for the same position. For the same position. Now this 90 will be treated as replacement. 90 will be treated as replacement. That is, employees left and the same, for the same position, new employees are recruited. That is your replacement. That is your replacement. And separation means what, sir? How many employees left? 100 employees left. So separation will be 100 employees. Flux method is there. Flux method is there. That is what, sir? Number of replacement, number of separations plus number of new joinees divided by average number. Sir, what do you mean by number of new joinees? Sir, number of new joinees means, guys, try to understand here. 100 employees left. In that 90 employees replacing the old employees, and other 5 employees got employed because there is a new project or because there is a new position, not to the place of the employees left. This is to the place of new position. In that scenario, guys, treat it as a new joinees. Treat it as a new joinees. Kindly go through this question. Here one thing is there, okay? Here one confusion is there, that is separation. Whether separation, sir, in that above scenario, 100 left, 90 joined back, should I take as only 10? In question like this, they are taking only 10. But the other question where they give a numbers, there they are taking whole 100. So if the question is like this, take separation as 10. If the question is different, then take it as complete. Whether replaced, not replaced, doesn't matter. How many of them left? That we will consider. Okay, one thing. And one more thing. In one of the RTP, the legal firm question is there. Please go through it before going to examination. That also I am expecting to come in the examination. I think it should be RTP number November 22. That is a legal firm question. Legal firm question. They have given big table, right? Big table, they have given that question. Kindly go through that question before going to examination. Okay, done. And also one more question which I am expecting from this is computation of loss due to employee turnover. Computation of loss due to employee turnover. Crazy question it is. Crazy question. What do you mean by crazy question, sir? Top notch question. Is it, sir? We'll see. See, the management of BR Limited is worried about their employee turnover in the factory, and before analyzing the cause and taking remedial step, it wants to have an idea of the profit foregone as a result of employee turnover. How much profit we lost due to employees turnover? Last year sales amounted to rupees 83,03,000. PV ratio is 20%. Always remember, guys. Always remember, after your margin of safety, after your break-even point, that is after recovering your fixed cost or ignoring fixed cost, your PV ratio and profit percentage will be same. So in this question, we are assuming our PV ratio and profit percentage to be same. Our PV ratio and profit percentage to be same. Sir, why PV and profit will be same, sir? That we will see in the marginal costing. So this PV ratio, you can consider it as profit percentage only. No problem. You can consider it as profit percentage only. The total number of actual hours worked by the direct employee force was 4,45,000. So they are working for 4,45,000 hours. They are working. Sir, are they productive? That we don't know. Try to understand. Try to understand. Working is different, being productive is different. What do you mean by this, sir? See, now I am working. This chapter, I can complete it in 1 hour. Now I am working for 2 hours. Am I not telling that I am not working for 2 hours? Yes, I am working for 2 hours. But in that, I have completed only chapter which is productive for 1 hour. Which means other 1 hour will be unproductive. Other 1 hour will be unproductive, guys. So try to understand, if 4.45 is work, that doesn't mean that everything is productive. Everything is productive. Try to understand, the actual employee hours include 30,000 attributable to training of new employees. Out of 445,000, 30,000 is relating to what, sir? Training of new employees, which means 415 is work by old employees. Out of which half of the hours were unproductive. Out of 30,000, 15,000 is unproductive, 15,000 is productive. So can I tell during the year productive hours are just 430 lakhs? 430 lakhs. Also, as a delay in the personnel department, employee turnover, 1 lakh potential productive hours were lost. Which means additional to this, as there was a delay in employing new employees or taking new employees for employment, what happened, sir? 1 lakh hours was lost. The cost incurred for the consequence of labor turnover is so much. Sometimes they might give at the training period, 10,000 defective products are there, and to correct the defective product per unit 50 rupees is required. In that scenario, this will also be considered, because if there was no training, no defective. If there is no defective, then there is no cost. So this is happening because of the defective. So if they give in the question defective thing, please consider it. Assume that the potential production lost as a consequence of employee turnover could have been sold at a prevailing price. Find the profit foregone. See here, 445,000 hours that I am going to divide between 2, 30,000 and 415,000. 30,000 again I am going to divide between 2, that is 15,000, 15,000. 15,000 is unproductive, other 15,000 is productive, whereas 4,15,000 hours are productive. So 430,000 is productive. Productive or lost is how much, sir? Due to training 15,000, due to delay in recruitment 1 lakh. Total productive hours lost is 1 lakh 15,000. Now what they are telling, boss, if at all you worked in this 1 lakh 15,000, no, you would have made a profit. You would have made a extra profit. How much extra profit, sir? Selling price remains same, which means try to understand 83 lakh 3,300. What you are making, that you are making by working for productively just 430,000 hours. If at all you work for this 115 also efficiently, then how much sales you would have made on that profit foregone? Because anyhow cost will go, no, variable cost will go, no, that has nothing to do. But extra how much you would have saved, that is you would have made a sale of 22 lakh 20,650. In that you would have saved 20% of that, that is 444 130. And if at all defective correction cost is there, that also consider. Along with that, other employee turnover cost is there. You will get how much is the total profit foregone. How much is the total profit foregone? Only and only due to employee turnover. This is how you should do it. Okay. All this question, go through this, guys. And here one more practice question 2 is confusion for many students. Practical problem 2 is confusion for many students. Sir, what is it, sir? How is it, sir? What and all they have done, sir? All these things we will see now. Practical question 2. Wage negotiations are going on with the recognized employees union, and the management wants you as an executive of the company to formulate the incentive scheme with the view to increase productivity. Okay. The case of 3 typical workers, they have taken A, B and C, who produces respectively 180, 120 and 100 units in a normal day of 8 hours, which means in 8 hours, A is producing 180 units, B is producing 120 units, C is producing 100 units. Assume the day wages should be guaranteed at rupees 75 per hour, which means right now you are paying 75 per hour, and piece rate would be based on the standard hourly output of 10 units. Piece rate is on what basis, sir? Standard hourly output of 10 units, which means you are expecting in 1 hour you will be paying, you have to produce 10 units, which means 75 will pay per hour. So per unit, how much is the rate? 7.5. 7.5 per unit. Okay, sir, great. Calculate the earnings of each of the 3 workers. So one thing what you should calculate, you should calculate earnings of 3 workers. Okay. Employee cost per 100 piece. Not only earnings of employees, sir, you have to compute how much would be our cost to produce 100 piece under day wages, piece rate, HALC, row 1. Also calculate average cost of labor to the company, which means considering A, B and C together, 3 together, then how much will be our average for 100 units here? First hourly rate. A work for 8 hours, B work for 8 hours, C work for 8 hours. 75, 75, 75. Each and everyone is earning same amount. 600, 600, 600. 600, 600, 600. So this will be earning of the employee. One answer done. Next they are asking employee cost for 100 piece. Try to understand. Now 600 for 180, for 100 question mark 333.33. 600 for 120, for 100 question mark 500. 600 for 100, for 100 question mark 600 piece. Sir, together you are paying 1800 to produce 1400. You are paying 1800 to produce 400. So for 100 how much it will be? 1800 divided by 400 into 100, rupees 450. 4 answers they have asked, 4 answers done. Piece rate. For each and every unit you will be paying 7.5, 7.5, 7.5. So A produced 180, 180 into 7.5, 120 into 7.5, 100 into 7.5. Now this is for 180 units, 120 units, 100 units. For 100 units, how much, sir? Just calculate. Multiply 7.5, 7.5, 7.5. Together, how much it will be, sir? 3000 divided by 400 into 100. Hal C. Earnings is 975, 750 and 625, 675 per 100 divided by 180 into 100 divided by 120 into 100 divided by 100 into 100, 2400 divided by 400 into 100, you will get average. Row 1 also you are going to do this way. This is all about the employee cost. This is all about the employee cost, and your LMR questions are tomorrow. What and all you have to go through. Sir, today I don't know. Class will get over at what time? Yes, one thing remember, guys. If at all you are planning to sleep, tonight, tomorrow morning, aramse will get up, sir. Hey, just try to push your sleep. No, you will get something extra. Sir, no, sir. Tomorrow I can't study because of the less sleep. Array, try to understand. As a normal human being, if you have that pressure, automatically you will forget about the sleep. At that and all, I don't know, sir. 10 hours sleep I need. I can't help. Guys, try to understand how much ever possible, try to avoid sleep. See, now you might tell, sir, few faculties tell you should sleep enough. Hey, according to me, 4 hours sleep in the examination time is more than sufficient. Because instead of sleeping 8 hours, if you study for that 4 hours, that extra thing you will find it in an examination. You will get happy. Sir, what if in examination I feel sleepy? You won't feel sleepy. How will you feel sleepy? By looking at the question paper. If at all you feel sleepy, then remember one thing. You don't know to solve. I mean, whatever the question you have learned, that is not there. Some extra things are there. You don't know to solve. So you are feeling sleepy. If you know, automatically the Josh will come and you won't feel sleepy. So try to understand, try to avoid sleeping as much as possible. Now I know I'm conflicting with majority of the people who tell sleep enough. I'm telling examination, push yourself for the next 3-4 days. Results, you can find a changes in result. You can find a changes in results. Okay. With that, we have completed our employee cost. Okay. Go through those questions once. Now we'll straight away start with chapter number 4. That is overheads absorption costing method. Overheads. This also won't take much time. Now it is 9:43. Take a break of 4 minutes. At 9:47, we will start with overheads. 9:47, we'll start with overheads. Then the break won't be there until we complete ABC. These two will be completed together. Yes. Now we'll continue with overheads absorption costing method. Overheads. Favorite chapter, no? Okay. Sir, what do you mean by overhead, sir? Sir, what do you mean by overhead, sir? Pretty simple, guys. Overhead means all the indirect material, indirect labor, indirect expenses. Together we call it as a overheads. Together we call it as a overheads. Sir, but why this chapter is required? Try to understand, guys. Main feature of overhead is that it cannot be apportioned directly, or it cannot be allocated directly to the final product. It cannot be directly allocated to the final product. So what you should do, sir? You should absorb it. Sir, what do you mean by absorption? That I will tell. What do you mean by absorbing? I will tell. What do you mean by absorbing? I will tell. Okay. Before that, what will be the major thing in overhead? Nothing, guys. Try to understand. Overheads could be relating to different departments. Correct? Overhead could be relating to different departments. See, in my example, we at ArivuPro have CA, ACCA. Let's say two courses will take. We'll take CA, we'll take ACCA. Correct? Yes, sir. Now, whatever the overhead is there, at the same time, let's say, rent will take. We'll just take rent. Let's say our building is like this. Where this classroom is occupied by CA, this classroom is occupied by ACCA. Here there is a operation team, here there is a sales team. Here there is a operation team, here there is a sales team. Rent is indirect. You can't ascertain per student how much directly. So what you will do, sir? Now, rent for the building, let's say 10 lakh rupees. Now what you will do, sir? You will charge the rent to CA, ACCA, operation team, sales team. You are going to divide the rent expense among CA course, ACCA course, operation team, sales team. Done. So this process is called as allocation or apportionment. Now, CA students will be there, ACCA student will be there. We'll put the rent cost on their head. Based on number of students or whatever it is. Okay, we'll put it on their head. What about operation and sales, sir? To whom they will put? Correct. Service team. This is into production. This is into directly revenue center. Whereas this is just a cost center. Service. What these people should do, sir? What these people's rent? What we should do? We should not recover from customers. Of course, we should recover from customers. Because customers are kings, not the daughter and sons of father-in-law or mother-in-law. Try to understand. They are king or queen, we agree, but not daughter-in-law or son-in-law of, daughter or son of mother-in-law or father-in-law. Correct? So you should charge to customers, which means what you should do, sir? This operations we will again see what we did first. We apportioned rent. Now from the service departments for the production department, again you should reapportion. Now the overhead is only in the CA department, ACCA department. It's only between CA department, ACCA department. Now we are going to charge it to students. So whole rent got recovered. Now try to understand. The rent of the operation team and sales team transferred to ACCA and CA. That is overhead relating to service departments transferred to production department, that we call it as reapportionment. That we call it as reapportionment. Okay. Now, CA department's charges, ACCA department's rent, we are charging it to students now. We are charging it to students now. That will be known as recovery or absorption. That will be known as recovery or absorption. That's it. This is the major thing. So, listen here. Listen here. All indirect material, indirect labor and indirect expense together we call it as what, sir? Overheads. What do you mean by allocation, sir? Direct assignment of cost to a cost object which can be traced directly. For example, there is one this thing, one representative who takes care of only CA course. Only CA course is nothing to do with the ACCA. He takes care of only and only CA course. Now, to him we are paying a salary of 50,000. Sir, direct no sir. You can trace it in a final product. Hey, try to understand. Number of students 20 is also salary is 50,000 only. 200 also salary is 50,000 only. But we know that it is directly related to CA. Indirect, but it is related to CA. In that scenario, we will allocate it. That is, we are going to directly assign the cost to the cost object. Sir, rent in that building, sales is there, operations are there, CA is there, ACCA is there. Rent in that building, operation is there, sales is there, CA is there, ACCA is there. So you are going to divide it on some basis, that we call it as apportionment. That is allotment of cost to cost object on some basis in proportion as cost cannot be traced directly to such cost object. Now from the sales team, from the operations team, whatever rent relating to them, we have to charge it to students. Which means which we should add it to the cost of CA and ACCA. So the overheads of the service department brought to the production department, that thing we call it as a reapportionment. That is apportionment of overheads of service departments to the production department. We call it as reapportionment. So what do you mean by reapportionment, sir? Apportionment of overheads of service department to the production department, we call it as reapportionment. Done, sir. Next, absorption. Sir, what do you mean by absorption, sir? As I already told you, recovering it from the customers, recovering it from the final product. What? Overheads recovering from the final product, the rate which we charge or the process is known as absorption. That is, absorption means what, sir? Process of recovering of overheads of a department from its output is known as recovery or absorption. That is, from CA students and ACCA students, you recovering the overheads, that is rent amount, that is known as absorption. Absorption rate, sir. How to arrive at absorption rate, sir? Guys, try to understand. Overheads you can't determine in the beginning of the year almost all the time. You can't determine in the beginning of the year. So max to max you can estimate. That is nothing but you can take the budget. You can do the budget or you can take the budgeted cost. So absorption rate will be budgeted overhead divided by budgeted cost unit. Budgeted overhead divided by budgeted cost unit. That is, we thought our rent would be around 10 lakh. We thought our rent would be around 10 lakh and number of students in CA course going to join us was as 500. Going to join us as 500. This is how we computed our absorption rate. Absorption rate. But now what is happening, sir? Now what is happening, sir? Actually, students joined ArivuPro has become 600, not 500. How much we thought, sir? How much we thought, sir? We thought 10 lakh divided by 500. We thought 10 lakh divided by 500. That is 2000. We thought from student, if we recover 2000 rupees, if we recover 2000 rupees, then we will be able to make sure all the overheads is recovered. That's what we thought. Because we thought we are going to get 500 students. But we got how many students, sir? We got 600 in 600 student. So we are going to recover 12 lakh. We are going to recover 12 lakh. Okay, sir, you recovered 12 lakh. But actually how much you paid, sir? Not 10 lakh. We thought our overhead to be 10 lakh. But actually is it 10 lakh? No, it could be more. Let's say it is 14 lakh. Let's say it is 14 lakh. So you paid 14 lakh as a rent. But from students you were able to recover just 12 lakh. You paid 14 lakh as a rent, but you were able to recover just 12 lakh, which means 2 lakh is you are not able to recover. That thing we call it as under recovery. That thing we call it as under recovery. Let's say you recovered 12 lakh, you incurred just 11 lakh. You recovered 12 lakh, but you incurred just 11 lakh. That 1 lakh we call it as over recovery. 1 lakh we call it as over recovery. So what is recovery, sir? Recovery is nothing but for actual output, how much you recovered. We thought in the beginning 500 students will come, our rent would be 10 lakh. So per student we have to recover 2000. How many students actually had? So from student if we recover 2000, we are recovering around 12 lakhs. That is what we are recovering. How much we incurred? Difference between recovered and incurred will be under absorption or over absorption, or under recovery or over recovery. If at all you recovered more from the students where expense is less, over recovery. You recovered less from the students but the expense is more, over recovery. That is what under recovery and over recovery. This is some how you are going to apportion, reapportion and all. So there are basically 3 methods of reapportionment, guys. That is from the service department, transfer it to production department. So from the service department to the production department, you got 3 methods. Which are those 3 methods, sir? Direct redistribution method, step method or non-reciprocal method, reciprocal method. Come again. Direct redistribution method, step method or non-reciprocal method, reciprocal method. Sir, in the reciprocal method again we have simultaneous equation method, trial and error method, repeated distribution method. Simultaneous equation method, trial and error method, repeated distribution method. Sir, when to apply direct redistribution method? Try to understand. We got ABC as a 3 production department. We got XYZ as 3 service department. We got ABC as production department, XYZ as service department. Now X will provide service to A, service to B, service to C. Y will provide service to A, service to B, service to C. Z will provide service to A, service to B, service to C. Which means none of the service departments providing service to each other. Which means department A is not providing service to Y or Z. Department Y is not providing to A or Z. Sorry, X or Z. Department Z is not providing to X or Y. In that scenario, you can go for direct distribution method. That is, whatever the ratio it is, you are going to apply it on that. Step method or non-reciprocal, when we will apply this, sir? Step method or non-reciprocal, when we apply this? This is when, try to understand. Let's say A, B, C, 3 production departments are there, X, Y and Z. three service department is there. X will provide service to A, B and C as well as Y and Z. Y will provide service to A, B and C but only to Z. Z will provide service to A, B and C but nothing to this other service department. Which means one service department is providing service to other but other is not returning back. Y is providing to Z but Z is not providing to anything. In that scenario, we are going to use the step method or non-reciprocal method because it is not reciprocating. Sir, then it is become direct redistribution. Try to understand, it's not direct redistribution. Why, sir? Because X is providing service to Y and Z, no doubt in that. But Y is not providing it back to X. Z is not providing back to X. Y is providing to Z, but Z is not providing to X or Y both. So, non-reciprocating. In that scenario, we are going to use step method. Okay. That is how to select that, sir. First, you should select distribution of department which has a highest service. That is, X had provided services to Y and Z. So, distribute that among A, B, C, Y and Z. Then, Y provides service to Z. So, next select Z. Sorry, Y. So, A, B, C and Z. Z, A, B, C. Like that. You will get only in the production department. Next, reciprocal, that is service department providing service to each other. For example, canteen department providing service to a hospital, first aid department providing service to canteen. In that scenario, we are going to use reciprocal service method. In that scenario, we are going to use reciprocal service method. We can use simultaneous equation method, trial and error, repeated distributed method. Sir, what is it, sir? Can you show it? Yes, I can show it. See here. First, I will show the simultaneous equation. Service departments are here. Boiler house and pump room are the two service department. Cost overhead relating to these two departments are 3,60,000. Oh, by the way, when you are doing a primary distribution, always remember, direct material, direct labor, direct expense relating to production department, please don't consider because these are direct to production department. For service, yes, it's a overhead. For service, it's overhead. So consider that. But for the production department, this is direct. So it will come under a prime cost, not under a factory overhead. So don't consider it as a factory overhead. Okay. Please don't consider direct material, direct labor, direct expense in the primary distribution of your production. But for the service, of course, it don't have product only, then what you will trace? If don't have product only, what you will trace? So everything will be overhead only. So boiler house is having overhead of 3 lakh, pump room is having 60,000, together it is 360,000. Now, how to apportion this, sir? Only by this you can't select which method it is. You should go further. What do you mean by that, sir? See here. Boiler house providing service to A, B as well as pump room. Whereas pump room providing service to A, B. If at all only A, B, then we would have gone for the step method. But it is providing service to A, B as well as boiler house. It is providing service to A, B as well as boiler house. So now try to understand. Cost of boiler house is not just 3 lakh. Cost of boiler house is 50% of pump room is also included, boss. Because pump room's 50% cost will be relating to boiler house. Simple now, sir. 60,000 into 50%. Hey, pump room cost is also not 60,000. Why? 5% boiler house cost is also included. So there is one say in Kannada. Madve agde huch bidde madve agalla. Yes, whoever the Kannada students will relate to that. I mean, will understand that. So here, without knowing the cost of boiler house, you can't find out the cost of pump room. Without knowing the cost of pump room, you can't find out the cost of boiler house. So what you will do, sir, you will find the equation. What, sir? Cost of boiler house, you will take it as B. Cost of pump room, you will take it as P. So try to understand, cost of boiler house will be 3 lakh plus 50% of pump room, 0.5p. Pump room, 60,000 plus 5% of boiler house, 0.05p. Now, when you solve this equation, you will get how much is B, how much is P. Here. Try to understand, one major thing is there. Either it in the trial and error, whatever the reciprocal method it is. Here, remember one thing, whatever the amount you get, you are not going to do it on the ratio basis. Please don't do it on the ratio basis. Do it on the percentage basis. That is, boiler house 338, for A 60% of that, 35%. Apply the percentage only. For B, pump room 76,923, apply the percentage only. Sir, why, sir? Regular class. I can't explain that thing in marathon now. But I can give you a reminder about it. That's it. Sir, if it's a trial and error, then what you should do, sir? In trial and error, what we do, guys? We'll find out the overheads and we keep charging. X we charge to Y. Now Y, X became nothing. Y became 580 to 500. Now Y's will charge to X. So X got 29,125. Again 29,125 we will charge it to Y. Like that value. Now whatever we got this will be distributed to A, B and C in the percentage again, not on the ratio. If you apply it in the single table together for A, B, C, X, Y, then it will be repeated distribution method. Repeated distribution method. Okay. Sir, what are the different methods of absorption, sir? What are the methods of absorption? You have a lot of methods, they will give in the question. It could be percentage of direct material cost. That is, you will ascertain how much is your overhead and budgeted material cost. For example, your budgeted overhead is rupees 10 lakh. Your budgeted material cost rupees 40 lakhs. Now we will tell your overhead absorption rate is 25% of material cost. Now in this year, if at all you incur material cost of 30 lakh, then overhead will be 30 lakh into 25%, like that. You apply it on the direct labor also, prime cost also, labor hour rate, machine hour rate, rate per unit basis also you will do. Actually overhead rate, basically we have 4 different rates. One is normal rate, that is it's based on the actual. That is, boss, how much is the overhead for the CA course? Actual 50 lakhs. How many number of students? 1000 number of students. This is your normal rate. Predetermined rate means budgeted. Budgeted overhead divided by budgeted base. How much you estimated it to be? 40 lakhs. How much student you estimated to be? 600. Budgeted. Blanket means you are not going to take production A department separate, B department separate, C department separate. Together overhead of all these 3 departments we will take and will absorb overall. Okay. Department overhead means you don't go for blanket, you will go for A, B and C separately. Sir, you told whenever actual overhead is greater than the recovered overhead, it will be known as under absorption. When the actual overhead is lesser than the recovered overhead, it will be called that over absorption. Sir, how you are going to treat it, sir? How you are going to treat the absorption, sir? You should check, guys, why the absorption is coming. Is it because of the abnormal reason or the normal any other reason? Due to abnormal reason, sir, due to wrong estimation, then guys, charge it to costing P&L. Charge such overhead to costing P&L. If at all any other reason, if it's a over absorption, reduce it from the cost of production because you didn't incur so much overhead, but you charge so much overhead. Now reduce it from the cost of production. If it's under absorption, add it to the cost of production. How, sir? by calculating a supplementary rate. I will show you one illustration. See here. I will show you one illustration. See here. The total overhead expense of a factory is 446,380. Taking into actual the normal workings of the factory, overhead is recovered in production at rupees 1.25 per hour. So recovery rate is how much, sir? Recovery rate is 1.25 per hour. Okay. The actual hours worked is 293,104. So your recovery will be how much, sir? 293,104 into 1.25, whereas 446,380 is your absorption. Actual overhead incurred. State how would you proceed to close the books of account, assuming besides 7,800 units produced, of which 7,000 is sold. During the year, how many units we produced? 7,800 units we produced. In that 7,000 is what, sir? 7,000 is sold, which means 800 is there in the finished goods. Along with that, 200 equivalent unit of WIP is also there. Sir, what equivalent unit, sir? Don't worry, we will going to study in the, or we are going to revise it in the process cost. On investing, we got to know that 50% of the unabsorbed overhead is due to increase in the cost of indirect material, which is not in your control. Which is not in your control. Normal, treat it like normal. Other is due to inefficiency. This inefficiency is there, no? That portion you charge it to costing P&L. See here. Overhead incurred is 446,380. Overhead absorbed is 336,380. So under absorption is 80. In that under absorption, we know that 40,000 is due to increase in the rate, 40,000 due to factory inefficiency. Now this 40,000, we are going to charge it to costing P&L, no doubt in that. This 40,000, sir, calculate a supplementary rate. 40,000 divided by equivalent production units. Full produced is 7,800. Along with the 200 other is there in the WIP. So it will become 8,000. So supplementary rate is rupees 5. Now this extra 5 rupees we should charge it to cost of production. We should charge it to cost of sales. We should charge it to cost of goods remaining, closing stock. Okay. How, sir? Cost of production. Basically, cost of production, we are going to charge 40,000 only. How, sir? Listen here. For cost of sales, sold number of units, 7,000. 7,000 into rupees 5. It will be added to the cost of sales. 7,000 into rupees 5, it will be added to cost of sales. Closing stock, sir, we got two closing stock. One closing stock is cost of finished goods. The other closing stock is cost of WIP, which is equivalent in nature. So finished goods is how much, sir? Finished goods is basically we got 800 finished goods. 800 into rupees 5, which will come to rupees 4,000. And WIP is 200 equivalent units. 200 into rupees 5, which will come to 1,000. So it is around 35,000 plus 5,000, 40,000. This is how you are going to treat. Everything will be debited because it's a overhead, over absorption. Sorry, under absorption. You should charge it. You should increase your cost because you treated your cost as less than what it actually is. Okay. And also machine hour rate, guys. Machine hour rate computation. Always remember, whatever relating to machinery, everything you should take. Everything you should consider. Sir, sometimes machine operator salary they will give, sir. That is direct, no. Guys, for the machine hour rate computation, kindly consider it. Kindly consider it. Okay. This reverse calculation is there. This question also you go through once. Okay. Nothing much left. This with and without use of computer. This also you go through once. Important question. Have marked it already. See here, 8 identical drilling machine is there and 6 operators are there where the machine can't work for without operator fully engaged in it. So remember one thing. What is it, sir? Although you have 8 machine, you can work in only 6 machine. Why, sir? Because you got only 6 labors. You got only 6 operators. Without operators, you can't operate. Without operators, you can't operate, which means 2 will be idle. 2 will be idle. And here, absentees, all these things they have given it for 6 months, okay? This only they have given it for 1 month, but these things they have given it for 6 months. Keep that thing in mind. And one of the important question, this might come in the examination. Kindly go through this question also. I'm not going to explain you guys that now. And one more thing. This under absorption, over absorption, sometimes they will give cost was so much. Let's say 50 lakh rupees was the actual overhead. In that 5 lakh rupees is relating to previous year. Then for the computation of actual overhead, reduce that 5 lakh. And they will tell some other things they will tell, some unnecessary things they will tell. All those things you reduce and take the average overhead after actual overhead after reducing all these aspects. Please consider your actual overhead after reducing all those aspects. Okay, with that we have completed our overhead. Nothing much. We'll go to the activity based costing. Sir, what do you mean by activity based costing, sir? Nothing but an extension of overhead. In the overhead, what we used to do, sir, we used to generally take either the direct material or direct labor, hours, labor hours, machine hours, and we used to take the overall wage, overall overhead, and we used to charge it directly. I mean, for the final product, we used to charge it either on the basis of labor hour or either on the basis of machine hour. Okay, whatever could be the overhead, whether it's relating to machine, whether it's relating to labor, whether it's relating to something else, what we used to do, we used to absorb it on the basis of either the machine hour or labor hour in the majority of the cases. But in activity based costing, what you will do, sir, you will split that overhead. Why that overhead is coming? You will go to the cost driver, which is the actual cost driver. Then you are going to absorb on that basis. A portion on that basis, absorb on that basis. See, accounting methodology that assigns cost to activities rather than product or services. You are not going to put it to product or service. You are going to assign it to particular activity. What do you mean by activity, sir? Any event for which the cost is incurred, that will be known as activity. Cost driver means what, sir? The factor which affects the cost, which is responsible for the incurrence of cost, that will be cost driver. Cost pool means what, sir? Similar kind of overheads pooled into together, bought together. All the employee related expense bought together, all the machinery related overhead bought together. Now that is your this thing. See here. Overhead budgeted was 99,450. If at all it was a traditional method, what we would have done, sir? We got your direct labor minute we got. So what would have done? On this basis would have apportioned. But in ABC what we will do? We'll analyze why we are incurring material handling, storage, electricity. Together we will get this one, that is 99,450. So 29,100 material handling, that will be done on the basis of material handled. Storage, that will be done on the basis of number of batches. Electricity, not done on the basis of number of machine operations. Like this. We are going to split that overhead and we should apportion it to final product. That is ABC. See, under traditional absorption costing, what we would have done, sir? See, budgeted overhead is 99,450. Labor hour is how much, sir? 4,000 units of A, 3,000 units of B, 1,600 units of C. And A will consume on an average 0.5 hours of labor, B 0.75, C 1 hour. So together we got to know 5850. So we'll calculate labor rate. And we will apportion or we will absorb. Okay, overhead will be 17 rupees per hour. A how many hours? A will be 2000 hours. B will be 2250. Like that. We'll get a total cost and we'll divide it by the number of units. We'll get the cost. But if at all it's a ABC, overhead is divided into 3. Material handling, storage, electricity, and material handling, hauser, weight of material handled, number of units, material per unit in kgs. So total material handled, we get to know per kg how much, and accordingly we'll charge. Storage also like this. We are going to split and do, that is your ABC. That is your ABC. Guys, in the ABC, I'm not going to explain further. In the ABC, listen here, easy concept, these two. Overheads and ABC are easy, and usually it will be there for 14 to 15 marks, no doubt in that. Listen here, in both the these things, chapters, there will be profitability analysis, customer profitability analysis, the expedite delivery, number of deliveries, like that. Customer A, customer B, customer C, like that will be there, no? So that analysis will be there. That kind of question, please go through once. Very important. I mean, I have already marked it. Under this profitability analysis. Drugstore, supermarket is there, that one. And in the ABC, please go through that soap question. Baby soft is there, no? Please go through that soap question. And also in this thing, I forgot to tell. This one adjustment, this might come if at all overhead comes. Listen here. Power cost they will give. If they give only HP, then we will apportion between departments in the HP. If they give only machine hour, then we will apportion it in the machine hour. If they give in question HP as well as machine hour, then what you should do, sir? Whenever they give HP as well as machine hour, then guys take HP into machine hour and apportion on this basis. Take HP into machine hour and apportion it in this base. Okay, keep that thing in mind. I mean, whatever I feel that's important, I'm trying to explain over here. I am thinking that overhead and ABC, nothing extra will be there. Whatever is there, generally I have told it theoretically. So you just practice more and more. The drilling question also you practice, that 6-month data. And there one key point I have told, no, only the month they have given it for 6 months. All other, sorry, that is per month. Normal hours they have given it per month. All other things they have given it for 6 months. Okay, keep that point in mind. So these are the certain aspects to remember. Okay, now we'll do one thing. We'll take a break of 10 minutes and we'll proceed. Guys, can you quickly tell me, whoever is watching live, can you quickly tell me, is it fine? We take our time and we'll try to complete as much as possible. It might go for 2 o'clock, 3 o'clock, whatever it is. 2 o'clock, 3 o'clock, whatever it is. We are there, sir. We will be there in the live. We can complete the revision. Then we can sleep peacefully. Tomorrow we can start solving the question directly. Will that be fine? Or you want me to complete it fast? How much ever possible, only so much. What is the better option? Come on. Come on, chat. Come on. What should we do? Can we go overnight? How much ever possible, so much. Hello. Yes, we can go. Yeah, fine. We'll see how much ever able to revise. We'll revise how much energy I will be having. So much energy I will try to give. Fine. No. Yes, guys. Now we'll take a break. Then we'll take a break of 15 minutes straight away. Right. So I will also get my energy back and come. So we'll start at sharp 10:42. Bye bye. Yes, guys, welcome back. I hope you re-energized and came back. So we'll start with our chapter number 7 revision. That is nothing but cost accounting system, sir. Cost accounting system, right? Yes. So again, one of the important chapter. At least 5 marks will be there, which is cakewalk. Which is cakewalk. Some people, this is the beauty of this chapter, okay? Some people will straight away skip it, telling that, sir, I am not able to understand anything. Some people, if they understand perfectly, they will understand. Try to understand, guys. This is one of the easiest chapter. If at all you have skipped, try to watch it. If you understand, great, you might get some marks. If you don't understand, nothing to lose. We'll try to complete it as soon as possible. So, cost accounting system. Sir, what do you mean by cost accounting system, sir? Nothing but maintaining the accounts of the cost. That is, cost accounting will do, no? That is recording the cost. Cost. How you can record the cost, sir? The system of recording the cost is nothing but your cost accounting system. You got two methods. You got how many methods? Two methods. Integrated cost accounting system, non-integrated cost accounting system. You got how many methods, sir? Two methods. What are those, sir? Integrated cost accounting system. One more is non-integrated cost accounting system. Sir, what do you mean by integrated cost accounting system, sir? Integrated cost accounting system means, guys, cost accounting system where both financial records as well as cost records maintained together. Integrated cost accounting system means where cost accounting as well as financial accounting both are maintained in the same ledger. That is your integrated cost accounting system. Whereas non-integrated cost accounting system means, guys, where the financial things will be recorded in the financial books, cost things will be recorded in the cost books. That is where the cost ledger and financial ledgers are recorded in maintained or recorded separately. That thing we call it as non-integrated accounting system. Now, we'll start with non-integrated accounting system. Guys, try to understand. In the non-integrated cost accounting system, financial ledgers are not maintained. In the non-integrated cost accounting system, financial ledgers are not maintained. Example, cash, bank, debtors, creditors, purchase, sales, all these items we are not recording. We are not maintaining. Sir, but double entry without maintaining this, how is that possible, sir? To make sure the double entry happens, we can pass, instead of all these accounts, we have replaced these accounts with the special account called as general ledger control account or cost ledger control account. So, instead of cash account, instead of bank account, instead of debtor account, instead of creditor account, instead of purchase account, instead of sales account, all these accounts will be replaced by the new account or replaced by the special account called GLC or cost ledger control account. Sir, why this account is opened, sir? This account is opened for only and only one purpose, guys. That is to make sure double entry happens. Okay. Now, sir, what are the different important ledgers under non-integrated system? General ledger control account, which is nothing but just a replacement of the financial ledgers like cash account, bank account, sales account, purchase account, all these things. We have one more ledger called as stores ledger control account, also known as material ledger control account. Stores ledger control account, also known as material ledger control account, which is used to record something about the materials, raw materials. In this ledger, we are going to record about materials as well as stores. We got one more account called as wage control account. We got one more account called as wages control account. Here we are going to record things about the labor cost. Here we are going to record things about the labor cost. Then we got production overhead control account, also known as manufacturing overhead control account, also known as factory overhead control account. Come again, sir. We open one more account called production overhead control account or manufacturing overhead control account or a factory overhead control account, in which we are going to record something relating to production overhead. And we got admin overhead control account, where we are going to record about administration overhead. Selling and distribution overhead control account, where we are going to record something relating to selling and distribution. WIP control account, here we are going to record something relating to production and factory. Here we are going to record something relating to production and factory. And finished goods control account, here we will record about finished goods. Cost of sales account, here we are going to record about total cost incurred till that particular sales. And costing P&L is nothing but relating to profit or loss for the cost of the period. If you understand this chart, then it will become very easy. Try to understand, guys. Factory. There will be a factory. This factory we also call it as work in process. Factory we also call it as work in progress. Remember this. There will be a factory. We also call it as work in progress. So in factory, what we will do, sir? We'll introduce a material. We'll introduce a labor. We'll introduce a material. We'll introduce a labor. Sir, labor we can introduce it in two ways. Labors we can introduce it in two ways. How, sir? We can introduce it directly or indirectly. We'll introduce it as a directly or indirectly. How, sir? Try to understand. Direct material, direct labor, direct expense. That anyhow it will be directly to the factory overhead, factory only, because it is traced in the final product. Along with that, see, labor, it could be direct labor, indirect labor. If it's a direct labor, straight away we will put it into WIP, work in process, or factory. Whereas if it is indirect, we are going to charge it to factory overhead. Yes, sir. Later, factory overhead, what we will do, sir? We'll absorb. Factory overhead, what we will do? We'll absorb. Now, inside factory, what happens, sir? Inside factory, production happens. What else? Okay, sir. Everything will be produced, sir. No, there could be some things in the production, but some things will be produced. Yes, sir. What will be produced, sir? Finished goods will be produced. What will be produced, sir? Finished goods will be produced. Now, finished goods, sir, everything will be sold. No. Some closing stock will be there. Other than closing stock, everything will be transferred to cost of sales. That is, whatever we sold, no? Whatever we sold, everything will be transferred to cost of sales. Along with that, try to understand, your admin overhead will be there. If it is related to production, then add it to the cost of finished goods. That's what we used to do, if you remember. If it is not related to production, transfer it to cost of sales. Also, overhead, it could be selling and distribution overhead, straight away cost of sales. Just like cost sheet. Hope you remember cost sheet. Now, from cost of sales, whatever the expense is there, that we will transfer it to costing P&L. Whatever the sales is there, that we will credit in the costing P&L. Whatever the balance is there in the costing P&L, that will be transferred to cost ledger control account or general ledger control account. And sometimes in the overhead, it could be, there could be under absorption or over absorption, and certain abnormal items will be there that will be adjusted. Try to understand. I will repeat this process once again. So if you understand this process, then this chapter is a cakewalk. See, factory will be there. To the factory, we will introduce a direct material, direct expense, direct labor. To the factory, we will introduce a direct material, direct labor, direct expense. Remember that factory, with love, we'll call it as a work in process. With love, we call it as work in process. Okay, sir. Now, labor or material, whatever it is, it could be direct or indirect. If it's a indirect, it will be there in the factory overhead. If it's a direct, it will be there in the direct labor. Correct? So overhead could be three. Overhead could be three. That is factory overhead, admin overhead, selling and distribution overhead. Factory overhead, of course, we are going to add it in the factory. Factory overhead, of course, we are going to absorb. In simple, we are going to absorb it into the factory. Now in the factory, the production happens and the production will be transferred to finished goods. In the factory, production happens and the production will be transferred to finished goods. Now along with the factory overhead, there will be two more overheads: admin overhead, selling and distribution overhead. Admin overhead, guys, it could be related to production, not related to production. If it is related to production, you have to add it to the cost of product. So you are going to add it to your finished goods. You are add it to your cost of finished goods. Now from the finished goods, whatever will be sold, that will be transferred to cost of sales. Also admin overhead relating to, not related to production, general, that will also be added to cost of sales. Selling and distribution, that will also be added to cost of sales. Correct? So now we got to know how much is total cost of sales for the period. That we will debit it in the costing P&L, and sales we will be crediting. Of course, sales account. Sir, sales account? The answer is no, not sales account, but sales. With what you will, sir? That I will tell. And also there could be under absorption, over absorption. Under absorption, over absorption. What you will do, sir? Again transfer it to costing P&L. Together, final balance of costing P&L will be transferred to some special account. This is the clear picture as to this. Now, what are the journal entries, sir? What are the journal entries? We'll go one by one, try to understand. Purchase of material. You purchase the material. So what are the ledgers going to affect, sir? Generally, purchase account will going to affect, as well as your bank account or creditor account will going to affect. Purchase account will get affected, creditor account will get affected. Here purchase account, listen here guys, listen here. Here for the materials, we are opening one special account called as stores ledger. So whether stores will increase or decrease, sir, increase. So increase in the stores you debit, guys. Increase in the stores you debit. So stores account will be debited, or material control account will be debited. Material ledger control or stores ledger control account debited. To what, sir? Usually it will be vendor or bank, sir. But here vendor or bank is replaced by one special account. What is that special account, sir? GLC or CLC. That is general ledger control account debit, general ledger control account or cost ledger control account. That is entry will be for the purchase of material, SLC account debit to GLC account. SLC account debit to GLC account. Sir, when you introduce a material for the production, now what will happen, sir? From the stores ledger, when the stores ledger increased, we debited it. Now from the stores ledger, it will go out. From the stores ledger, it will go out. Now what you should do, sir? You should credit it, of course. Debit what, sir? From the stores it went. Who is the receiver? Receiver is production department. Production department, I told now with love what we call it as. We call it as a work in progress. So what we will do, sir? WIP account debit. Work in process account debit. Work in process control account debit to stores ledger control account. To stores ledger control account. Sir, return of material could be there. Yeah, it could be there. Entry, sir. See, return could be two ways. Two ways, yeah. What are those two ways, sir? One, if issued for the production, now you are getting it back. One, if issued for the production, now you are getting it back. That is one way. One more way, sir. One more way is you sending it back to your supplier. That is one more way. So try to understand, guys. Say return to stores. That is from the production department, you are getting it back. So increase in the stores debit. Production department is sending you back. Try to understand. When you gave it to production department, what was the entry? WIP control account debit to stores ledger control. Now what you will do, sir? You will return it. So the entry will be stores ledger control account debit to WIP control account. Okay. Sir, what if you return it to vendors? When you purchased, what was the entry, sir? Stores ledger control account you debited. GLC or CLC you credited. Now reverse it. CLC debit to stores ledger control. Right? Now, sir, in the production, there could be many jobs going on. In the production, there could be many other jobs will be going on. Sir, in that scenario, one job transfer it to other job. One job transfer it to other job. What entry will come, sir? Try to understand. Receiving job account will debit, giving job account will credit. Receiving job account will debit, giving job account will credit. And one more thing you remember, guys, this happens inside the work in process account, so it won't affect other accounts. It happens inside the WIP, so it won't affect other account. Only job accounts will get affected. Even WIP account also won't get affected with this. Sir, indirect material issue, sir, that is you are issuing for the overhead. So from the stores ledger it goes out. So credit the SLC, debit what, sir? Respective overhead. It could be factory overhead, it could be admin overhead, it could be selling and distribution overhead. It could be factory overhead, it could be admin overhead, it could be selling and distribution overhead. Yes, sir. So respective overhead control account debit to SLC account. Now, sir, when you incur few direct expenses, try to understand, guys. Direct expense account debit to CLC, you can say later, like direct expense you are going to charge it to production, no? So WIP to direct expense. Instead you can write it as directly charged to production. So WIP control account debit to CLC account. WIP control account debit to CLC account. Sir, when you pay the wages, what would be the entry, sir? Wages control account debit, expense, right? Wages control account debit to, can you write bank? No, sir. Why? Bank is a pure financial item. So this pure financial item is replaced by what account, sir? GLC account. This pure financial item is replaced by GLC account. Okay. Now, sir, out of the wages paid, you might have paid towards the direct wages as well as indirect wages. Yes, you would have paid towards direct wages, indirect wages. Also towards balance. Balance is not possible in wages. Can you tell this month's salary you take, next month also you work? Of course, no. So always remember one thing, guys. Balance in the wages account is not possible. So everything will go to either direct or indirect. No balance will be kept, just like stores ledger. Okay. So if it's a direct wages, you are going to charge it to WIP. If you remember that chart, we would have I was showing you that it is added to factory. So now WIP control account debit to wages account, wages control account. If at all you transfer it to indirect, then the entry will be factory overhead control account debited to wages control account. Factory overhead control account debited to wages control account. Done. Sir, later what, sir? Later from the factory, you are transferring it to finished goods. So finished goods is increasing, sir. Finished good control account you debit to factory, it is going out. Instead of factory, we write it as WIP. So the entry will be finished goods control account debit to WIP control account. Finished goods control account debit to WIP control account. Yes, sir. Now you might have incurred some overhead, sir, directly. So the entry will be respective overhead account. Either it could be factory overhead, either it could be admin overhead, either it could be selling and distribution overhead to GLC. Instead of bank, we are going to replace it with CLC or GLC. Now, when you absorb it, sir, if you absorb the factory overhead will be absorbed with, sir, factory overhead will be absorbed to production. If you remember, factory I showed, no. So the entry will be WIP to factory overhead control. Sir, admin overhead related to production, where it will be absorbed, sir, to the finished goods. So the entry will be finished goods, so admin overhead control. And admin overhead general will be to the cost of sales. So entry will be cost of sales to the admin overhead control, and selling and distribution directly to the cost of sales. So cost of sales to selling and distribution. Sir, under or over absorption is there, sir. Under absorption means, try to understand. If it's a overhead, your expense account, when you incur, you debited it. Let's say 1 lakh. When you absorbed, you credited it. Let's say 80,000. Now 20,000 is under absorption. 20,000 is under absorption. Debit balance or credit balance, sir? Debit balance. Sir, credit side balancing figure, no. Array, balancing figure in the credit side. Debit or credit will be decided. Which side is more? That balance. Debit side is more, so debit balance. 20,000 debit balance, sir. So now you are going to credit it. If it's a under absorption, you are going to credit it. So overhead you will credit, costing P&L you will debit. If it's a over, sir, like 1 lakh you have incurred. 1 lakh you have incurred. 120 is what you recovered. 120 is what you recovered. Now 20,000 credit balance, right? You are going to credit it to P&L. That is overhead account debit to P&L account. Basically from the overhead account, we are not going to keep any balance. Okay. Sir, sales entry what will come, sir? Generally it will be customer to sales. Customer to sales, correct? But here customer is replaced by GLC, sales is replaced by GLC. Wow, sir. Yes. Both will not come. This entry only will not come. Later sales will be transferred to P&L. So sales to P&L. Here sales will be replaced by GLC. P&L will be P&L. So for the sales amount, you are going to write it as by GLC. You are going to write it as by GLC. That is GLC account debit to costing P&L account. GLC account debit to costing P&L account. Cost of sales will be transferred to or debited to P&L. So the P&L account debit, costing P&L account debit to cost of sales account. Always remember this point, guys. Balance of the costing P&L shall be transferred to the cost ledger control account. Note, over or under absorption. Overhead under or over absorption shall be adjusted in only two situations. I told no, if the under absorption is there, you debit it to P&L. If the over absorption is there, you credit it to P&L. Correct? When you can do that, sir? One, when asked in the question, they particularly ask overhead adjust, then you have to adjust. Or when the accounting is done for the period ending. So when you are doing accounting for a year end or a period end, or in the trial balance, overhead account balances are not maintained. Basically, you are not maintaining overhead account. The hint they have given, then only you should close the overhead. Otherwise, just keep the overhead as it is. No need to adjust it as a to the costing P&L, etc. Okay. Done. But your selling and distribution overhead will be there, no, guys. Selling and distribution. Better always and always transfer to cost of sales. Better always and always transfer to cost of sales, because they don't tell how much is the selling and distribution overhead absorbed. Then treat 100% is also absorbed to the cost of sales. Okay. Yes, sir. Now, sir, what and all balance will be there, sir? Whether balance in the stores ledger will be there, of course, because it's a material, no? So you can have a balance in stores ledger, no doubt in that. So closing stock of material it represents. Sir, CLC account, can the balance be there? Yes. That is to make the double entry possible, so that is fine. Sir, WIP account balance be there? Yes. What will be the balance in WIP? Nothing. Closing work in process. Sir, finished goods balance will be there? Of course. That will be closing stock of finished goods. Sir, wages balance could be there? The answer is no. Wages balance cannot be there. So if at all by any chance balance is there, transfer it to your factory overhead. Okay. Now, sir, in the overhead account, sir, it will be under or a over absorption. It will have under absorption or a over absorption. Got it? Yes. Sir, in integrated what, sir? In integrated, see, we are going to see the questions in this particular unit. Don't worry. Without questions, we can't understand this. And one question is there, if you remember, around 45,000 something. In that they tell Charge to production. Thank you, Sanjay. Charge to production 20,000 they will tell. Other 25,000, in that again 5,000 will go to factory overhead. That question we'll see. Okay. See here. Integrated cost accounting system. Integrated cost accounting system. Sir, integrated cost accounting system means what, sir? Both the ledgers of cost and financial items are maintained in the same books. No need to of the CLC account, because respective accounts will be there, like bank account only, cash account only, debtor account only, creditor only, purchase, sales. Like this, particular accounts only will be there. Particular accounts will be there. So here there will be no difference between profit as per cost records and financial accounts. Both will match. Both will match, which means in case of integrated cost accounting system, there is no need of reconciliation statement. There is no need of reconciliation statement. Done, sir. We'll see. Shall we? Yes, sir. I will just take you through the ICA material only. That would be good, I feel. Chapter number 7. Illustration 1 will be relating to non-integrated. Illustration 1 is related to non-integrated. See here what is happening. As on 31st March, in a firm cost ledger, SLC is there, WIP is there, finished stock is there, manufacturing overhead is there, which means production overhead is there. So what, sir? So nothing, guys. Remember one thing here. Here overhead accounts are not closed. Here overhead accounts are not closed. Balance are kept as it is. So unless and until in the question itself they tell close the overhead account or transfer it to costing P&L, just keep the balance. Just keep the balance. And CLC account is there. Done. Now, during the next 3 months, following things have happened. So you are required to pass the necessary journal entries, write up the account and state what balance represented by what. Okay. So they will give, okay, which method it is. Here they didn't give because the above they explained the non-integrated concept and straight away they gave a question. That's why they didn't tell. See here. Finished product at cost, which means this is going from the factory to the finished goods. So the entry will be receiving department. Receiving department, that is finished goods control account debit, to giving department, that is WIP control account. WIP control account. Done. Next, manufacturing overhead incurred. Manufacturing overhead incurred expense. So it is manufacturing overhead control account debit. 2. Can you write bank? The answer is no. You are going to write it with GLC. GLC, or you should see the question. In this question they mentioned it as CLC. So you are going to credit CLC. You are going to credit CLC. Okay, sir. Sir, raw material purchased. What is happening, sir? Raw material purchased. In case of raw material purchased, the receiving department, that is stores ledger control. Here what they have given, stores ledger control only. So stores ledger control account debit to GLC, CLC. To CLC. Sir, factory wages as well as they have given indirect labor. Factory wages they have given, indirect labor they have given, which means they are particularly telling, boss, this is direct wages, this is indirect wages. Whatever it is, you paid, no? You paid, no? First pass that entry. What is the entry, sir? Wages control account debit expense to GLC, CLC. Correct? Now, from wages control, you should transfer direct to the WIP, indirect to the factory overhead. So direct will be the WIP, receiving department, WIP to wages control. Indirect will be to the factory overhead control to wages control account, not factory overhead. We will use the term called manufacturing overhead, depending upon what they have given in the trial balance. Done. Cost of sales. Cost of sales is 185, 890. So what you are going to do, sir? Here this is nothing but what you sold. So the entry will be your cost of sales to finished goods. Material issued to production, sir, that is entry will be WIP control, because production it is, to stores ledger control. Sales returned at cost, which means it will come back and get added to fixed cost finished goods again, so that will get debited to cost of sales account. Material returned to supplier. So when you purchased, entry was SLC to GLC. Now it will be GLC to SLC. Manufacturing overhead charged to production. Entry will be work in progress control account debit to manufacturing overhead control account. You are going to pass these entries. Okay. You're going to pass these entries. Illustration 2. Acme Manufacturing Company Limited opens the costing records with the balance as on so and so. So here you see they are asking you to do it in the ledger itself. See, material purchased. What entry will pass, sir? Material control to CLC. Material issued to job, basically for the production. What entry will pass, sir? WIP control to material control ledger or material ledger control. Materials to works maintenance, which means factory overhead. So factory overhead is a receiving and stores ledger is a giving. Material to administrative office. So administration office is a expense or receiving. SLC is a credit. Materials to sales. Selling overhead is the receiving and SLC is the credit. Wages direct indirect, two they have given. So try to understand. Together we'll pass one entry for payment. That is wages control to GLC or CLC, whatever it is. Direct wages you will transfer to production. That is WIP control to wages. Indirect you will transfer to factory overhead. Factory overhead to wages control. Transportation for indirect to material. Transportation for indirect to material. So it is nothing but your factory cost. So factory overhead to GLC. Production overhead incurred. So factory overhead to GLC. Absorb production overhead. Production overhead will be absorbed where, sir? Production overhead will be absorbed to your WIP. So WIP to factory overhead. Admin overhead incurred. What will be the entry, sir? Your admin overhead control to CLC. Administration overhead allocated to production, which means related to production. Don't allocate it to WIP. Please make sure you are going to debit the finished goods to admin overhead. Selling and distribution, sir. Selling and distribution to GLC, and selling and distribution absorbed cost of sales to S&D. Finished goods produced, sir, that is from the WIP how much went to finished goods. So finished goods to WIP. Sold they have given. This will be your cost of sales to finished goods. And sales, sir, sales will be nothing but your P&L should be credited. So costing P&L will be credited. Debit what, sir? GLC. That's it. Simple. You have to go through all these things. They might ask you to pass few journal entries. That's it. One golden principle you remember: receiving department you debit, giving department you credit. Okay. Receiving department you debit, giving department you credit if the receiving and sending thing is there. If the expense it is expense, then you debit, income you credit. That's it. Expense you debit, income you credit. Sir, can you do one reconciliation question? Array, why one boss? Will do 100. Don't worry. Huh? I just told for fun. Okay, we'll do. No worries. I haven't explained the reconciliation yet. I will explain the whole table of reconciliation. Okay. Then still if you feel like, yes sir, we need a question, then we'll do it. No worries. Journalize the following transaction assuming that the cost and financial are integrated. Raw material purchased, entry will be SLC to bank or vendor. So what are you talking? Because it's a integrated, no need of GLC account. Direct material issued to production, WIP to SLC. Wages paid, out of which 30% is indirect. Try to understand, out of 120,000, 30%, that is 36,000 is indirect, it seems. So 120,000, what will be the entry? Wages to bank. Then indirect will go to factory overhead, that is 36,000. Remaining 84,000 will go to production. Manufacturing overhead incurred, that is your manufacturing overhead control to bank. Manufacture charge to production, that is WIP to manufacturing overhead. Selling and distribution cost, that is S&D overhead to bank. Finished product at cost, that is finished goods to WIP. Sales, again costing P&L, there we can write it as sales only, directly by sales. Closing stock, then you will get to know how much is transferred or how much is cost of finished goods sold. Receipt from debtors, bank to debtors, receipt from creditors, payment to creditors, creditors to bank. Simple things. Here actually few things you have to remember. That is here. See, direct workers, they have given 25,000. Okay. In this question, they have given direct workers 25,000. But they are telling how much is charged to the batches, 20,000. Which means they are telling direct wages 25,000, I agree boss. But in that, to WIP only 20,000 is going. Then where do this 5,000, what we should do, sir? This 5,000, treat it as a factory overhead. Treat it as a factory overhead. Okay. This thing you have to do. This thing you have to do. And that question is there now. Find out the missing information. This thing. Illustration 5 as well as practice question 1. Very important. I mean, I have marked it already. Okay. Go through that. Now we'll straight away jump into reconciliation. Sir. Whoever sleeping, come on guys, get up. Get up. 5 marks. You want sleep or 5 marks? Come on. Today if you sacrifice the sleep, after result you can sleep peacefully, or else again 3 months you have to study. Same thing what you studied, alright. Come on. Get up. Yes. Now listen here. Reconciliation. Sir, what do you mean by reconciliation? Try to understand. I told you in the cost accounting system, where it is not integrated, only cost item will be taken, financial items will be ignored, pure financial items will be ignored, which means profit as per financial document or records as well as profit as per cost records won't match. That's why what we should do, sir, to see what is the reasons for the difference, to identify what is the reason for the difference, we'll open something called as reconciliation account. Okay, or reconciliation, not account, reconciliation statement, sorry, not account. What do you mean by reconciliation, sir? Identifying causes for difference between the amount. Two amount will be there, no? What is the reason for the difference? So the statement which shows the cause for the difference between the financial profit as well as cost profit. So the statement which shows the reason or causes for the difference between financial profit and a cost profit, that thing we call it as what, sir? That thing we call it as reconciliation statement. Reconciliation statement. So this is applicable only and only when Cost records are maintained under non-integrated system, because in integrated system, as I already told you guys, your profit as per financial as well as profit as per cost will match, because both will be same. Sir, here why it won't match, sir? Why it won't match? Only 4 reasons. You do whatever you want. You think in whichever the way you want. Only 4 reasons. What are those, sir? Pure financial item like interest to, bad debt to, dividend to, all these things won't be there in the cost accounting, whereas that will be there in the financial accounts. That will be there in the financial account. Income tax, it won't be there in the cost accounts, it will be there only in the financial accounts. It will be there only in the financial accounts. Notional expenses, which means you didn't incur it, but opportunity cost it is, opportunity. That thing, that won't be there in the financial account, it will be there only and only in the cost accounts. Will be there only and only in the cost accounts. Sir, overheads. In the cost accounts, we take the absorbed overhead, not the actual overhead. In cost account, we take the absorbed overhead, not the actual overhead. Whereas in a financial account, it is incurrence basis, that is actual overhead. That is actual overhead. See here, guys, in that scenarios, what you should do, sir? Very simple, very simple. You should check which is your starting point. Which is your starting point. Let's say cost account is a starting point. Here, what you will do, now you should make sure you go to the financial account profit. You go to the financial account profit. If at all you start with the financial account, you try to go to cost accounting profit. Which means when we try to do this, we will show the difference, why it is so. We'll show the difference. If at all you take the cost accounts, then to arrive where the financial account is there, what we should do? We should follow one golden rule. Let's say we start with our cost accounts. We want to reach our financial accounts. What we should do, sir? One golden rule you have to follow. What is that golden rule, sir? Guys, reason for the difference could be this thing. Certain item could be there in the cost accounts, but not in the financial accounts. Certain item could be there in the cost accounts, not in the financial account. So while arriving at costing profit, you have considered, but now you are trying to go towards financial accounts, which means you should make sure in cost account also it's not there. Okay. Some items could be there in financial account, but in cost account it's not there. But you are trying to make sure that you go and achieve the financial accounts. So whatever is done in the financial accounts, follow that. Whatever done in the financial accounts, follow that. Simple rule. Simple rule. What is the simple rule, sir? Starting point to ending point. Whatever we have done while arriving at ending point, same thing should be done in the starting point. If anything extra done in the starting point, eliminate. If anything less done in the starting point, consider it. For example, listen here. Listen here. Let's say our starting point is cost accounts. Our starting point is what, sir? Our starting point is profit as per cost accounts. Starting point is profit as per cost accounts. Now expenses recorded in cost accounts, but not in financial accounts. Try to understand. Few expenses like notional expenses could be recorded in cost accounts, but not in financial accounts. Try to understand. Try to understand. Your starting point is cost accounts. Let's say my left hand, that is the hand in which watch is there. Right hand, this one, red thread one. Now, this is your financial. Boss, in cost account, you considered some expense because of which profit decreased. Of course. But in financial account, have you done anything? No. So in cost account, what you should do now? Add. Reason, sir, not minus. Why, sir? Because we are trying to make sure that cost account will go to financial account, not financial account to cost. Again, We are trying to make sure cost account will reach the financial, not financial to cost. So what is happening in financial? Nothing has happened, but in cost, what happened, sir? We showed one expense because of which profit decreased. Now we should make sure we add it. So add it. Income recorded in cost accounts but not in financial account. Income recorded in cost account but not in financial account. If income is recorded in cost account because of which the profit is more than the financial account, but guys, we are trying to reach where the financial account is, so reduce. Expense recorded in financial account but not in cost account. When the expense is recorded in financial account, financial profit decreased, but we are trying to make sure that cost account reaches the financial account, minus. Try to understand, financial account is a red flag guy. Cost accounting is a girl. What girls will do? Girls will run behind a red flag guy. So whatever the red flag guy is doing, girls is doing the same thing. My right hand, red color is financial accounts. So whatever is there in the financial, whatever is done in the financial, your cost also you are trying to do the same thing. So cost is what, sir? Cost is girl. Financial is what, sir? Financial is a red flag guy. So income recorded in the financial account, so red flag guy recorded it, so girl will also record it. Add profit. Overvaluation of closing stock in a cost accounts. When you overvalue the closing stock, your profit will increase. Overvaluation of closing stock, increase in profit, but red flag guy didn't do anything, so girl will come back. Overvaluation of closing stock in financial accounts, so the red flag guy showed a more profit, so girl will. Undervaluation of closing stock in a cost accounts, undervaluation of closing stock. So closing stock is undervalued, means profit is decrease in the girl, but the red flag guy is there only, so girl will go back. Undervaluation of the closing stock in the financial accounts. So when there is undervaluation of the closing stock in the financial accounts, what will happen, sir? What will happen, sir? Undervaluation of closing stock in the financial accounts. Undervaluation of closing stock, because of which the red flag guy had reduced that is financial account reduced profit, so girl will also reduce. Like this you will adjust the stocks. Always remember one thing, guys, always remember one thing: closing stock and profit, closing stock and profit, opening stock and profit. Closing stock and profit is a directly proportional, whereas opening stock and profit is inversely proportional. What do you mean by this, sir? Closing stock increase, profit increase. Closing stock undervaluation, profit undervaluation. Opening stock overvaluation, profit undervaluation. Opening stock undervaluation, profit overvaluation. Remember this. Remember this. Opening stock and profit are inversely proportional. Closing stock and profit are directly proportional. Okay. And one more point you have to remember: in the financial accounts, overhead will be taken on an incurrence basis, not on the absorption basis. But in the costing, it is taken at a absorption. So try to understand what will happen. Sir, over absorption is happening. Sir, over absorption means what, sir? You are showing more expense in the costing than actually incurred. That's why over absorption happens. No recovery of more. Recovery more means more expense. You showed more expense. So when you showed more expense, your profit decreased. So you should add it back. Sir, under absorption. Sir, under absorption means your actual is more. So financial accounts more over expense. So which means profit is less. Now reduce. This is how you should treat. Okay. For all the four I have written, please go through this once. And there is something called as memorandum reconciliation. There is something called as memorandum reconciliation, guys. What do you mean by memorandum reconciliation, sir? Here you are not going to prepare the statement. You will start with credit. If it's a profit, you will start with credit. Whatever is there to be added, you are going to credit it. Whatever there to be reduced, you are going to debit it. And final figure, you will get it in the debit. That will be the profit as per, for example, if you start profit as per cost accounts, you will arrive at profit as per financial accounts. Sir, if it's a loss, you will start with debit. Whatever is supposed to be added to that loss, you will take. Whatever should be reduced from the loss, you will credit, and you will get a credit balance, means that will be loss as per financial accounts. If at all you get a debit balance, means that is profit as per financial accounts. Like that it is. Okay. We'll see few these things. Reconciliation, no, one reconciliation question and memorandum reconciliation, both we'll see. Okay. See here guys. Measure HK Piano Company showed a net loss, not profit. It is a net loss as per their financial accounts for the year ended 31st March. The cost accounts, however, disclosed a net loss of 328,000. Both are loss only. Both are loss only. The following information were revealed. Let's start with loss as per cost accounts. Let's start with loss as per cost accounts, which means we should try to achieve loss as per financial accounts. Okay. Factory overhead under recovered, under absorption of factory overhead. Under absorption of factory overhead means you showed less expense in the cost accounts. You showed less expense in the cost accounts, more expense in the financial accounts, which means in the financial account is profit is, loss is more. Loss is more. In cost accounts it's less. Now increase your loss. Increase your loss. You should just check for profit and loss what it happens. Administration overhead over recovered, which means you showed more expense where, sir? In the cost accounts. You showed more expense in the cost accounts. So what you should do, sir? What you should do, sir? Just you showed more expense, because of which your overhead is more than financial overhead. So reduce your loss. Reduce your loss. Depreciation charged in final accounts. Depreciation charged in final accounts. Guys, try to understand. Difference is 10. Difference is 10,000. In cost accounts, you charged 130. In the financial accounts, you charged 120. Which means 10,000 extra expense you charged. How much you charged, sir? 10,000 extra expense you have charged. 10,000 extra expense you have charged. So try to understand one thing now. Try to understand one thing now. Because of showing extra expense, your overhead loss has increased. Now reduce the loss by 10,000. Reduce the loss by 10,000. Interest on investment not included in cost. There is some investment on which we are getting a interest, which means our income, because of which financial account loss is less. Now reduce this loss also. Income tax provided. There is one expense, income tax expense, which is there in the financial account, because of which financial account profit loss is more. Here also increase your loss. Basically, whatever the financial accounting gets done, you are doing it in the cost accounts. That's it. Transfer fee, basically credited in, when you transfer share from one person to other person, you will get some income, which is there only and only in the financial accounts. So in financial accounts, it's an income because of which loss is less. Here also you less. Stores adjustment, credit in the financial book. So stores adjustment is there, credit in the financial books. So that also, what you should do, sir? It is credited income in the financial accounts, which means loss is less there. Here also you reduce. This is how the statement looks like. Sir, what if it's a memorandum reconciliation account? Let's say you take loss as per cost accounts. Cost accounting loss means debit. So 328,000. So whatever loss you have to add, 6,000. 1,20,000. This will be debited. All the minus 4,000, 10,000, 20,000, 2,000 and 2,000 will be taken in this side. So if you see debit side, how much it will be, sir? 328, 448, 454. Debit side 454,000. Credit side, sir, 4, 14, 34, 38. 38,000. So 454,000 minus, sorry, 454,000 minus 38,000 will come to 416,000. This will be loss as per financial accounts. This is how you are going to do your integrated, non-integrated, everything. Sir, in this chapter, which are the important aspects we have to remember, sir? Of course, reconciliation is always the examiner's favorite point, and they will ask journal entries sometimes. These two, along with these two, this time I am expecting they might ask missing figures. Illustration number one, and also please keep in mind that special adjustment, that wages, direct wages 25,000, but charged to particular job or batch only 20, which means 5,000 you should take it as a factory overhead. That one point you remember. And some in one question there is a there is a deficit, or in the WIP some extra something is there, balancing figure, that will also be charged to factory overhead. That also you keep in mind once. Okay, with that we have completed this particular chapter number 7. With that we have completed our module 1. Now we'll be going to module 2. We'll take a break of 4 minutes and we'll start with module 2. We'll start at 11:46. Okay. We'll start at 11:46. Till then you can watch this video, guys.
Hi guys, in this video we have... Hey everyone, this is Maulishwaran, head of ArivuPro Skills.
I don't know, it's not coming. Leave. So the guy called great scoreboard. Guy called Ashwin. He is in the leading now. In the next 1 hour, we'll do all the miscellaneous things. Which are those, sir? Unit, batch, job. It not 1 hour, half an hour. Half an hour we'll do all the miscellaneous. Later, other 1 hour we'll do process, JP, BP. Service costing I'm not going to touch much, but I'm going to tell what are the different aspects you have to remember there. Okay. And then we'll straight away go to marginal standard. Okay. Now, now we'll start with unit and batch costing, sir. Unit costing means what, sir? Method of costing applied when the identical units are produced. When the units produced are similar in nature, what method we will apply is a unit. Basically, whatever we do in the standard cost, I mean, your cost sheet per unit when you calculate, that itself is a unit costing. See, there is one question. This could come. This could come in the examination. Listen here. Atharva Pharmacare Limited produced a uniform type of product and has a manufacturing capacity of 3000 units per week of 48 hours. Okay, in a week 48 hours is there and you can produce 3000 units. From the records, the following data are available relating to output and cost of 3 consecutive weeks. Units manufactured 1200, 1600, 1800, direct material, direct labor, factory overhead is there. Assume company charges 20% of the selling price on selling price, which means 25% on cost, right? Find out the selling price per unit when the weekly output is 2000 units. When the weekly output is 2000 units, how much they are asking? Try to understand. Direct wages and direct material is direct, which is variable in nature. But factory overhead, if you see, for 400 unit, change in 400 unit, change in factory is 2000. Here, change in 200, it is 1000. Now, so per unit how much will calculate? Per unit how much will calculate? And accordingly we'll do. See here, factory overhead, rupees 5 per unit, rupees 5 per unit. Your total factory overhead will be around 35,000. So we'll add that. For that, add the profit portion, we will get the sales portion. Nothing much. Guys, batch costing means what, sir? When you are going to prepare or when you're going to produce things in the batches, right? Like cake, muffin, all these things. When you do it in the, or any FMCG product, it will be in the batch only. You might have seen here, they writing something like B.no, batch number. So all those are done on the batch basis only. So when you consider whole batch as a cost unit and trying to find out the cost per cost unit, cost per batch, that thing we call it as batch costing. Sir, how many units to produce in a batch, sir? This question is important. This question is important. Fourth one. Sir, how many units to produce in batch? For that, we can apply something called as economic batch quantity. EBQ, economic batch quantity. That is, try to understand, guys. Try to understand. Whenever you do a batch, one thing will happen. What, sir? What will happen? Nothing. For each and every batch you set up, you have to set up a batch. You prepared a batch, you prepared a product in that batch. Now that batch got over. Now you have to clean the machine, grease the machine, you have to set up a machine again, which means setup cost will be there. Okay, sir, do one thing. No sir, then in one batch only produce everything, but you can produce it in single batch, but can you sell it directly, like without lagging? No sir, which means your holding cost will be there, carrying cost will be there. Yes, so you should try to find some way out where your batch size is such that it will keep your setup cost as well as carrying cost together minimal. Sir, somewhere we heard it, sir. EOQ, economic order quantity, where we were trying to find out the balance between holding cost and carrying cost, ordering cost and carrying cost. Here you're trying to find out the balance between setup cost and a carrying cost. So same formula, square root of 2ds divided by c. 2 is what, sir? 2 is 2 formula. D is what, sir? Annual demand for output. Here not input, there it was annual requirement, here it is annual demand for output. And S is what, sir? Setup cost per batch. C is what, sir? Carrying cost per unit per annum. Carrying cost per unit per annum, that is EBQ. Okay, one crazy this question is there. Okay, relating to these juice bottles. This paint question also you go through. Relating to the juice, there is one crazy question we are going to see now. Okay, that is in LMR. Batch costing, question number 7 of RTP, May 24, page number 131. I don't know what this particular case study guy has with the name called Arnav, because in batch costing majority of the question are Arnav. Not only batch costing, many costing questions. So it is page number 131. Hey, give me a second. Listen here, everyone. Listen here. Look at this question. Arnav Limited operates in a beverage industry where it manufactures soft drinks in 3 sizes: large, that is 3 liters, medium 1.5 liters, small 600 ml. So there are 3 different kind of bottles: 3 liter, 1.5 and 600 ml. The products are processed in a batches. The 5,000 liters capacity processing plant consumes electricity of 900 kilowatt per hour, and batch takes 1 hour 45 minutes to complete. So this is for the electric cost they are talking. Only symmetric size of products can be produced at a time. So you can produce only similar kind of product, which means if you produce 3 liter, everything should be 3 liter. If you produce 1.5, everything should be 1.5. If you produce 600 ml, everything should be 600 ml. Machine setup takes 15 minutes to get ready for the next batch. During setup, power consumption is only 20%. Generally, how much it takes? less than that, 80% less than that it will take. That is, it takes only 20%. Okay. Give me a second. Yes. So the current price of large, medium and small are 150, 90 and 50. This is selling price. Okay. To produce a liter of beverage, 14 liters of raw material W, 25 ml of material C required, which cost 0.5 and rupees 1000 per liter respectively. So material W will cost you 0.5 per liter. 1000 will, this one material C will cost you 1000 per liter. Done. 20 direct workers are required. How many direct workers are required, sir? 20 direct workers are required. The workers are paid rupees 880 for 8 hours shift of work. So they will be paid at rupees 880 for 8 hours shift of work. The average packing cost per bottle is rupees 3. Power cost is rupees 7 per kilowatt hours. Other variable cost is rupees 30,000 per batch. Fixed cost, administration and marketing 4 crore 90 lakhs. The holding cost is rupees 1 per bottle per annum. Per bottle per annum. The marketing team has surveyed the following demand for the bottle. Large, they need around 3 lakh. Demand is there. Medium, around 7 lakh 50,000. Small, around 20 lakh. You are required to calculate profit or loss per batch and also compute a EBQ. Okay. So listen here. Sir, what is the maximum number of bottles you can process? What is the maximum number of bottles you can process? See, our machine has a capacity of 5000 liters. Our machine has a capacity of 5000 liters. So, if at all you want to produce large bottle, one bottle will be having around 3 liters. So, 5000 divided by 3. 1666. Sir, 1666.67, sir. Array. You can't, like, you have to keep that bottle incomplete. You can't sell it. So, go to the previous number. Sir, medium is 5000 divided by 1.5, which is 3333, and small is 5000 divided by 0.6, which is 8333. Okay, done. Next, sir. How many batches you have to run, sir? See, demand for a large bottle is 3 lakh. In one batch you can prepare or produce 1666 bottles of large. So you have to produce 180 batches. In this one 225, in this one 240. Now, how much quantity of material W and material C is required to meet the demand? Try to understand this thing. So liter per bottle is so much. So output is this much is our output. So for each and every output, material W is required is 14. So this much is material W is required. Material C is required is around how much they told? 25 ml. So 3 lakh into 0.025. not 0.25. 0.25 means 250 ml. 0.025, 0.025, 0.025 will get how much material C is required, and accordingly you will find the price of that. So number of batches we have already calculated. Hours required per batch is there. So we'll get to know how much total hours of labor is required. Number of shift required of 8 hours, we'll get 45, 57, 60, and total man shift, that is 20 workers per shift. So you will multiply it with 20, you will get how many man shift. So here power consumption per hour it is 90. So how many hours you are running, sir? We calculated. So we got power consumption per batch how much, hours required per batch, setting up this is, so power consumption will be 80% of that. Power consumption will be 20% of that, right? So we'll get this one, and accordingly we'll find out the cost. Here one more thing, remember, for a EBQ calculation, when you consider the setup cost, you have to consider setup cost. You should consider other variable cost per batch also, because they have given other variable cost per batch, which means that is also a setup cost. That is also a setup cost. That point you have to remember. Okay, all this point you have to remember. In batch, this is the special question. Other than this, nothing much. That's all about the batch. That's all about the batch and unit is. Next is job costing. Sir, job costing is what, sir? Your customers will come and tell a specification. Based on the specification, you are going to prepare a product. So that method, what you apply, costing method, what you apply for that kind of thing, specific product, is known as job costing. Here it is not identical. You can't use a unit, because unit can be used only in case of identical. Here it is not identical. So you can use a job. So method of costing applied to ascertain the cost of the product which is produced at the specification of the customer. Okay. So if at all time required for the job is long, we apply the contract costing. Apparently now in new syllabus they have excluded that unit or a chapter, whereas if the time required is short, we apply the job costing. So all the expenses related to that particular job is recorded in the job card or a job sheet, and job sheet is nothing but a cost sheet for particular job. Okay. Actually there is one question, guys. Illustration 1 itself, there what you should consider is this is that question, large bottle question. Okay, this is that large bottle question. I have done like this. You can take a screenshot if you want. But here the wages difference will come. Bit of wages difference will come. Because of this, there is a changes. There are changes. Okay. Done. In the job, what I was telling was, in the illustration 2 actually. In the illustration 2, this thing is there. Selling overhead. Selling price is also there, selling overhead is also there, but we are not absorbing it on that basis, because that particular job selling price we don't know. So we are not absorbing it on that value. We are absorbing it on the works cost. We are absorbing the selling overhead on the works cost. So please keep that thing in mind. Also in the job, that hostel question is there. That hostel question, plumbing question, one of the important question. Okay, where your FIFO method as well as job costing both is applicable. Where your FIFO method as well as job costing both are applicable, as well as there is this question also. This one, practical problem 1. Here you should make sure the whatever the material adjustment they have given, no, that has been considered. That has been considered. And also, guys, here they have given opening, no. Here they have given opening, no. Guys, instead of taking it in the beginning, what you can do is you can start with direct material, direct labor, direct expense, prime cost, factory overhead, add opening WIP. For that you can take these amounts together. Add opening WIP. For that you can take these amounts together in this particular question. Practical problem 1. Hope you have done that once. And these two questions you have to go through once. These two questions of job costing you have to go through once. With that, we have completed job costing also. I mean, those are not much necessary. I mean, of course, those are going to fetch you a marks, but nothing special. I'm assuming all of you are already aware of that chapters and nothing to revise, right? Everything you might have studied already. So that was the thing. Now comes the legendary chapter, process and operation costing. We'll start it in 2 minutes. We'll start it in other 2 minutes. Process and operation costing. So what and all left now? What and all left now? Process is left, JPBP is left, service is left, marginal, standard, budget. I don't think so I will be doing budget. I don't think so I will be doing budget. I don't think so I will be doing standard. So we'll be doing next 4 chapters as a, sorry, standard will be doing service. I won't be doing service. Okay. But service I will tell what are the different adjustments. So this one thing. So process and JPBP we can take it together. Okay. And later we can straight away go to marginal standard. Marginal standard. By 2:33 we'll try to finish it off. 2:33 we'll try to finish it off, so that if at all you watch it till the end, almost all the chapters revision will get over, so you can sleep peacefully. Tomorrow you can get up and you can start solving the problem, right? I assume you might get some confidence after seeing this marathon, right? 2 minutes break we'll take and we'll start. Guys. Actually, now you might be thinking, okay, I'm the only one who is awake. Actually, big shout out to the guys who are awake from the academy side, right? The coordinators are awake, the marketing team guys are awake, everyone are awake. Big shout out to them, right? Hi sir, what time will you sleep tonight? Hey, what time we sleep tonight? That doesn't matter. Whether we sleep with the satisfaction or no, that matters. Don't worry. We'll sleep. Let's see. Yeah, you students are also awake. Of course. Of course. Big shout out to students. Because you guys are awake, we are doing it. Yeah. Big shout out. Big shout out. Yes, very good. Appreciate. Yes. Good night. Why? Sleeping this early. Array, it's till 12:13. What is wrong with you guys? Come on. Show some energy. Yes. Now, we'll start with the next chapter, that is process and operation costing. Process and operation costing. Sir, what do you mean by process costing, sir? What do you mean by process costing? Good morning. So, guys, try to understand where any production involves more than one process. Any production involves more than one process. In that scenario, we are going to apply the method called process costing, where more than one process will be involved. In that scenario, we are going to apply the method called as process costing. Okay. And in the process costing, keep one thing in mind. Output of the process will be the input of the next process. Output of process 1 will be input of process 2. For example, let's say you are doing a cheese. Now process 1, what we will do, sir? We'll put all the milk and filter it out. Process 2, boil it and bring it to the thickness of what is required. Then process 3, add some whatever you want. I don't know how to prepare the cheese. So now process 1 milk was a input for the process 2. Process 2 output was a input for process 3. So this is the process costing, where so many process will be involved before the final product becomes, like raw material becomes final product, and input of the one product is nothing but the output of the previous process. That is, output of the process will be the input for the next process. And output of the process are considered as a work in process until it becomes finished goods. Output of one process will be treated as a work in process only. It is not treated as finished goods until it becomes finished goods. Guys, there could be two kind of losses: normal loss, abnormal loss. If it's a normal loss, add it to the cost of good units. If at all it is abnormal, then charge it to P&L. Scrap recovery, sir. If it is related to the normal loss, adjust it to the cost. If it is not related to the normal loss, that is related to abnormal loss, then credit it to the costing P&L. Okay. No sleep, sir, from last 2 days. Your efforts will be paid off. Don't worry. Operation costing is costing done by doctors to keep records of surgeries. No, sir. Correct. So, operation costing is record kept by a doctors to do the surgery. Very good. I appreciate your thinking. Uh, so, so, guys, sometimes what happens, let's say you have 1000 units in the production. Okay, normal loss is 20%. So you are expecting 800 units, correct? You are expecting 800 units, but you got output as 850 units. Sir, of course it is not an abnormal loss. Of course, it's not a abnormal loss. Then what it is, sir? It is an abnormal gain. That is, output is more than estimated output. That is, actual loss is less than the expected loss. That is normal loss. In that scenario, abnormal gain, what you should do, sir? Abnormal gain, you should credit it to the costing P&L. You should credit it to the costing P&L. Try to understand this process. Process 1, you see, we introduced the material, we introduced the labor, we introduced the overhead. Now, process 1 prepared some output. Now, that is an input for process 2. Along in the process 2 also, we might introduce bit of material, bit of labor, bit of overhead. Now, that is output for process 3. Now, in the process 3 also, again we might introduce material, labor, overhead. Now, output will be treated as finished goods, okay, or transferred to finished goods. Which job is good for after CA, sir? Your interest. You can go for practice, you can go for employment, or you can teaching is there, anything. So, illustration 1, from the following data, prepare process account indicating the cost of each process and the cost. Okay, sir, process account, how to prepare, sir? Very simple, guys. All the expenses you debit, all the outputs you credit. Expenses you debit, output you credit. Expenses you debit, output you credit. How, sir? Listen here. I will show. Better, I think, process costing, how many questions ever it is possible, I will take you through that. Okay. Listen here. From the following, prepare a process accounts indicating the cost of each process and the total cost. Okay. The total unit that passed through each process were 240 for the period, which means here we have 3 different process, but the thing is, guys, there is no normal loss. There is no abnormal loss, because they are particularly telling, boss, each and every unit, the process from one process to other process, the output transferred is 240 only. So try to understand process 1. Process 1 account, debit side, all the expenses. So two materials, how many units, sir? 240 in the units column, amount column 150,000, expense, direct labor 80,000, other expense 26,000, total is 276. Nothing in the closing. So everything will be transferred to process 2. In the process 2, output of process 1 will be the input of process 2. Output of process 1 will be the input of process 2. So, to process 1 account, right? Sir, keep one thing in mind here. What is that? Process 2 in the material column, whenever you introduce a material, additional material, in the material column, numbers won't come. Why, sir? Try to understand now, guys. You are a bat manufacturer. Now, as a bat manufacturer, from one process, you had put a wood. In the next process, gum could have been done. Gum could be getting added as a material. But Can you introduce the wood in the second process? The answer is of course no. Why, sir? Process 1 only wood got cut in this piece. Wood got cut in this way of pieces. Like for example, if you introduce 5000 wood, you got 5000 only as output. Now in the process 2, that is where you are going to add a gum, you are not going to consider any additional unit here, because now as the wood is there only for 5000, max to max bat you can produce is 5000 only. That's why guys, only in the first process unit column will be added. After that, unit column won't get increased. It might get decreased because of the losses, but it won't get increased. Okay, so process 3 we transferred. In the process 3 again this same thing will come, and from the process 3 what we transferred is your to the finished goods. Yes, guys, please don't spam. Boss, if you have a CA foundation exam tomorrow, please go and study. Yes. Now, how to ascertain the cost per unit? I already told you guys while doing a material costing. That is total cost minus scrap realization. Total cost minus scrap realization divided by good units. What do you mean by good units, sir? Scrap realization from normal loss, not abnormal loss. Abnormal loss scrap realization will go to costing P&L, credit side. Normal loss will be reduced from the scrap realization from normal loss shall be reduced from the cost. So divided by good units. Good units means input minus normal loss. See here guys. Sir, please can we finish by 3? We'll try. No, we'll try. A product passes through 3 processes. The output of each process treated as the raw material for the next process, to which it is transferred, and output of the third process is transferred to finished goods. Okay, there are 3 processes: process 1, process 2, process 3. Process 3 will be the final one, and from process 3 output will be transferred to finished goods. 10,000 units have been issued in the process 1. So how many units we are issuing, sir, in the process 1? We are issuing 10,000 units. We are issuing 10,000 units, or we are introducing 10,000 units. Great. And after processing, the output of each process is as under. That is process 1 output is 9,750, where the normal loss was 2%. Process 2 normal loss. Process 3 normal loss. No stock of material or WIP was left at the year end, which means they are telling there is no closing stock. Why they are telling this way, sir? If at all closing stock will be there, then always remember you have to do the equivalent units. Sir, how to do that? We'll see that. Now listen. Process 1 account. In the unit column, 10,000 units. In the debit column, material 40,000, labor 6,000, manufacturing overhead 10,000. Okay, so we have done like this. In the credit side, try to understand guys, although we have introduced 10,000 units, in that 200, 2% of 10,000, 200 we thought as a normal loss. We thought it would be a normal loss, which means although the expense is for 10,000 units, it should be apportioned by 9,800 units. Of course, after recovery of scrap from the normal loss, in the given question, scrap recovery is not there, which means 200 units from 10,000 I have to reduce. Where you are going to reduce, sir? I am going to reduce it in my credit side. Unit column by normal loss 200. But to the next process you transferred just 9750, which means other 50 units where it went, sir? Abnormal loss. abnormal loss 50. But always remember guys, always remember, in the normal loss amount nothing will come, because this 56,000 should get apportioned to the 9,800 units. 9,800 units. If at all you take the amount column in the credit side, then automatically 56,000 will be reduced. But we should reduce, no sir. Yes, what you should reduce? Scrap recovery. So if at all any scrap recovery is there from the normal loss, then only it will come in the credit side. Then only it will come in the credit side. If there is no scrap recovery, amount column in the normal loss will be nothing, because the cost should get distributed to 9,800 units. So per unit 5.71. But to the next process only 9750 is transferred. So 9750 into 5.71, 55,714. So 50 units cost will be transferred to costing P&L, that we are going to treat it as by abnormal loss. Same way you are going to do in process 2, process 3. But remember here, in the process 2 there is a abnormal gain. In the process 2 there is a abnormal gain. This will be going to costing P&L. This will be going to costing P&L. Okay. So I will show you the abnormal gain account, how it will be, sir. Try to understand. Sir, how we got 9,800? 10,000 units is what we introduced. 2% is the normal loss. So output what we anticipated is 9,800. But what we got is 9,750. So 50 is abnormal loss. So listen here guys, abnormal gain, try to understand. Abnormal gain, whatever is debited will come in the abnormal gain account, credit side, correct? Debit side, try to understand. Here you thought your normal loss will be 705. You thought your normal loss is 705. But your actual loss is, guys, your actual loss is just 7050 minus 6525. Your actual loss is not 705, it is just 525. 525. But you thought it is 705, and you thought your scrap recovery from the normal loss is 26,457. So that you are going to reverse in the abnormal gain account. So normal loss, what you got extra 180 relating to abnormal scrap recovery, that you are going to reverse it in the abnormal gain account. That you are going to reverse it in the abnormal gain account. Abnormal gain account. Okay. This is it. This is it. Now two more concept is remaining in the process account. Which are those, sir? One equivalent unit. Two inter-process profit. Inter-process profit. We'll do one thing. First we'll do the inter-process profit. Then we'll come back to equivalent units. We are going to discuss thoroughly about inter-process profit, because I'm expecting, or I'm anticipating that question to come in the examination. Okay. Give me a 2 minute. I will be back. Yes, now we'll be discussing about inter-process profit. Okay. First we'll discuss about inter-process profit, then we'll come back to this thing. Equivalent units. Fine, no? See here guys, very important question. Illustration number 6. A limited produces a product X which passes through two processes before it is completed and transferred to finished goods. So how many processes are there, sir? Two processes are there and one finished goods is there. The following data relating to the month of October. Process 1. Opening stock was rupees 7,500. Sir, is it in units? Of course no, because they have given it in rupees. Direct material 15,000. Direct wages 11,200. Factory overhead 10,500. Closing stock 3,700. And inter-process profit included in the opening stock is nothing. Sir, why nothing, sir? Why nothing, sir? Before that, try to understand what inter-process profit is. Process 1 will send a product to process 2. Process 2 will send it to finished goods department. Generally, these things will be treated as a cost center. Process 1 will send it at a cost to process 2. Process 2 will send it to the finished goods at cost. But here what is happening, sir? These will be treated as a revenue center, which means process 1 will add its portion of profit and send it to process 2. Process 2 on that will add some profit and will send it to finished goods. Which means profit element is over here. There over here. But for process 2, outsider is sending no. For process 2, outsider is sending no. So whatever the expense incurred in process 1 account, everything is cost only. Everything is cost only. How the profit element of the organization will be there in the process 2? Sorry, process 1. Process 2, yes sir, it will be there. Why sir? Because process 1 is of our organization only. Process 1's profit will be there in the process 2. In finished goods, process 1 as well as process 2 profit will be there. But in the process 1, only and only cost will be there, because profit whatever is there in the cost of process 1 is not of organization, that is of outsider. That is of outsider. Okay. So nothing is there in here. Process 2 they have given, finished goods they have given. Listen here. Output of process 1 is transferred to process 2 at 25% profit on transfer price. Transfer price means price at which one process or one department sends the product to other department. Okay. Basically, you can keep it as selling price. They are telling 25% on selling price, which means 33.33% on cost. 33.33% on cost. Output of process 2 is transferred to finished goods at 20% profit on the transfer price. 20% profit on selling price, which means 25% on cost. Stock in process is valued at prime cost. Very important line. Very important line. Try to understand. We are transferring our stock, closing stock is valued on the basis of prime cost. Process cost is valued at the closing stock is valued at the process of prime cost. Finished stock is valued at the price at which it is received from the process 2. So finished stock is valued at what price, sir? At what it is received from the process 2. Great. So closing stock of finished goods is valued at price at which it is received from the process 2. But process 2's closing stock and process 1's closing stock will be valued on the basis of prime cost. On the basis of prime cost. Sales during the period is 140,000. Sales during the period is 140,000. Great. Prepare a process cost accounts and finished goods account showing the profit element in each stage. So guys, one thing you have to remember here, whenever they give a inter-process profit, the table or the process account what we are going to prepare, we are going to prepare it with 3 columns. We are going to prepare it with 3 columns. One is for amount, one is for cost, one is for profit. One is for amount, one is for cost, and one is for profit. Sir, what are those, sir? That I will explain. Don't worry. First we'll see this. Okay. So this will be the format of your process account. You should consider the total column, cost column, profit column. We are required to show the split. Okay, sir. Great. Easily we'll start with the process one account. Guys, try to understand one more thing. Costing is your practical paper. Few people will do this thing. Sir, in that question, one adjustment I didn't understand, sir. So I left the question and came. Wow. Guys, try to understand. There is a stepwise marking. Even a 1 mark can change your whole attempt. So don't become lazy at any point of time in your examination. Struggle. That's fine. 1 mark. Sir, for that 1 mark I have to do 2 pages. Sir, do it. Because you spent around, let's say, 1,000 pages, or you literally worked out in 1,000 pages when you were doing like working out for the 3 months. Now the 2 pages is going to give you a fruit for that 1,000 pages of your workout. So try to understand, guys. Whatever it is, 1 mark, sir, it takes 2 pages. Do it. What else you have to do? Right? So don't become lazy at any point of time. Stepwise marking is there. That's fine. Sir, in the 10 marks question, 2 adjustments I don't know. Other 8 you know, no. If you get 4 marks also, it is going to play a different role. Try to understand. Okay. So please, guys, don't become lazy at any point. Try to get maximum out of it. Okay. So listen here now. Process one account. Just first we'll fill in the total amount column. Nothing else. Straight away we'll fill in the total amount column. Process 1, opening stock 7,500. Direct material 15,000. Direct wages 11,200. Okay. Factory overhead is there. Before that we want a prime cost. So we'll consider the prime cost, which will come to 33,700. Right? Will come to 33,700. Next. Factory overhead is there, 10,500. So factory overhead 10,500. Closing stock is there, 3,700. Closing stock is there, 3,700. Done, sir. Now listen. Whatever is there in the process one cost, debit side, expenses, everything is at cost. Because no organization's profit is included in that. I told why. Because for process one, cost is nothing but what we are paying to the outsider. So outsider's profit, how it will become our profit? So profit column will be nothing. So opening stock 7,500, everything is cost only. Direct material, everything is cost only. Direct wages, everything is cost only. Prime cost, everything is cost only. Overhead, everything is cost only. So we'll get a total cost over here. Now try to understand. Closing stock 3,700, everything is cost. Which means, try to understand, guys. Total cost is 44,200. In that, 3,700 is with us only. 3,700 is with us only. So how much is the cost of transfer? Cost of transfer, guys, cost of transfer, not your value. Cost 40,500 rupees. 40,500 is the cost of transfer. Cost of transfer. Okay, sir. Okay. First, what we did, we took the total columns, then we filled the cost. We got to know how much is our cost of expense, and we got to know how much is our cost of closing stock. So 40,500 is there. Now try to understand over here. Output of process 1 is transferred at 25% profit on transfer price, which means 33.33 on cost. So 40,500 plus 33.33 percentage, which will be 40,500 plus 40,500 plus 33.333333 percentage will give you around 54,000. Around 54,000. So try to understand one thing. The amount at which we are transferring it to the next process is 54,000, which is nothing but cost of 40,500. Cost of 40,500 and profit element of 13,500. Cost of 40,500. This element of 13,500 and profit, of course, we are going to book it in the debit side. Total 13,500. Every profit is ours only. That is process 1's profit only. So everything will come in the profit column. This is how we have done the process 1 account. Now we are going to the important account, process 2 account. We are going to important account, process 2 account. We took the opening stock, sir. Yes. How much is transferred from process 2? 54,000. Array, that cost and profit column for the time being leave as it is. Don't touch it. Okay. Direct material 15,750. Direct wages 11,250. Prime cost 90,000. Correct? Prime cost 90,000. Overhead 4,500. Total cost is coming to 94,500. Total cost is coming is 94,500. Done, sir. Done. Now, closing stock. How much closing stock they are telling, sir? Closing stock they are telling it as 4,500. Amount column I will write closing stock as 4,500. Amount column I will write it as closing stock as 4,500. Sir, cost also can we write it as 4,500? The answer is no. Why, sir? Because closing stock of process 2 is nothing but opening stock what was there in the process 2 plus what got introduced from process 1 and what is remaining in the closing stock, which means, don't you think all these three items has a profit element from the process 1? Yes, sir. Which means it is very clear that for the organization, of course, for the process 2, cost is 4,500 only. I mean, the selling price or transfer price only. But for the overall organization point of view, this is not the cost. In this scenario, what you should do, sir? Listen here what they are telling. They are telling inter-process profit in the opening stock is 1,500. So total is 9,000. In the profit element is 1,500. So cost is 7,500. You received 54,000 goods worth rupees from process 1. In that cost is 4,500. Profit is so much. Direct material you purchase from outsider, which is complete cost. Direct wages, complete cost. Prime cost we got to know. Out of 90,000 prime cost, 75,000 is cost. Out of 90,000 prime cost, 75,000 is cost. Guys, Guys, using the same information, can't we find out our closing stock? Why, sir? Because they are clearly mentioned it. They have clearly mentioned it. Boss, your closing stock will be valued on the basis of prime cost. Your closing stock will be valued on the basis of prime cost. So guys, when the value was 90,000, cost was 75,000. Correct? Now, in the closing stock, value is 4,500. Cost is question mark. Value is 4,500. Cost is question mark. 4,500 into 75,000 divided by 90,000. 3,750. So out of 4,500, guys, 3,750 is the cost. So the profit element in it is 750. Profit element in it is 750. Okay, sir. And one more thing here. What is it, sir? Try to understand, guys. Try to understand. Your total cost has become 94,500, where the cost element in it is 79,500 and profit portion in it is 15,000. Correct? Yes, sir. Now try to understand one thing. Your cost is 94,500, sir. Total is 94,500. Yes. In that, how much is the closing stock value? Closing stock value at the same price, including profit, is 4,500. So can I tell cost including profit of process 1 is transferred to finished goods is 90,000. Is transferred to finished goods is how much, sir? 90,000. Now what is it, sir? Output of process 2 is transferred to finished goods at 20% of the profit on transfer price, which is 25% on cost. So here the cost is how much, sir? Cost is 90,000. Plus 25%. 112,500. 112,500 is a transfer price. So for the finished goods, we are transferring at 112,500, where the profit element in it is 90,000 was cost, sir. In the process 2, cost was 19,000. We transferred to finished goods at 112,500, which means profit of particular process 2, only process 2 profit, excluding process 1 profit, only process 2 profit is 22,500. This I am going to book it as a profit. 22,500. Now guys, balancing figure will be profit over here. So the balancing figure will be cost here. This simple process to account is going to the finished goods. Opening stock they have given. In that cost how much, profit how much, they only have told. In process 2 how much we received at cost, profit, that also we know. Now what they are telling, sir? They are telling something like sales during the period is 140,000. So here I will take 140,000. Okay, sir. Profit element is how much in it? Profit element, let it be. But we know the closing stock, 11,250. In the amount column, we'll write 11,250. Okay. And we also know that closing stock of finished goods should be valued at what we received from process to account. What we received from process to account. So try to understand. Cost was 75,750 when total was 112,500. Now the total is 11,250. How much should be the cost? Cost is 7575. So the profit portion is 3675. 3675. Done, sir. Done. Now, guys, what was the cost? 90,000. In that, what was the cost of closing stock? 75757. So cost of finished goods sold is 82,425. So accordingly, all the balancing figure will be filled. All the balancing figure will be filled. Please solve it before going to examination. Solve this particular question before going to examination. Okay. Yes, sir. Now we'll be starting with equivalent units treatment. Why it is required, sir? See, everyone will tell why the FIFO, what you should do, LIFO, what you should do. You also know what to do. But the thing is, why to do? Correct. You don't know why to do. Why to do the weighted average? Why to do the equivalent units? Why to do the equivalent units? I will explain. Listen. Take a break of a minute. We'll start in a minute. Process this one, and we'll start in a minute. Equivalent units. Okay. Hey guys, whoever is watching the recorded one, put a timestamp, okay? Put a timestamp wherever possible. Do some social cause. Okay. Sir, why equivalent unit? Before telling why equivalent unit, I will tell you one story. What is it, sir? There are three friends. A, B, C. There are three friends A, B and C. Now, A was there in one restaurant. A was there in one restaurant. Okay. A was there in one restaurant. Now, A ordered a biryani. If you are a vegetarian, consider it as paneer biryani. If you are a non-vegetarian, consider it as chicken biryani. I mean, vegetarian, consider it as paneer pulao, and non-vegetarian, consider it as biryani. Okay, sir. Now, he ordered a biryani which was costing, let's say, 500 rupees for the ease of computation. He had the food. Now he paid the bill. Everything is done. 500. Everything is done. Now, B and C then came to restaurant. A was going out, then he saw B and C, then friends, no. So all of them went back to restaurant. B and C ordered a food costing rupees, let's say, ordered two more biryanis. Three biryanis they ordered. Okay. 3 biryanis they ordered, which costed them rupees 1,500. In this 3 biryani, already A had had a biryani, one biryani. So he had just 0.5 biryani. He just had 0.5 biryani, which means other 2.5 biryani other 2.5 biryani was eaten by our B and C. Okay, now the bill came. Bill is 1500. B and C telling we'll split the bill. Okay, great, split the bill. How much? 500 A, 500 B, 500 C. 500 A, 500 B, 500 C. Now A is like, hey, what nonsense you guys are doing? Why? What happened? Boss, out of 3 biryani, I had only 0.5 biryani. You guys had 2.5 biryani. Yeah. But still, why the cost is split into 500, 500, 500? Unfair, no? Yeah, unfair. So what we should do, sir? Try to understand. In this 1500, we are going to make them equivalent. How, sir? A, if you consider it as 1. B consumed twice of A. C consumed twice of A. Correct? Out of 3 biryanis. Or together I will write. A consumed 0.5. If I give it as 1, B and C together consumed 2.5, which means if you consider 0.51 as 1, 2.5 will be considered as 5. 6. So what you will do, sir? Now you will divide 500 by 6 and multiply by 1. This will be the cost of A. 500 divided by 6 into 5. This will be the cost of B and C. Now you bought A in equivalent to B and C, no? Or B and C you bought in equivalent to A and C, no? This is what the equivalent unit is all about. Sir, why, sir? You told the story, we understood. You told biryani, we understood. Midnight cravings also we got. But why, sir? Try to understand, guys. Always and always, whatever is there in the process, everything won't get processed completely. Always and always, whatever is there in the process, everything won't get processed completely. Agreed? Yes, sir, agreed. There will be opening stock, there will be closing stock. Yes, sir. Opening stock, we would have already incurred a cost of previous period. Also will incur a cost of current period. Then it will become finished. Now there is some newly introduced, which means last time it wasn't there. So cost of previous period will be there. The answer is no. Cost of current period will be there. The answer is yes. And it got finished. The answer is yes. This is second kind of item or a finished goods. Third one, newly introduced. The answer is yes. Cost of previous period is there. The answer is no. Cost of current year is there. The answer is yes. Is it transferred to finished? The answer is no. Why? Because it is not yet complete. Now during the period, cost is 10 lakh. Now my question is, will that be correct? If we divide this equally among these three kind of material, if we divide equally, will that be correct? The answer is no. Why, sir? Because this opening was there, no? opening was there, no, this cost of current period, it might not have considered or it might not have consumed as much as what got introduced during the period and finalized during the period, because already it was there in the process, which means already it would have incurred additional cost already and some other cost would have. Here everything is new, fresh. So of course here the cost is more than this, so you can't treat both as same, you can't take denominator as together. Here also this thing won't be same as this, because this got completed, this also got introduced during the period, this also got introduced during the period, but this got completed, this didn't get complete, which means yet to be incurred, cost is yet to be incurred in this process but not in this process. So always remember whatever is there in the opening, cost of opening, cost of introduced during the year and produced during the year, and cost of closing will not be same. That's the reason why you want equivalent calculation. Now I will show you that equivalent calculation. Guys, there are two methods for it. What is it, sir? FIFO method, weighted average method. FIFO method, weighted average method. FIFO method means what, sir? Here the assumption is what was there in the stock. That is finalized first. That is finished first. And remaining what got finished, that is from the introduced during the period. So what was there in the stock, that only went first. So whatever went later, that is nothing but from the fresh introduction, which means in the FIFO, closing stock will be treated as from the recent stock. But whereas weighted average, there is no differentiation as such. Okay, sir. We'll see what it is. With numbers only I will explain. See here, opening WIP is 1000 units, which is 60% complete. Which means it is already 60% complete. And to complete that 60%, we have incurred 1,10,000 already. Units introduced during the period is 10,000. So additional introduced during the period is 10,000. Cost is 19,30,000. So cost of this 10,000 unit is nothing but, sir, 19,30,000, and transfer to next process is 9,000. Closing WIP is 800, which is 75% complete. Normal loss is estimated at 10%. And of the total input, including units introduced during the beginning year, scrap realized is rupees 10. Scraps are 100% complete. Using FIFO, compute the equivalent. See here, one thing you have to remember here. First, whatever is there, it is 60% complete. So try to understand one thing. If at all one finished goods require 10 kg of material, 10 kg of some material, already this opening stock is having 6 kg of material, which means it is going to consider only 4 kg of material. It is going to consume only 4 kg of material. But whatever got introduced freshly and completed during the process, whole 10 kg it is going to consume. Okay. And whatever is there in the closing, that is 75% complete, which means generally it will consume 10 kg, but closing already it has consumed just 7.5 kg. Now you can't add cost of 10 kg for all the three. Of course, for this one I agree. This I will give weight as 1. But for the opening, I will treat opening is going to consider 4 kg, where introduced and completed during the period consuming 10 kg. I can tell opening is nothing but 40% of what it is. So when I try to compare opening with the introduced during the period, I'm going to convert it into equivalent units. Closing is 75% of the what is got introduced. Okay, so listen here. Input we take 1000, 10,000 units introduced during the period. Output as a FIFO method, in the output, first we think whatever was there in the opening that got produced during the year, 1000. And what was the equivalent unit, sir? That is 40% of what got produced during the year. That is 40% of what got produced during the year. Although it is 1000, it is equivalent to 400 of what got produced during the year. I repeat, although it is 1000 units, it is equivalent to 400 of current period introduced and completed. Sir, out of 9,000, 1000 is of opening, then 8,000 is of what is introduced during the period. We introduced 10,000, no? In that 8,000 got produced completely. So that is 8,000 into 100%, which will be 8,000. Done. Now, how many units is unaddressed, sir? 2,000 is unaddressed. In that 2,000, we know one thing. What is it, sir? See, here we are trying to take the denominator. Here we are trying to find out the denominator. That's it. So they are telling normal loss is 10%. So 11,000 is introduced minus 10%, 1,100. So 1,100 is a normal loss. Sir, how to treat the normal loss, sir? Don't consider it under a equivalent unit. Why, sir? If at all you consider it under equivalent unit, then your denominator will increase. In denominator, normal loss also will be there. So cost will get apportioned to normal loss also, which is wrong, no? Actually, cost should never get distributed to normal loss. It should get distributed to only good units. That is, it should get distributed to 9,900 equivalent units. Correct? 9,900 related units. Okay, sir. So always remember, while computing equivalent unit, if there is a normal loss, please ignore it while considering equivalent units. Abnormal loss, sir. Closing WIP is 800 and it is 75% complete. Sir, for opening you took the 40% balancing figure. Here 75. Why, sir? Opening 60% was already completed. Current period's resource it is using just 40%. Closing started with 0, completed 75, which means current period resource it got used 75%. Done. So abnormal, if they don't give how many percentage it is, it will be treated as 100%. Okay. Now try to understand. This 110 is completely relating to opening. Also, during the year, how much is our cost, sir? 19,30,000. 19,30,000. From this, how much is the normal loss recovery? Whenever they give a normal loss and cost, they divide and give material, labor, variable, overhead, etc. In that scenario, please reduce the scrap recovery from the material cost. Okay. Now 10 rupees is the scrap recovery. So how much is a normal loss? 1,100 into rupees 10, which is 11,000. You should reduce 11,000 from the total cost 19,30,000. 19,90,000. 19,90,000 we incurred to produce 9,100 equivalent units, which is 210.88. Now cost of transferred goods. There are two kind of goods getting transferred. What is it, sir? One out of the opening stock, two out of the introduced during the period. Opening stock how much, sir? 400, equivalent unit is 210.88. That is cost of current period. Also for this opening, last year we incurred some expense of 110 that will get added. Introduced straight away only this year cost this one. Closing, sir, closing equivalent unit is 100 units, so and so. Sorry, abnormal is so much, equivalent unit is so much. Simple. So FIFO like that, there are few questions, go through it. Okay. Sir, weighted average what it is, sir? Weighted average we are not going to differentiate between. Weighted average we are not going to differentiate between what is out of fresh issue, what is out of additional. What you will do, sir, instead, you will treat everything as same. You will treat everything as same. Then, sir, cost, very simple. Cost during the year is 19,30,000. For that, add the opening cost also, 110,000. Piece, no. This you divide by equivalent units. So, sir, how to arrive at equivalent units, sir? You introduced 11,000, opening 1,000, this one. But transferred, you are not going to differentiate between opening and introduced during the period. Whole 9,000 got completed 100%, equivalent unit is so much. Closing stock is 800, 75% complete, 600, abnormal loss is 100, so and so, so and so. Now equivalent unit is 9,700. Total cost, that is 20,40,000 minus scrap recovery 11,000, 20,29,000 shall be divided among 9,700, which means here in this 9,000 we didn't divide 1,000 and 8,000, which means the cost, additional cost of this 1,000 also got added to this 9,000. Additional cost of this 1,000 also got added to this 9,000. This is what the weighted average is all about. Okay. Using that data, you can find out, or you can prepare process account. You can prepare process account like this. Like this. These are the certain questions you have to go through, equivalent units and all. Okay. Equivalent units, all these aspects. Done, sir. Done. So that is your process account, few important aspects, that is equivalent units. Under weighted average how to do, under FIFO how to do, as well as your inter-process profit. Those two important questions we have discussed. I mean, of course, I didn't discuss in depth. Whatever is required to brush up the concept, if at all you studied already once, then it will surely brush up the concepts. So much I have discussed, right? So you have to practice it once again. And LMR question in the process costing is just 7 questions. Just 7 questions are there. Go through that. Okay. We'll take a break of 2 minutes and we'll jump to JPBP. And once JPBP won't take much time. Once the JPBP is done, then we'll go to, straight away we'll go to marginal costing. Then we'll go to standard costing. Then if time permits, we'll go to our service costing. Okay. Take a break of 2 minutes and we'll proceed. Yes. Now we'll start with joint product and byproduct. Sir, what do you mean by joint product and byproduct? Guys, try to understand this is nothing but a continuation of process costing. Okay. That is, you introduced some raw material. Let's say crude oil. Sir, what will happen, sir? Now, after processing to some extent, what happens is, now that will get split into different products. While introducing it was one product, but when it comes as an output, it is more than one product. Now this kind of product we call it as a joint product. Okay, so joint product is nothing but they are the two or more products separated in the course of same process. Sir, is it a co-process, sir? The answer is no. Co-product means what, sir? Different products. For example, you put some oil into process. It can become edible oil. It can become some cake, right? I mean waste. Now process is same. Oil process is same. But oil is, one is sunflower oil, one is mustard seeds oil. Now process is same, but the products are different. These are known as co-products. Same process is applied, but the product are different. That is co-products. But when one oil is introduced, let's say crude oil is introduced, it got divided into petrol, diesel, kerosene. Now guys, these are known as joint product. These are known as joint products. That is, joint products are two or more products separated in the course of same process. Sir, byproducts, let's say you introduce the sugar cane. Now you extracted a juice. Along with that, some wastage also you will get. No. Now this wastage, does that has any value? But very nominal, small value. Now that is byproduct. Any product recovered from the discarded material in the main process, that we call it as a main product. Byproduct. That we call it as a byproduct. Sir, how to treat the... Sir, so you have applied a crude oil, sir. Some point it got divided. Now whatever cost incurred till that point, what we call it as, sir, joint cost. Cost incurred till that point, what we call it as, sir, joint cost. Sir, the point at which it got split, that we call it as what, sir? Split off point. That point we call it as what, sir? Split off point. Now, sir, how to treat the byproduct? You have two options. If the value is more, boss, treat it like a joint product only. If that don't have value, nominal value, then NRV of byproduct should be reduced from the joint cost. Later joint cost could be apportioned between joint products. So what do you mean by byproduct, sir? Any product recovered from the discarded material in the main process. So the point at which joint product gets separated, it is known as split off point. The point at which joint product gets separated, that is known as split off point. Okay. Now, byproduct has a significant value, sir. Treat it as joint product. If that don't have significant value, reduce NRV of byproduct from the joint cost. Later, apportion or allocate a joint cost to joint products. Okay, sir. What are the different methods of apportioning the joint cost, sir? Physical unit method. Here what we will do, sir. See here. A coke manufacturing company produces the following product by using 5,000 tons of coal at 1,100 per ton into common process. Coke, tar, sulfate ammonia, benzol. So how much is introduced? 5,000. How much is output? 4,800. 4,800. So 200 is what, sir? Loss. 200 is what, sir? Loss. In that scenario, what we will do, sir? Nothing. Cost is how much, sir? 5,000 into 1,100. Joint cost is how much, sir? 5,000 into 1,100. So 5,000 into 1,100, your joint cost will come to rupees 55 lakhs. Yes, sir. This shall be apportioned between these four units in this ratio. In this ratio. Then automatically you can get value as per physical unit method. Physical unit method. And guys, remember one thing. Remember one thing. They might give something as a wastage here. Something as wastage here. Then what you have to do is apportion to everything. Then again wastage you should apportion to coke, tar, sulfate ammonia, benzol. Instead of doing all those drama, straight away apportion it on this value. Straight away apportion it to this value. Okay. Now going to the second one, that is average unit cost method. Average unit cost method. Here how, sir? See, find out the cost of the joint product A, B and C using the average unit cost method from the following. Pre-separation cost, that is your joint cost, is how much, sir? 60,000. Pre-separation cost or joint cost is how much, sir? 60,000. Now which are the products are there, sir? A, B, C, total 1,000. Now what I will do, I will find the average cost per unit. Rupees 60,000 divided by 1,000 units in total. Per unit it is rupees 60. Now joint cost I am going to apportion like 500 into 60, 200 into 60, 300 into 60. 500 into 60, 200 into 60, 300 into 60. Next is contribution method. Sir, contribution is nothing but your sales minus variable cost. Sales minus variable cost. See here. Find out the cost of using a contribution method. Sales they have given A 100 kg into rupees 60 per kg, which will come to around 6,000. B is around 120 into 30, which will come to rupees 3,600. Joint cost is divided into marginal cost 4,400 and fixed cost 3,900. Now marginal cost 4,400, how you can divide, sir? Divide it in the physical unit method. So 4,400 divided by 220, which will come to 20 rupees per kg. So here contribution per kg is 40 for A, 10 rupees for B. So contribution is how much, sir? In this ratio you can apportion the fixed cost. See here. In the ratio of 10:3, 4,000 and 1,200. So in the ratio of 10:3, you can divide the fixed joint cost. That is your which method? Contribution method. NRV method, one of the important method. NRV method is nothing but one of the important method. That is, you are going to divide it in the ratio of NRV. That is, sir, what do you mean by NRV, sir? NRV means nothing but selling price for the further processed. For example, once the joint product we got A, B and C. From the joint process we got A, B and C, no? Now you might further process A, further process B, further process C. Here you will incur separate cost. Here you don't incur joint cost. Here you will incur separate cost. Now from the selling price, when you reduce this further processing cost, whatever the answer we get, that is NRV. From the selling price, whatever, when you reduce the further processing cost, whatever answer we get, that is our NRV. That is our NRV. So listen here. Listen here. Decision making question is what we can expect from JPBP. Decision making question, whether to further process or no. All these kind of questions. Inorganic chemicals purchases salt and processes it into more refined products such as caustic soda, chlorine and PVC. In the month of July, inorganic chemical purchased a salt for 40,000. So joint cost is how much, sir? Joint cost is 40,000. Conversion cost is 60,000. Material 40, conversion 60. Total joint cost is rupees 1 lakh up to split off point. Up to split off point rupees 1 lakh. So joint cost is rupees 1 lakh. Great. At which two saleable products were produced. Two saleable, that is chlorine and PVC. Sorry, chlorine and caustic soda. We got caustic soda and we got chlorine, and they are telling chlorine can be further processed into PVC. Chlorine can be further processed into PVC. So PVC is not a joint product. PVC is not a joint product. It could be further processed. When you further process the chlorine, then you will get a PVC. Done. July production information they have given. Caustic soda you produce 1200, chlorine 800, PVC 500. Which you mean? What do you mean by this, sir? 800 chlorine we reprocessed it and we got 500 PVC. When we reprocessed 800 chlorine, we got PVC of 500. All 800 tons of chlorine could be further processed at an incremental cost of 20,000, which means the extra cost you incur to further process is 20,000. Further processing cost is how much, sir? 20,000 to yield 500 tons of PVC. There was no beginning and ending inventory. There is an active market for chlorine. Wow. Inorganic chemical could have sold all its July chlorine at 75. So if at all inorganic wanted to sell the chlorine itself, instead of doing a PVC, it would have done just by receiving 75 rupees per kg of chlorine. Show how the joint cost of 1000 would be apportioned between chlorine and caustic soda. Sales value at split off point. Sales value at split off point is how much, sir? This is 1200 into 50. This one is 800 into 75. 1200 into 50, 60,000. 800 into 75, 60,000. So 1:1 ratio. So joint cost allocation will be 50,000, 50,000. 2. Physical unit method. That is 1200 and 800. 3:2. In the ratio of 3:2, 60 and 40. Next, estimated NRV. NRV, caustic soda, chlorine. Caustic soda, chlorine, but chlorine NRV is nothing but PVC. So listen here. Sales. Caustic soda will be 60,000 straight away, but chlorine 500 units of PVC at rupees 200, which will come to 1 lakh. Further processing cost. Caustic soda you never further processed, so nothing, but chlorine 20,000, so it will become 60,000, 80,000. In that ratio you can allocate. They're asking, live swimming pool product offers to purchase 800 tons of chlorine in August for 75 rupees. This means there is no PVC. Whether you should further process or whether you should no. Very simple, guys. Very simple. Whether by further processing PVC, if you are able to make the additional profit, go for it. If at all it won't give you additional profit, don't go for it. Very simple. How to ascertain, sir, whether it is going to give additional profit or no? Very simple. Guys, how much extra sales you will make? If at all you sell the chlorine itself, then you are making 60,000. Correct. If you sell the PVC, then how much you will make, sir? 500 into 200, 1 lakh. If you sell the PVC, you will be making 1 lakh, which means extra sales what you generated is 40,000. However, to generate this extra sales, you incurred extra cost of 20,000. Okay, fine, no worries. Still 20,000 extra profit you generated. So better don't accept the offer. So accepting this offer curbs the operating income by 20,000. This is how you should treat. Done, sir. like this they have given few questions, and here this question is very simple guys, very simple. All these questions are very simple. Go through these ones. Buttery butter and all. Go all this, like go through all these things. And guys, question number 4 is bit different. Practical problem, question number 4 is bit different. Why different, sir? Try to understand. They told A, they told B, they told C. But they didn't tell whether A is further processed or no. They didn't tell whether A is further processed or no. So to arrive at a NRV, it's your choice. It's your choice to further process A or no. So for that, what you will do, you will check if at all you further process, what will be the profit of A. If you don't further process, what will be the profit of A? Whichever gets highest, then that you will choose. So this is one of the different kind of question. This is one of the different kind of question. B and C, they are telling anyhow you have to further process, but A, they are not telling anything whether to further process or no. So that is left to you guys. That is left to you guys whether to further process it or no. So this is all about your joint product byproduct. This is all about your joint product byproduct. With that, majority of the things we have completed. Now we are going to marginal costing and standard costing. Now we are going to marginal costing and standard costing. So there, please make sure you take decision making based on the, by further processing, how much extra revenue I will earn, how much extra cost I will spend. If the extra cost is more than, incremental cost is more than incremental revenue, don't accept. If the incremental cost is less than incremental revenue, please accept the offer. That way you should do it. So we can straight away start with marginal costing now, most expected chapter, but still yet easier one. I don't know why students will get confused in this. No worries, we'll see. This one we'll take it slowly. It's just 140. Yes, we got so much time. Don't worry, 140. So we got majorly 2 chapters to complete now. That's it. Marginal as well as standard. After that, I will explain how the service costing will work. Right? Then we can wind up the session. Budget you can look at your own. Look on your own. Right? Yes. Now, your subject tells guys, your subject which is having 15 chapters, try to understand. Last 3 chapters are there, no? Last 3 chapters. That is marginal costing, standard costing, budgetary control. Marginal costing, standard costing, budgetary control. Actually, they are not costing concepts at all. What are you talking, sir? They are management accounting concept. That's why the subject is known as cost and management accounting. So till the 12th chapter, whatever you learn is costing. That is ascertainment of the cost. From the 13, 14, 15, what you learn is nothing but not ascertainment of cost. It is a technique of making decision by the management. These 3 are not the ascertainment of cost. These 3 are nothing but techniques of making cost. Decision. So in that first, what we are going to discuss is marginal costing. So marginal costing, sir, is it a method or technique of costing, sir? It is not a method of ascertaining the cost. Just like your batch costing, unit costing and all. This is clearly a technique of costing. It is clearly a technique of costing which helps the management in decision making. Okay, sir. Sir, what do you mean by marginal cost, sir? Additional cost what you incur to produce one more unit in simple variable cost. In simple, variable cost. So cost you can, on the basis of behavior, you can divide it into two: variable cost, fixed cost. Variable cost, fixed cost. What do you mean by variable cost, sir? Variable cost is nothing but a cost which you incur or which changes along with the output. Fixed cost is going to be constant. Fixed cost is going to be constant. Sir, in the decision making, do variable cost has an impact? Yes. Variable cost has an impact. Fixed cost, sir. Fixed cost we are going to divide it into two: sunk cost and relevant cost. Sunk cost and relevant cost. What do you mean by sunk cost, sir? Already incurred, you can't change. Already incurred, you can't change. Sunk, gone. Whether, for example, now I am a manufacturer producing 10,000 units. Producing 10,000 units. Okay. Now I'm planning to produce 15,000 units. Now the question is whether to produce or no. Now variable cost is having impact, sir, of course, because for this 5,000 extra units, extra cost is there. So variable cost has impact. Whether fixed cost has impact, sir, sunk cost has no impact. Sunk cost has no impact. Why, sir? Because it is already incurred. For example, I wanted one factory. I already constructed a factory by paying some n number of money. Now, whether you produce 15,000 or no, it has nothing to do with that. So sunk cost has no impact on the decision making, whereas in fixed cost also relevant cost will be there, that will be having impact on decision making. For example, now to produce this 15,000, you have to buy one new machinery which will cost you 6 lakh. Whether if at all you want to produce, you are going to incur this. If at all you don't want to produce, you are not going to incur, which means this is having relevance. In decision making. So fixed cost, which is relevant cost, has an impact in decision making. Sir, in marginal costing, only variable cost is considered for computation of cost of production. So the value of inventory includes variable production cost. Try to understand, guys. If you remember, generally what we used to do, prime cost plus factory overhead. We used to find the cost of production. Correct? Cost of production. Factory overhead used to have two things: variable overhead, fixed overhead. Which means under absorption method, your cost of production includes both variable overhead as well as fixed overhead of production. But in marginal, what we will do, sir, it consists of only prime cost, direct expenses, plus variable factory overhead. That will be your cost of production. So based on the cost of production only, your value of inventory will change. So always remember, under absorption, value of inventory will include both fixed overhead as well as variable overhead of production, whereas under marginal costing, it includes only and only variable overhead. See, whenever they don't give the stock related information, decision making could be done using this table. Which table, sir? Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you profit. Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you profit. So, sir, what do you mean by contribution? Sir, contribution is nothing but portion of sales. Which is going to contribute towards recovery of the fixed cost and profit. And provides us a profit. That portion of sales we call it as contribution. Contribution is nothing but portion of sales which contribute towards recovery of fixed cost and gaining some profit. Sir, PV ratio or contribution ratio means what, sir? Contribution by sales into 100 will give you PV ratio or contribution ratio. Variable cost percentage ratio means out of sales, how much is variable cost? That is variable cost divided by sales into 100. Or you can tell 1 minus PV ratio. Variable cost vary with the sold units but not vary with the selling price. Remember this thing. Variable cost changes with the output but not with the selling price. Change in the selling price has no impact on the variable cost, but change in the sales units has an impact in the variable cost. Sir, what do you mean by break-even point? Sir, break-even point is number of units sold or the amount of sales. Break-even point is number of units sold or the amount of sales at which we will make sure we are no profit, no loss. There will be no profit or no loss. Basically, your total cost will be equal to sales. Total cost will be equal to sales. Sir, how to arrive at that, sir? Using the table you can find. Using the table you can find, that is sales, if you take it as X, contribution will be some percentage of X, correct? Minus fixed cost should give you profit as 0. Then automatically we'll get a value of X. Basically, using the table only, you can ascertain the break-even sales in units as fixed cost divided by contribution per unit. If you want it in rupees, it will be fixed cost divided by PV ratio. Cash break-even sales means what, sir? Sales at which sales are equal to cash expenses. That is, for the consideration or for the calculation of break-even, fixed cost which are non-cash like depreciation and all won't be considered. Depreciation and all won't be considered. Sir, what do you mean by margin of safety, sir? Margin of safety is nothing but, guys, sales over and above the break-even sales. For example, if at all your actual sales is 10 lakh, break-even sales is 7 lakh, then the 3 lakh will be your margin of safety. 3 lakh will be your margin of safety, which means margin of safety, whatever the contribution of margin of safety will be there, no, everything will be profit. Why, sir? Because till the break-even sales, fixed cost is recovered. Till the break-even sales, fixed cost is recovered. Over and above break-even, there is no fixed cost to recover. So whatever sales amount comes after reducing a variable cost, because variable cost will be incurred. After variable cost, whatever is there, fixed cost will be 0. So your contribution will be directly equal to profit. So you can tell in case of margin of safety, whatever the contribution of margin of safety will be there, that itself will be the profit. So MNP Limited sold 275,000 units of product at 37.5. Variable cost is 17.5. Fixed costs are incurred uniformly throughout the year and amounting to rupees 35 lakh, including depreciation of 15. There is no beginning. So BEP, you can do it like this. Break-even point, we don't know how many units. So I took it as F for the break-even point, and for cash break-even point, I took it as A. And profit, I took it as 0. Accordingly, when I solve, I will get how much is my break-even point. Okay. All these things we can solve it that way only. All these things we can solve it in that way only. Okay. So using that simple formula, you can calculate everything using the table. Using the table, you can calculate each and everything, guys. Nothing much will be there. This question is nice question. This question is nice question. We are going to discuss this 12th one. See, there is something called as key limiting factor. What do you mean by key limiting factor, sir? What do you mean by key limiting factor? Guys, this resource will be scarce. I mean, you don't have enough resource. This will be scarce. In that scenario, to make the decision, we consider this as key limiting factor. For example, you got A, product B. Product A you got, product B you got. Demand. For product A, there is 10,000 units demand. For product B, there is 5,000 units demand. 10,000 units demand, 5,000 B. Sales rupees 10 per unit. B rupees 30 per unit. Variable cost rupees 4 per unit. Here it is rupees 15 per unit. Fixed cost together fixed cost is, let's say, around 1 lakh. Not 1 lakh. Let me make it as 30,000. Fixed cost, let me make it as 30,000. Now, or this variable cost, instead of rupees 4 and rupees 15, I will do something like this. Rupees 2 per hour, rupees 2 per hour, rupees 2 per hour, rupees 2 per hour. Labor hours per unit. A need 2 hours of labor, B need 6 hours of labor. A needs 2 hours of labor, B need 6 hours of labor. Now the question is whether A to produce or B to produce. Whether should you produce A or should you produce B? The question is whether should we produce A or should we produce B? Right? So decision making question. Very simple, sir. Do one thing. Produce both, no? What? Yeah, produce both. What is there in that? See, your sales will become 1 lakh. A sales will become 1 lakh. B sales will become 1,50,000. Yes. Minus variable cost. Variable cost is like 2 rupees per hour, and A is considering like taking 2 hours of labor, so around 4 rupees per unit. So this will come around 40,000. Yes. And B around taking 6 hours, 12 rupees. So 12 into 5,000, it will come to around 60,000. Yes. So both are giving positive contribution. So decision making here will be depending upon contribution, because fixed cost is sunk. It has nothing to do with decision. So this is giving 60,000 positive. This is giving 90,000 positive. Why you are waiting? Together you can make a profit of 150 minus 30, 120,000. Do it no, sir. Do it no, sir. What's your problem? Produce both A and B. Produce both A and B. Now you can produce both A and B because we are assuming labor hour is not scarce or labor hour is not limited. Now I want to add one more line. Small line I will add. What is it, sir? What is it, sir? 20,000 or 30,000. Let's say labor hour available is 40,000 hours. Labor hours available is 40,000 hours. Now you produce both. Can you produce? Let's see. A, to produce 10,000 units, you need 20,000 hours. You need 20,000 hours. To produce B, you need 30,000 hours. 30,000 hours. Together you have to have 50,000 hours. But do you have 50,000 hours? The answer is no, sir. We don't have 50,000 hours. In that scenario now, whether how many units of A to be sold, how many units of B to be sold, how many units of A to be sold, how many units of B to be sold. In that scenario, guys, in that scenario, what you should do is you should calculate the contribution per limiting factor. You should calculate the contribution per limiting factor, and then whichever the unit gives you more contribution per limiting factor, that how much ever possible you produce, you rank and produce. See how, sir? A, how much is contribution per unit? How much is contribution per unit? See, variable cost is 2 rupees per hour, 2 hours, 4 rupees. So 10 rupees, 6 rupees. 6 rupees per unit. Correct? B, around 6 into 12, around 18 rupees. 18 rupees per unit. Or let me make it 8 hours. Let me make it simple. Let me make it 8 hours. Let me make it 8 hours. Now, how much is your variable cost? 16 rupees. So it will become 14 rupees. Rupees 14 per unit. Now, as the labor hour is the key limiting factor, here, whichever gives more contribution per unit of labor hour, we are going to consider it as a rank number 1. The other one will be rank number 2. How, sir? Here contribution per labor hour. For 2 hours you are able to make 6 rupees. Per hour you will make 3 rupees. Here 1 hour usage of labor is giving us a contribution of 3 rupees. In this one, to make profit of 40 or to make contribution of 14 rupees, to make contribution of 14 rupees, how many hours you are spending, sir? 8 hours you are spending, which means per hour it is giving you 1.75. Per hour it is giving you 1.75, which means I am going to rank A as 1, B as 2. I am going to rank A as 1, B as 2. In that scenario, now I will produce A how much ever is possible. A, how much is required, sir? 10,000 units, 2 hours is required, so which will come to 20,000 hours. Which will come to 20,000 hours. Still, how many more hours are remaining? 20,000 more hours are remaining. So B, in the 20,000, how much ever is possible, that much I will produce. That is 20,000 divided by 8 hours. Around 2,500. 20,000 divided by 8, 2,500 units. So B, I can't produce 10,000 5,000 units. I am going to produce 2,500. Sir. Again, can you just brief what we have done? Yes, guys. Whenever any resource is limited, that resource we call it as key limiting factor. So whenever question is going to be like key limiting factor, what you should do is you should find out how much is the contribution you are making for that key limiting factor. How much contribution you are making for that key limiting factor, and once you calculate how much is the contribution for the key limiting factor, then rank it based on highest contribution, and accordingly you produce. First you produce rank 1. If still the key limiting factor is remaining, produce rank 2. If still the key limiting factor is, then produce next rank, like that. Till that gets exhausted, you can produce. And I'm expecting this kind of questions in your examination. That is question on key limiting factor. And listen here. This kind of question is also nice. Here also one more kind of question is there. Concentrate. Illustration number 12. Illustration number 12. X Limited supplies spare parts to an aircraft company Y Limited. The production capacity of X Limited facilitates production of any one spare part for a particular period of time. So you can't produce both. You can't produce two different spare parts. Either you can produce part A or you can produce part 2. And two different they have given per unit. Alloy required per unit of A is 1.6 kg, per unit of B is 1.6 kg. So alloy usage both are using same. Machine time, P requires 0.6, 0.25, Q requires 0.5, 0.55, and target price is 145 and 115. Target price is 145 and 115, and R's available. Machine P is available to the extent of 4000, machine Q is available 4500. So here these two are limiting along with the alloy. Alloy is also limiting. Alloy is also limiting. Okay, sir. Done. And always remember, guys, always remember, your factory capacity is to produce 10,000 units. Your demand is 8,000 units. How much will you produce? You will produce how much your demand is, 8,000. Your factory capacity is 10,000. Demand is 14,000. How much you can produce? 10,000 only. Because your factory capacity is only so much. So lower of your demand and production capacity you are going to select. Lower of your demand and production capacity you are going to select. Okay, leave that. Come here. Identify the spare part which will optimize the contribution at a offered price. At a offered price which will optimize a offered. Let's see. Listen. Alloy. Both use 1.6, 1.6. So how many units of A can be produced? 13,000 divided by 1.6. B can be produced 13,000 divided by 1.6. So on the basis of alloy usage, 8125 of A, 8125 of B could be produced. Okay. Sir, what about machine time, machine P, sir? What about machine P? Machine P, 1 unit of A will take 0.6 hours. So 4000 divided by 0.6, 4000 divided by 0.25. So using the machine P, product A you can produce is 6666.67, B is 16,000. Machine Q 0.5 and 0.55, based on that 9,000. Now try to understand. Alloy A you take. Alloy you can produce 8125. But once you went to machine Q, once you went to machine P, then maximum you can produce is 6666. So if at all you use alloy of 13,000 also, during the year you can manufacture only 6666.67, because machine P can produce only so much during the year. And machine Q 9,000 it can produce, but we don't have raw material relating to so much. At the same time, machine P is also not there, which means least of these three could be produced. If at all you can select 8125, machine Q is there, but machine P availability is not there. If you select 9,000, so much raw material also we don't have, so much machine P also we don't have. When you go to part B, alloy wise 8125, machine P wise 16,000, but machine Q wise 8181, which means machine wise both are enough, but alloy only we have limited. So least of these three, 8125 we can produce. So accordingly I will take sales, I will take variable cost, which will give me more contribution, I will select that. Okay, this is how you are going to do. Whenever they give limiting factor, more than one limiting factor, whichever is minimum, that only you can produce, not everything. Also, if the target price is reduced by 10% and offer 60 rupees for unutilized machine hours, then which one you will select? So your sales will be reduced by for 145 minus 10%, 115 minus 1%, 10%, but they are asking only for the machine A, part A, right? And also they are telling for the R's you are not utilizing. See, machine P you are completely utilizing, no doubt in that. But machine Q you are not utilizing completely. Machine Q you are not utilizing completely. So that is how much, that's what they are going to ask. Okay. And there is something called as combined contribution. This is also one of the important question. Try to understand, guys. Try to understand. Product or the company will be having two or more products. Company will be having two or more products. Okay, sir. So what? But fixed cost will be one only. Okay. So what? Nothing. You have to ascertain what is a break-even point. Sir, break-even point of product, for example, in the given question. See there. The product mix of Gamma Limited they have given. Product mix of Gamma they have given. Unit M 54,000 unit, N 18,000 units. Selling price they have given, variable cost they have given. And find the break-even point in units if the company discontinues product M and replaces it with O, and the quantity of O is 9,000. So M whatever they have given, that is nonsense, no use. O 9,000. Selling price is 18, variable cost is 9, fixed cost is 15,000. Okay, sir. We'll ascertain the break-even. Okay, ascertain. How? For break-even point, you need fixed cost, no? Do you know that separate fixed cost for N and O? Of course you don't know. M you ignore. M is gone now. N and O, do you know the separate fixed cost? The answer is big no. In that scenario, what you should do, sir? Try to understand. I told you you can arrive at that formula using the table. I don't have time to derive the formula and all now. That's why I told the formula. Fixed cost divided by contribution will give you break-even point in units. Correct? Now, here, whenever the situation is like more than one product is there, but fixed cost is one only, they are asking break-even, then this contribution, please replace it with combined contribution. Sir, combined contribution, what you are going to do, sir? Combined contribution, what you will do, sir? Nothing, guys. You have to take the product mix, that is sales ratio, quantity wise sales ratio, and contribution also. Then when you multiply sales ratio into contribution, you will get a combined contribution. I will tell here. Listen here. What is the sales ratio between O and N, sir? 1:2. Sales ratio between O and N is 1:2. Not sales value ratio, unit wise. I am repeating again, unit wise. Contribution per unit is how much, sir? In O, the contribution per unit is rupees 9. In N, contribution per unit is rupees 10.5. Sir, why that and all, logic and all, I would have told if it's a regular class, but it's marathon, I can't tell that now. So in this scenario, what you should do, rupees 9 into 1/3 plus rupees 10.5 into 2/3. So I am going to calculate a combined contribution. Which is 10 rupees. Now I will divide fixed cost by 10 rupees. I will get 1500. 1500 is what, sir? Product O or product N together in the ratio of 2:1. So now divide the 1500 in the ratio of 2:1. N you have to sell 1000, O you have to sell 500. This is how you are going to do. This is how you are going to do. Okay. Sir, one thing is there, sir. What is it? What is it? Actually, if you see the ICA material, sir, whatever you told, yeah, we also agree. We also have done that way only. We got the answer also. Until we saw the last practice question. Until we saw the last practice question, whatever you told, in that way only we got, sir. That is, we used to take the fixed cost, sir. We used to take the fixed cost and we used to take the combined contribution. Then we used to arrive at break even point. So that we used to get. But in the 20th question, if you see, sir, 20th question, if you see, sir, there we are unable to calculate, sir, on that method. Why? We are getting different answer. Try to understand, guys. Here the sales mix what they have given. Sales mix what they have given. The sales mix is not on the sales unit mix. This is not the product mix. Unit wise, no. This is on the basis of sales value. This is on the basis of sales value. Sir, in that scenario, what to do, sir? We have to by heart that whatever the way how they have done, the answer is no. Then divide 60,000 no first. Divide 60,000 into 3. Divide 60,000 into 3. Sorry, 60 lakh into 3. A, B and C. Out of 60 lakh, A's portion of share is 40%, which is basically 24 lakh. Which is basically 24 lakh. Out of 60 lakh, B's portion is 35%. B's portion is 35%. That is 60 into 0.35. 21. 21 lakh. And this is 25%, which is 60 into 15. It should be 15. 15 lakh. This is sales. This is sales. You know the selling price? Yes, sir. 300, 400, 200. Yes. Now can you find out a sales quantity? Yes. How, sir? You know the sales, you know the selling price. So 24 lakh divided by 300 will give you 8,000. 21 lakh divided by 400 will give you 5250. 15 lakh divided by 200 will give you 7,500. Now using this find out the sales proportion. Using this will find out the sales proportion. Using this calculate the contribution and then multiply this sales proportion with this to arrive at a combined contribution. Then you will get a break even just like any other way. But here the mix what they have given, it was not on the unit based, it was on the sales volume based. Sales value based, not on the sales unit based. Okay, that's the reason. That is one. And we have two more things to discuss over here. What is it, sir? Two more method or two more things to discuss. That is nothing but shutdown cost. There is nothing but shutdown cost. Shutdown cost, shutdown cost. That is to decide whether to shut down or no. That is to decide whether to shut down or no. Peace, madam. Peace. Ninth one. Ninth one. Sir, what do you mean by shutdown cost, sir? What do you mean by shutdown cost? Guys, shutdown cost means if at all you shut down the business, still you have to incur some expense. That is shutdown. For example, let's say fixed cost is 10 lakh right now when you are running a business. If at all you stop the business, then your cost will be reduced to 2 lakh, which means it's not something like, boss, I'm not running my business, my cost is not there. No. There will be few costs which you have to incur. Let's say lease payment. As you agreed for so many years you have to make a payment if agreement tells so. So now this 2 lakh, if at all you shut down also, whatever you have to incur, then the 2 lakh will be known as shutdown cost. 2 lakh will be known as shutdown cost. Okay. Question arises as to, sir, whether to shut down the business or no. Whether to shut down the business or no. Listen here, everyone. Mr. X has 2 lakh rupees investment in his business. He wants 15% return on his money. So he's expecting around 30,000 returns. He's expecting a profit of how much, sir? 30,000. From an analysis of the recent cost figures, he finds that his variable cost of operating is 60% of sales, whereas fixed cost is 80,000 per year. Show the computation of the answer for the following years. What sales volume must be obtained to arrive at a break even? So pretty simple. Contribution will be 40%, correct? So let's say contribution at break even be 0.4 minus fixed cost is 80,000 will give us 0 as the answer. So X is equal to 20,000. Sorry, 2 lakh. X is equal to 2 lakh. So your break even sales, what you should achieve is 2 lakh. Simple. Yes, sir. What sale must be obtained to get a 15% return? Same. Let the sale be yes. So contribution is 0.4s. From that, if you reduce 80,000, you should get the answer as 30,000. So 0.4, 1,10,000 divided by 0.4, which will come to 275,000. 275,000. Done. Next, Mr. X estimates that even if he closed the doors of his business, he would incur 25,000 rupees as an expense per year. This is shutdown cost. At what sales would he be better off by locking his business? See, use your brains here. By running a business, you are making a loss of 10,000 rupees. Will you shut down the business or will you run the business? Will you shut down the business? Will you run the business? Sir, you are making loss, no, shut down the business. Guys, think. If at all you shut down the business, then your loss won't be 10,000. It will be 25,000. Why, sir? Because if you close the business, your shutdown cost is 25,000. So we'll make a loss of 25,000. Sir, if at all by running business, if I'm making a loss of 20,000, then better run the business, because if you don't run the business, your loss will be 25,000. If you run the business, your loss will be just 20,000. Sir, by running the business, if at all my loss is 30,000, then close the business. Why, sir? If at all you close the business, your loss will be restricted to 25,000. If you run, it will be 30,000. Sir, sir, what you told we understood, but why you told here? Simple. Guys, if at all your loss is less than shutdown cost, run the business. If at all your loss is more than shutdown cost, don't run the business. If at all your loss is less than shutdown cost, run the business, because your loss will be of course less than when you shut down. If at all your loss is more than the shutdown cost, then close the business and restrict your loss to shutdown cost. So if at all your shutdown cost is 25,000, if at all your shutdown cost is 25,000, when you should stop the business? Let's say if at all my loss goes beyond, if at all my loss goes beyond 25,000, then I should stop. Now we should calculate at what sales I will make a loss of 25,000. Let the sales which I make the loss of 25,000 be L. So contribution will be 0.4L. 0.4L. From that, if I reduce 80,000, I should get a loss of 25,000. I should get a loss of 25,000. Now 0.4L is equal to minus 25,000 plus 80,000 plus 80,000. So 0.4L is equal to 55,000. 0.4L is equal to 55,000. 55,000 divided by 0.4, 1,37,500. That is, if at all your sales is more than 137,500, no, better run the business, because your loss will be less than 25,000. If at all your sales is less than 137,500, no, your loss will be more than 25,000. So close the business. So what you should do, sir? Take the shutdown cost as the loss and ascertain how much should be the sales. If the sales is more than that, run the business. If the sale is less than that, close the business. That's the decision what you can do. See here. That's the decision what you can do. And one more thing, guys. One more thing. PV ratio, there is one more formula, okay? PV ratio, there is one more formula. That is change in profit divided by change in sales will give you PV ratio. If they give in question just sales and profit, two sales, two profit, then always remember change in profit divided by change in sales will give you PV ratio. Change in profit divided by change in sales will give you PV ratio. Okay. Now last one more concept is remaining. That is indifference point. We'll discuss that in 2 minutes. Give me a 2 minutes. We'll discuss that in a 2 minutes. Yes. Now we'll discuss about indifference point. Sir, what do you mean by indifference point? Sir, guys, indifference point is nothing but under two alternatives. Out of two alternatives, cost will remain same. Out of two alternatives, when you compare two alternatives, that is the level. Indifference point is the level at which when you compare two alternatives, your cost will remain same. Under both the alternatives, at some point your cost will be same under both the alternatives. That point we call it as indifference point, cost indifference point to be precise. See, I will show one example here. The following costs are the data for three alternative ways of processing a clerical work for the cases brought before the LC court system. So there is one court. Few cases are brought into that court. So these are the three alternatives available, and cost of those three alternatives is as follows. Okay, that is give me a second. That is manual, semi-automatic, fully automatic. Manual, semi-automatic, fully automatic. So under manual, 15,000 is fixed cost, 240 is variable cost. Under semi-automatic, around 45,000 is fixed, 140 is variable. Under fully automatic, 1,25,000 is fixed, 40 is variable. In this point, what you should do, sir, to find out a indifference point? To find out a indifference point, you should compare AB, BC, CA. You should compare AB, BC, CA. So indifference point means what, sir? Indifference point means point at which cost under two alternatives will be same. First you consider A and B. Number of cases at which cost will be same. Number of cases at which cost will be same will be P. So alternative A, that is variable cost is 240 per unit. Variable cost is 240 per unit. So it will become 240p plus fixed is 15,000. That should be equal to 140p plus 45,000. So when you solve it, you will get to know how much is your P. That is 300 cases. That is at 300 cases. At 300 cases, whenever you get a 300 cases, cost as per A as well as cost as per alternative B will remain same. Now compare B and C. Same way. C and A. Same way. Okay. And one point you have to remember, listen here. When the indifference point exists, if the units are less than the indifference point, the alternative with the lowest fixed cost will be taken, because anyhow variable cost will be less only because number of units are less. So better choose the alternative with the lower fixed cost. Alright, and when the units are more than IDP, then variable cost will keep on increasing. So better choose the alternative with the lower variable cost. So accordingly you are going to prepare one alternative like this. Okay. This is one of the important question. It might come in the examination. And we have one special question here. This we will be discussing now, and we'll be winding up the marginal costing, because almost everything is done in the marginal costing. If at all time permits, I forgot the attempt. There is one previous year examination question based on the limiting factor. Hectare, it is like you got around 200 hectare or 250 hectare, where you have to grow rice, maize, wheat, etc. So that question is there. That is very good question. Once go through that question. I forgot the attempt. In one of the attempts of the previous years, it is there in our class. If at all you are ArivuPro students, in our class we have solved that question. If you remember, if you are other than ArivuPro student, you would have already gone through previous year paper assumption. You would have found that question already. So please go through that question. Nice question it is. Because there, not only contribution per hectare you have to calculate. While ranking, you will rank that way. Also, after ranking, there is a limit on the maximum also. Because the other two alternative will be having minimum. You have to grow all the three. So one you have to take minimum, all other two you have to produce maximum, like that. It is something like that. It is there. Very good question. Go through that. So this is also one of the important question. Listen here. XY Limited makes two product, X and Y. Great. Whose respective fixed cost are F1 and F2? You don't know how much is fixed cost of X, fixed cost of Y, but it is F1 and F2. And contribution of Y is 1/5 less than the contribution of X. Which means if the contribution of X is 1, contribution Y will be 0.8. F1 plus F2 they are telling 1,50,000. Break even point of X is 1800 units. And 3000 unit is the indifference point between X and Y. That is cost of, here indifference point they are talking about profit indifference point, not cost indifference point. That is both will make equal profit at 3000 unit volume considering their respective fixed cost. Both will make the equal profit. So here indifference point is in terms of profit, not in cost. There is no inventory. Okay. Oh yeah, one more concept I left. Sorry. After this we are going to compare the absorption costing as well as marginal costing, income statement, preparation of income statement. Then marginal costing will get over. Then we'll go to standard costing. Okay. Listen here. We know that X product X fixed cost is F1. Product Y fixed cost is F2. And we know that F1 plus F2 is equal to 150,000. F1 plus F2 is equal to 150,000. Contribution of X is X only you take. Then Y will be 0.8X. Correct? Break even point of X is 1800 and indifference point is 3000. So at break even point, you know that contribution is equal to fixed cost. So contribution is 1800X is equal to F1. So F1 is 1800. At indifference point, contribution under 3000 units is a indifference point. 3000 into X, 3000X. Contribution under indifference point of Y, 3000 into 0.8X, which is 2400. F1, F2 is 150,000 minus F1. So accordingly, we will find out when you solve it, you will get how much is contribution, how much is fixed cost and all. Okay. Go through these things, guys. So this demand one question I have solved. I don't know which question it is, but yeah, very important. Like demand and capacity, both they will give. So you should decide which you can produce. Whichever is lower, that you can produce. Okay. Now I will show you this thing. Under marginal costing, what is the income statement? Under absorption costing, what is the income statement? See here, we'll take with the example only. Wonder Limited manufactures a single product, Zest. Great. The following figures are related to Zest for 1 year. Sales and production at 50%, you are able to sell and produce 400. 100%, you are able to sell 800 or produce 800. Sales 8 lakh, 16 lakh. Okay. Production overhead, there is a 3 lakh 20 variable, 640, 160. So try to understand for the marginal costing, to compute a no sound. What no sound? Hello? No sound. It is coming here. It is coming here. Yes. So fix this there. 160 is a fixed. So for the marginal costing, for the computation of the cost of production, only variable will be considered. Yes. So variable is how much? Variable is 320. So try to understand, guys. For the marginal costing, you will consider, for the marginal costing, cost of production, you will consider only and only variable cost of production, whereas for the absorption costing method, both you will consider variable as well as fixed. But are you going to consider fixed on the actual basis, sir? The answer is no. Then on what basis you will consider, sir? On the basis of absorption. Selling and distribution is there. Listen here. The normal level of activity for the year is 800 units. So absorption will be done on the basis of what, sir? Absorption will be done on the basis of normal capacity. So rupees 160,000 is for 800 units. Then accordingly we'll find the absorption rate. Okay. It is incurred evenly throughout the year, which means out of 160, each and every quarter it is 40,000 each. Actual. Okay. There was no opening stock and all, but the closing stock is there, 220, out of which 160 is sold, which means 60 is closing. They're asking you to compute the fixed production cost absorbed by Zest if the absorption costing is used. Calculate the under or over recovery of overhead. Calculate the profit using absorption costing. Calculate the profit using marginal costing. Go through it. Now, compute the fixed production cost absorbed. So, absorption rate will be based on budgeted. In budgeted also, what you should take, sir? Normal capacity. So budgeted production overhead is how much? 160,000, because they haven't given different. So that only will consider for actual, that only will consider for the budgeted. So 160,000 divided by how many units, sir? Normal units considered as 800. So per unit it will be around 200. 200 per unit. Correct? They are telling quarter. In the first quarter, how many units are produced? 220 units are produced. So how much you absorbed? 220 into, or rupees 200 into rupees, 220 units. 200 into 220 units. So 200 into 220 units. 200 into 220 units is how much, sir? Is how much, sir? 200 into 220, 44,000. It is 44,000. This is what we have absorbed. This is what we have absorbed. Whereas incurred is how much, sir? If you assume 160 as actual as well as budgeted, and if it is evenly occurred, so in the first quarter we incurred 40,000. We incurred 40,000 where we absorbed 44,000. Moral of the story, sir, 4,000 is over absorption. 4,000 is over absorption. Over recovery of 4,000. Calculate the profit using a absorption costing. Calculate the profit using a absorption costing. So in that scenario, guys, in that scenario, try to understand what is the difference between absorption costing and a marginal costing. I will show it in this statement only. Listen here. Absorption costing, sales revenue. How many units we sold? 160 units we sold. 2,000 rupees per unit, which will come to 3,20,000. Sir, how do you know that it is 2,000? Try to understand. When the units were 400, selling price is, or sales is 8 lakh, which means per unit you are selling at 2,000 only, of course. So sales, it is around 2,160, 320. Less cost. While arriving at cost now, sir, this variable 320 will be considered full. Variable will be considered like 320 is for 400, right? But we produced 220 for this question mark. Sir, what about the fixed, sir? Fixed we already showed you. In the absorption, we are going to take the absorbed overhead. In the absorption, we are going to take the absorbed overhead. So fixed absorbed overhead is 44,000. So 176 is your variable. Together it is 220. This is your cost of production. Cost of production is 220. For that opening stock, nothing. Closing stock will be valued at this rate. 220 divided by 220 into 60,000. You will get a cost of goods sold. Now, if it's a over absorption, you treated here more, right? So what you should do, sir, after COGS, you should adjust it. That is, you showed more expense there. Now reduce that expense. 4,000. Over absorption reduce, under absorption add. So selling and distribution, accordingly you will get a cost of sales profit. But if you go to marginal, you will take only variable cost and you will arrive at a cost of production. On that basis only you will consider closing stock. Then you will get cost of goods sold. From that you will reduce all the variable cost. Then you will get a contribution. From that reduce fixed cost including production cost. From that only you should reduce fixed cost including production cost. This is the difference between your absorption method and a marginal costing method. This is the difference between your absorptional method and the marginal costing method. With that, majority of the marginal costing concepts are clear, right? So kindly once go through as many questions as possible in the marginal costing. Okay, please go through that examination question. Which one, sir? That maize, paddy, wheat, that question. Yes. Now we'll do one thing. We'll take a break of 5 minutes. Yes, we'll start at 2:55. sharp 2:55, we'll start with our standard costing, the most awaited chapter, and might be the last chapter of the marathon. We'll see, depending upon the time availability. Yes, take a break of 5 minutes. We are starting at 2:55 a.m. We'll be starting at 2:55 a.m. So take a break of 5 minutes. Yes. Now we'll be starting with standard costing. Sir, what is standard costing? Sir, standard costing is nothing but technique. Technique in which we'll try to control the cost. Right? It is one of the technique of cost control. Here what we will do, sir, standard cost means nothing but a predetermined cost. Before the actual period starts only, we will determine some cost and we'll keep. Okay. And we try to make sure that whatever the actual cost we incur, that is well within the limit, well within that predetermined cost. Okay. So standard cost is nothing but that predetermined cost. So what is the process, sir? First we will set the standards. How much should be our cost, sir? Based on that, we will incur our cost. That is incurring actual cost. Then we will compare the standards with the actual. Then we'll compare the standards with the actuals. Then the deviation will be there. We will analyze. We'll analyze. And the deviation could be favorable deviation, adverse deviation. When it will be favorable, sir? When it will be favorable? When you spent less than what you planned for, favorable. When you spent more than what you planned for, adverse. Right? So that deviation, we will analyze why it is happening and we'll take the corrective measure. So for the sake of standard costing, guys, we are dividing our cost into three: material cost, labor cost, overhead. Material cost, labor cost, overhead. Give me a second. Material cost, labor cost, and overhead. Right? So overhead again further divided into variable overhead, fixed overhead. Variable overhead and fixed overhead. Done. Now we'll go one by one. Material cost variance. First we'll discuss about material cost variance. Before going to formula, I will just take you guys through one example. Okay. Let's say we are planning to do biryani now. We are planning to do what, sir? Biryani. So, to prepare one bucket of biryani, rice is 2 kg required, chicken 2 kg required, masala 0.5 kg required. Okay. At the rate of 150, 180, 200. 150, 180, 200. And you produced how many buckets, sir? You produced 600 buckets of biryani in actual. So standard, what we set the standard as, boss, to prepare one biryani, no? We are telling to our chef, boss, to prepare one bucket of biryani, use 2 kg of rice, 2 kg of chicken, 0.5 kg of masala. And we are telling our purchase manager, boss, chicken, rice, get it at 150 per kg, chicken 180 per kg, masala 200 per kg. We are telling our purchase manager, boss, 150 per kg rice you get, 180 per kg chicken you get, masala 200 per kg you get. How much? That we are not restricting. We are telling purchase manager, listen boss, whatever our chef tells, no, how much ever they ask, just get it. Don't question, just get it. We are asking our purchase manager not to question, just to get how much ever is the actual requirement is. How much ever our chef asks you to get it, get it. Okay, sir. Why not? Now, actually, our chef is using how much, sir? 1300 kg of chicken, 1300 kg of rice, 1100 kg of chicken, and 250 kg of masala. 250 kg of masala. Sir, price, sir, at what our purchase manager bought? He bought rice at 170. We asked you to get it at 150, but you got it at what, sir? Purchase manager, 170. Chicken, we asked you to get it at 180. You got it at what, sir? 190. Masala, we asked you to get it at 200. This is better. You got it at 160. Now, guys, you can't compare. You can't compare this figures with this figures. You can't compare this figures with this figure. Why, sir? Because this is for bucket. This is for 600 bucket. This is for 600 bucket. So what you should do, sir? What you should do, sir? Always and always remember, in standard costing, for the sake of comparison, your standard will be compared with actual. I agree, but which standard, sir? Standard for actual, not standard for standard. Standard for actual. You should compare standard for actual with the actual. What do you mean by that, sir? That is, standard is what, sir? Boss, to prepare 1 kg, you need 2 kgs of rice. So to prepare 600 buckets, how much rice is required? 1200 kg of rice is required. To prepare 1 bucket, you need 2 kg of chicken. Now, to prepare 600 buckets, how much of kg of rice chicken is required? 1200. Masala, to prepare 1 bucket, you need 0.5 kg of masala. But here you are preparing 600 bucket, you need 300 kg of masala. This is standard. This is what we are asking our chef to use. See, boss, to produce 600 kg of bucket, you should use rice of 1200, chicken of 1200, masala of 300. Okay. And we are asking our purchase manager to get rice at 150 per kg, chicken at 180 per kg, and masala at 200 per kg. Okay. Now, but actual, we are buying 1300 kg of rice. Our chef is using more. Oh my god. Chicken 100 kg less. Wow. Masala 300 we thought of using, but he is using only 250. Imagine about the biryani, no, gone only. But our purchase manager, we asked him to get it 150, he got it 170. We asked him to get it 180, he got it 190. We asked him to get it 200, he got it at 160. So, as per our plan, our cost must have been 4,56,000. As per our plan, our cost must have been 456,000, but our actual cost is 470,000. Our actual cost is 470,000. Our actual cost is 470,000, which means we are incurring 14,000 extra cost compared to standard. We are incurring 14,000 extra cost compared to standard. Now what we will do, we'll ask our chef, boss, come here. Yes, what is it? We thought our cost will be 456,000 for actual production. Okay. But it is going as 470,000. Yes. Why is it so? Chef, that is our production manager, will tell only one thing. What is it? Sir, ನಾನೇನು ಮಾಡಿಲ್ಲ ಸರ್, ನಂಗೇನು ಗೊತ್ತಿಲ್ಲ. ಇವರೆಲ್ಲ ತುಂಬಾ ಒಳ್ಳೆಯವರು. Right? Chef will tell one thing. What he tells, sir? Boss, I don't know anything. Whatever the extra cost is incurring because of the purchase manager. General manager will ask, what are you talking? See, sir, you asked him to purchase at 150. He is purchasing at 170. You asked him to purchase at 180. He is purchasing at 190. Because of that only cost is becoming more. We are like, is it? Yes, sir. Okay, we'll analyze. How we will analyze? He was responsible for price. Purchase manager was responsible for price. We'll see. How, sir? Boss, we asked you to get it 150 and you got it 170. So 20 rupees you paid extra. Into Should I take 1200 or should I take 1300? If you remember the first line which I told, I called my purchase manager and told, boss, listen, how much ever our chef ask, get it, which means actual. How much ever our chef ask, he asked for the actual output, so you should get it at a actual output. Actual input, actual quantity. So you are going to take the difference of 150 and 170 and you will multiply it with the actual quantity. So what is the material price variance formula, sir? Standard price minus actual price into actual quantity. Standard price minus actual price into actual quantity. Now we got to know that boss, 27,000 adversities. 27,000 adversities. Now, sir, 27,000 adverse. Give me a second. $27,000 adverse, but final adverse is just 14,000. Final adverse is just 14,000, but here we are getting how much adverse, sir? 27,000 adverse. Here we are getting how much adverse, sir? 27,000 adverse. Okay. Sir, then our chef might have done something good. What he would have done, sir? He would have used less quantity. We'll check. We'll call our chef and we'll ask. That is our production manager. Boss, you also varied a usage. Is it, sir? How, sir? See, we asked you to use 1200 kg of rice, but you actually use 1300. So 100 kg of rice you use more. But in price wise, what you should multiply? Chef will tell, boss, what do you mean by what you will multiply? You told you are going to get a rice at 150. So you should have got it at 150. I am not going to consider 170 and all. So for the sake of variation in the usage, we'll consider standard price, not the actual price. So usage variance will be standard quantity minus actual quantity into standard price. Now we are telling our chef, boss, you used more rice. Now the chef is telling, I used more rice because the quality was not good. Which means yield was not good. Sub-usage, yield was not good. Is it? Okay. We'll see. So yield, what you will do, sir? Fine, sir. Whatever you tell, I agree. Yield was not good. No. Fine. We'll do one thing. How much you considered? Or how much you consumed? 2650 you consumed. Okay. If at all, yield was not good. Quality was not good. You should have taken it or you should have consumed it in standard quantity only. So we'll do one thing. Actual quantity only, I will take it as total standard. Okay. And in the standard ratio. So actual quantity I am going to divide it in the standard ratio and I will arrive at a RSQ. Now I will tell my chef, listen boss, if everything was correct, you should have consumed RSQ. Correct? You should have consumed RSQ. And the difference is only due to quality, then your standard should not vary. So RSQ minus SQ into SP. Right? Whereas if at all you are not considering same ratio, you are using different mix, that is you should have used RSQ as per your one wish or your debate, or as per what to tell, As per whatever you are telling, you should have used RSQ, which is equal to AQ. But if at all you are not using, then it's not only because of the quality, it is also because of the yield. It is also because of the yield. So, sorry, mix, you are mixing a wrong amount. So, RSQ minus AQ into SP will give us mix variance. RSQ minus SQ into SP will give you yield variance. See, material cost variance, guys. Standard quantity into standard price. Standard quantity means standard quantity for actual output, right? Standard quantity into standard price minus actual quantity into actual price will give you a material cost variance that could be divided into two: price variance and usage variance. Price variance, who is responsible? Purchase manager is responsible. We asked him to get some number of units, actual quantity in the standard price, but he is getting at actual price. So he is responsible for difference between standard price minus actual price. Multiply it with what, sir? Of course, you have to multiply it with actual quantity because we asked him to get it at actual quantity. Okay. Usage variance, sir, our chef, production manager, he is using more. That is, we asked him to use standard quantity, but he is using it actual quantity. And rate, he is least bothered about at what our production manager is getting or purchase manager is getting. As a production manager, you told me you are going to get it at some value. You didn't get it at that value. So I am not involved in that. So you will tell, you told you are going to get it at standard price. I am considering standard price. So for the usage variance, it is standard quantity minus actual quantity into standard price. And material usage variance could be divided into two. That is material mix variance, material yield variance. So mix variance is like we are telling, okay boss, whatever you tell is correct. Actual quantity only will consider it as standard quantity in the standard ratio. That is nothing but revised standard. So you should have considered or you should have consumed so much now. But how much you are consuming? You are consuming actual quantity. So difference between RSQ, revised standard quantity, and standard quantity will give us mix variance, and standard quantity minus revised standard quantity will give us yield variance. Okay. And one more thing, guys. One more thing. Always and always remember, you should consider it for the standard for the actual output. Standard quantity for actual output, not actual input. This question, if you see, actual output is 182. So you should consider your standard for output of 182 after considering a normal loss. So your standard should be 202. In that standard ratio you divide and accordingly you do. In study mat they have done different way. You can do it in this way. Okay. Sir, labor variance, guys. Labor cost variance is pretty simple. We need two labors. Listen here. We need D, we need A. Okay. Standard are to produce one bucket of biryani, D should work for 1 hour, A should work for 2 hours. To produce one bucket of biryani, D should work for how many hours? 1 hour. A should work for how many hours? 2 hours. Standard rate is how much, sir? For D, we thought 20 rupees. For A, we thought 30 rupees. For D, we thought 20 rupees. For A, we thought how much? 30 rupees. Now it is standard hours. For producing 600 buckets of biryani, standard hour is 600 and 1200. Correct? But actual hours, how much we are paying, sir? Actual hours, what we are paying is 700 and 1100. 700 and 1100. And actual hours worked is how much, sir? 650 and 1080. So actual hours paid is 700, 1100. But actual hours worked is just 650 and 1080, which means difference between actual hours paid and actual hours worked is idle time. Difference between actual hours paid and actual hours worked is idle time. So try to understand. Cost variance is what, sir? Standard hours into standard rate minus actual hours into actual rate. Rate variance. Boss, we asked you to get D at what rate? Standard rate. You are getting at what rate? Actual rate. and your work has what? How many hours? Labor cost we ask, labor we ask, you should have got that. So rate variance is standard rate minus actual rate into actual hours paid. Actual hours paid. Idle time variance is idle time into standard rate. Idle time into standard rate. Efficiency is we ask them to work for the standard hours, but they are working for actual hours. If they have taken less than the actual hours, they are more efficient. Actual hours less than standard hour, more efficient. If they have taken actual hours more than standard hours, less efficient into standard rate. So efficiency will be due to yield. That is their capacity, production. They are not that good. Yield. Or it could be or it could be due to the usage of labor in a different way. You should have used using a D more than A more than D, like that. Okay, skilled more than semi-skilled, semi-skilled more than skilled, like that. So yield is nothing but revised standard hours minus standard hours into standard rate, whereas mix is nothing but revised standard hours minus actual hours worked into standard rate. So this is the labor rate variances. These are the labor cost variances. Kindly go through this. Now, overhead variance guys could be two. Overhead variance could be two. That is variable overhead, fixed overhead. But one thing you have to remember about overhead variance, that is overhead variance is nothing but under absorption or over absorption. Overhead variance is nothing but under absorption or over absorption. If it's a under absorption, it's a adverse. If it's a over absorption, it is a favorable. Because under absorption means you are recovering less from the final product, so it is adverse. Over absorption means you are recovering more from the final product, so it's a favorable. So always remember, overhead variance is pretty simple. Under or over absorption itself is nothing but a overhead variance. Yes, sir. Sir, how to arrive at under or over absorption, sir? Absorbed overhead minus actual overhead. Sir, absorbed overhead, how to arrive at, sir? If it's a unit basis, then units produced into recovery rate. How do you arrive at a recovery rate, sir? Budgeted overhead divided by budgeted output. That's what we have discussed in the overhead. If at all the absorption is hourly basis, then absorption should be done at standard hours for actual output. Standard hour, not actual hours. Standard hour for actual output. So overhead variance could be two. It could be variable overhead or it could be fixed overhead. Variable overhead is just like your labor cost only. Cost variance is nothing but absorbed overhead minus actual overhead. If the under absorption adverse, over absorption favorable, right? So that could be further divided into two. Expenditure variance, efficiency variance. Expenditure variance is nothing but just like labor rate variance. That is standard rate minus actual rate into actual hours. Whereas variable overhead efficiency variance is standard hour minus actual hour into recovery rate. That is standard rate. Okay. That is your variable. It has not much things are there. Guys, this kind of questions and all unknown figures will be there. No, you have to go through this. Actually, for this standard costing, no notes I will update. For standard costing, notes I will upload. Okay, only for standard costing and marginal costing. Only for these two chapters I am going to give a notes. Only for your standard costing and a marginal costing I am going to give a notes. Other than that, I'm not going to give a notes. Other than that, I'm not going to give a notes. Okay. Because this way of working is altogether a different. Way of working is altogether a different. Your standard and marginal, I have done it in a different way. So better I will share the notes. I will upload the notes for last minute revision as well as this one. Now listen here. Listen here. Your fixed overhead. Fixed overhead. One of the major one where majority of the students will get confused. Again, fixed overhead cost variance is pretty simple. How much you absorbed, boss, and how much you actually incurred. How much you absorbed, that is how much you recovered, minus how much you actually incurred. How much you absorbed minus how much you actually incurred. So how much is absorbed, sir? Standard hours for actual output or actual output if it's a unit basis. Hours basis, it is standard hours for actual output into recovery rate minus actual overhead. Minus actual overhead. That could be two things. That could be two things. One is expenditure variance, one more is volume variance. One is expenditure variance, one more is volume variance. Sir, expenditure variance is what, sir? Expenditure variance is what, sir? Give me a second. Expenditure variance is what, sir? Very simple, guys. Very simple. Try to understand. Expenditure variance is nothing but, boss, how much you planned. Let's say I have planned my planned overhead was 7 lakh. My planned overhead was 7 lakh. How much is your actual? Actual is 8 lakh. Actual is 8 lakh. Then this 1 lakh is there, no? Extra what you are paying. Extra what you are paying. That itself is your expenditure variance. That is budgeted overhead 7 lakh. Actual overhead 8 lakh. So 1 lakh is your adverse. Volume variance, sir. Volume variance, sir. Try to understand, guys. Your fixed overhead. The more and more unit we produce, better it is. The more and more units we produce, better it is. The less and less unit, it is not better. Why, sir? Why? Try to understand. Your fixed will be same. For example, now let's say this building, ArivuPro guys are paying around, let's say, 5 lakh as a rent. ArivuPro people are paying 5 lakh as a rent. Now, daily we can take 6 hours class. Daily we'll take 6 hours class on an average. But if at all we take 10 hours class, will the rent increase? The answer is no, sir. It will be 5 lakh only. But recovery increase? Of course, yes. Recovery increase? Of course, yes. So, tell me whether the more and more unit is better or the less and less unit is better. For the fixed overhead, always remember, more and more volume is better. More and more volume is better. Okay. Give me a second. I will take one example, wait. Then it will be clear for you guys. Listen here everyone. Look at this illustration. With this illustration I will explain. Boss, how much was your recovery rate? How much was your budgeted hour? Your budgeted hour was 15,000. Your budgeted hours was 15,000 hours. How much is your actual hours? 16,000. Leave. That has nothing to do. Now recovery rate. That is, your recovery rate was 15 lakh divided by 15,000. Rupees 100 per hour. Your recovery rate was rupees 100 per hour. Your recovery rate is rupees 100 per hour. Now try to understand. First, fixed overhead cost variance. That is nothing but under or over absorption. I already told you. How much you absorbed, sir? It will be based on the standard hours for actual output. Actual output is how much? 7,800 units. How much is the standard hour per unit? 2 hours. Into what is the recovery rate? 100. What is the recovery rate? 100. So it will be how much, sir? It will be 7,800 into 2 into 100, which will come to rupees 15,60,000. 15,60,000. 15,60,000. This is what, sir? This is what absorbed. How much is actual, sir? You are incurring 15,60,000. You are incurring 15,60,000, which means overhead cost variance is 0. Overhead cost variance is 0. Overhead cost variance is 0. That doesn't mean that there is no variance at all. It could be getting set off. See, overhead cost variance is nothing, 0. Now, try to understand. Overhead cost variance could be divided into 2. What are those, sir? Variable cost variance could be divided into 2. What are those, sir? Expenditure variance as well as volume variance. Expenditure variance and volume variance. What is expenditure variance, sir? How much you actually budgeted for? 15 lakhs. How much you actually incurred? 15,60,000. You planned for how much? 15. You incurred how much? 15,60,000. Moral of the story, 60,000 is your expenditure variance. Adverse or favorable, sir? Adverse. Why adverse, sir? Because what you planned was less than what you are incurring, which means you are incurring more. Done. Now, next one more is volume variance. That is, boss, you plan to recover 15,000 hours. You plan to recover how many hours? 15,000 hours. But you are able to recover how much? 7,800 into 2, which is around 15,600 hours. So, boss, you plan to recover 15,000 hours, but you are able to recover 15,600. Wow, you are working more, which is good as per fixed overhead. So, into recovery rate, it is 100. So, 600 into 100, which will be around 60,000 favorable. 60,000 favorable. So, your volume variance is 60,000 favorable because you plan to recover 15,000 hours, but you are able to recover 15,600 hours. So, automatically 60,000 is your favorable. Okay, sir. Now, volume variance, calendar information is not given. So, could be divided into 2. What is it, sir? Efficiency variance and capacity variance. What is efficiency variance, sir? Efficiency variance is pretty simple, guys. Efficiency variance is pretty simple. Efficiency means standard and actual. Correct? How much was your standard, sir? You are recovering 15,600 hours, but you are actually working for 16,000, which means you are not recovering as much as you worked for. You are not recovering as much as you worked for. If at all you worked efficiently, you would have recovered something more. So it is adverse. It is adverse. So it is adverse. So what is this 15,600, sir? This is your standard hour. 16,000 is actual hours into recovery rate. Into recovery rate. Done. Sir, this is your efficiency. We agree. Then one more is what, sir? One more is capacity. What do you mean by capacity, sir? Listen, we have given your opportunity to use our factory for 15,000 hours, correct? But you are using it for 16,000 hours. Wow, you are using more. You are using more, which means better. The more and more you use, the more and more the recovery. So capacity wise, you are exploiting the capacity, which is very good. So for capacity, the formula is budgeted minus actual. Budgeted minus actual. So that is what the formula is. That is what the formula is. Sir, everything was fine, sir. Everything was fine, sir. But, sir, we know cost variance. How to remember the formula? How to remember the formula? I will just show you how to remember the formula. Give me a second. How to remember the formula? Fixed. Guys, fixed cost overhead variance. Cost variance. That is nothing but under absorption or over absorption. No doubt in this. Correct? Also, it could be divided into two. It could be divided into two. What is it, sir? What is it, sir? Expenditure variance, volume variance. Expenditure variance, volume variance. Expenditure variance is pretty simple. Because how much was the amount you planned for? How much you are actually paying? How much is the amount you planned for? How much you are actually paying? Sir, volume is pretty simple. How many hours you plan to recover during the period? Of course, in the budgeted hours you are planned to recover. But in how many hours you are recovering? You are recovering it in the standard hours for actual output into recovery rate. Into recovery rate. Now, this could be due to two things. This could be due to two things. Exactly, sir. That is where we get confused. That is where we get confused. What is it, sir? One is due to efficiency. The other one is due to capacity. Efficiency is what, sir? You are recovering standard hours where you work for actual hours. Standard hour and actual hour is efficiency, no? Into recovery rate. Capacity is what, sir? We gave you budgeted hours, but you are working for actual hours. If you work more, it is good. If you work more, it is good. This is the capacity. Sir, how to remember this, sir? Expenditure variance, cost variance is fine, sir, but volume variance and efficiency capacity is a difficult thing, sir. How to remember this? Guys, you know, Dhoni used to use one bat. Mahendra Singh Dhoni used to use one bat called BAS. 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 Correct? He used to use one bat called BAS. Actually, guys, if at all you have a pets, you will be knowing. The doctor who take care of pets, the doctor who take care of pets, what is the degree they hold? They hold a degree called BVS, Bachelor in Veterinary Science. Bachelor in Veterinary Science. Guys, coastal, we call it as what? C, SCA, C, and cab, CAB. This is what the code word you can remember. First you write a BAS, then Bachelor of Veterinary Science, BVS, and C, SCA, that is C, and cab, CAB. Sir, why sir? Why sir? Try to understand. V means volume variance. Difference between budget and standard. Wow. Difference between budget and standard is volume variance. E means efficiency. Difference between standard and actual. Difference between standard and actual. C means capacity. Capacity. Difference between budgeted and actual. That's it. This is the way to remember. This is the way to remember. Best way to remember. Correct? Sir, in question if at all they give, calendar variance also, then what we should do, sir? Try to understand, guys. If at all they give calendar, for example, boss, whatever you planned is for 30 days, but due to some reasons you are not working for 30 days, then your efficiency, capacity and all, you can't calculate it for 30 days. Then sir, try to understand your efficiency pretty simple. Boss, how many hours you worked, how many hours you should have taken, standard and actual, that has nothing to do. But your capacity you are not using full, because of the days what you thought is not available. That is, you planned for 30 days, but actually it is how many days, sir? 28 days. You planned for 30 days, but it's 28 days. Now, not utilizing the full capacity, reason is two. One, capacity variance itself. One more is calendar variance. What is calendar variance, sir? Pretty simple. Boss, in 30 days, you plan to work for 30,000 hours. But now you are working for 28. So what you will do, you will revise your standard. Okay, boss, great. At least 28,000 you should have worked, no? At least 28,000 you should have recovered, no? Yes. Are you working that? We don't know. Let's calculate. Now, this 2,000 difference is there, no? Budgeted and revised budgeted. That we call it as calendar variance. The 2,000 difference, budgeted and revised budgeted, that we call it as calendar variance. Whereas now for the capacity usage variance, we can't consider 30,000, we should consider 28,000. So capacity variance will be revised budgeted hour minus actual hours. Revised budgeted hour minus actual hours. This is your capacity variance. With that, we have completed our standard costing. Okay. Yes, sir. Done. Now, quickly I will tell the service costing things, what and all you have to remember. In service costing, guys, that school question is there now. School question, science teacher, maths teacher, history, economics and maths. Maths teacher teaches in science as well as commerce, whereas economics teacher teaches in arts as well as commerce. That thing, that question you have to go through once, very important. Also, what else, sir? That school bus question for the 4 kilometers, less than 4 kilometers, more than 4 kilometers, charging half and full, that one. These two questions. And that one lorry question, penalty and all is there. Absolute ton kilometer as well as commercial ton kilometer. Absolute ton kilometer as well as commercial ton kilometer. That one you have to consider. That one you have to read and go. These three. And and toll question. In one examination, toll question is there, nice question. That is, while coming back, they will be not be charged full. Four-wheelers will be, I mean cars, light vehicles will be charged at 80% of what they charged at the beginning. So that point, that question you have to check once. And one more examination question is there, that is hotel question. One more examination question is there, hotel question. That is deluxe room, suites and executive room. If it's a deluxe room, no breakfast, complimentary breakfast, no swimming pool access. If it's a executive room, complimentary breakfast. If it's a suite, then swimming pool along with complimentary breakfast. That question is there. I don't know which attempt it is. Please go through these questions. Okay. In service costing, please go through these questions. These are the important one. And that lorry question, penalty one, their absolute 10 kilometer and commercial 10 kilometer question that you have to go through once. Guys, give your 100%. Give your 100%. Three more exams, guys. That's it. Then no need to worry for your till for next 2 years finals. You will be chilling. So now you decide whether to put 100% of your effort for the next 3 days and make sure you clear your exams, or you now only you give up and now only you overthink, now only you just think you don't know anything and all and give it up. It left to you guys. Try to understand. Give your 100% for the next 3-4 days. Trust me, it is going to give you a result. And in examination hall, even 1 mark is going to change the things. 1 mark will change the things. So till last minute, give your best. Never give up, because whatever the paper it is, 100% difficulty not possible at all. 60 to 70 marks you will be knowing. In one question full you don't know, great, no worries. At least 70% you know, do it. How much ever you know, that you do it, because it's a stepwise marking, guys. Try to understand. These are things which are going to play a important role. And thank you for watching. Yes, all the best for your examination. And I will be hearing, or I will be waiting to hear from you guys that this marathon was useful for your examination. So fine, we'll meet you guys on tomorrow evening, that is after your exam, that is 17th of January evening. So till then, bye bye, all the best guys. Thank you.